Very good morning. So today we are going to start with the revision sessions on financial management for the coming examination May 2025. With regard to this, first 5 minutes, I will tell you about how we are going to proceed with these revision lectures for the next coming 3 days. With regard to that, what are the chapters we are going to cover, what questions we will cover, how the paper pattern expected to be on the basis of the last paper, and what kind of questions we are going to do in the class, and very important thing, strategy for the coming May 25 exam. Okay, how if you prepare, you will get at least 40 plus in that 50 marks paper. Isn't minimum 40 will be assured if you listen to the revision lectures properly, because I am not going to just revise the concept and leave. If you have already completed FM, this revision session will definitely boost your preparation. Isn't it? Definitely we can take it to the next level, because there are totally, technically, 7 to 8 practical chapters are there in the syllabus. Strictly 7 chapters are there. Number 1, cost of capital, capital structure, leverages. Set 1, capital budgeting, sorry, capital budgeting, dividend decisions. Okay, capital budgeting, dividend decisions. Investment decisions is also called as what? Capital investing. Dividend decisions. One second. After that, ratios, working capital. Ratios, working capital. That is another set. Okay. First set, cost of capital, capital structure, leverages. Those 3 chapters will be coming for, just a minute. Yeah. Those 3 chapters, cost of capital, capital structure, and leverages. These 3 chapters will be accounting for 15 to 20 marks in exam. Okay. Cost of capital will come for 6 to 8 marks. Capital structure will come for 6 to 8 marks. Leverages you can expect a 3 marks to 5 marks question. Listening? But every attempt, minimum, there will be 3 questions, 100%. Cost of capital, capital structure, leverages. All 3 put together will be accounting for around 15 marks in exam. Minimum. Listening? Day number 1, target is to complete those 3. Once we complete those 3 without fail, then 15 marks out of the 50 will be completed. Listening? Next day session, another 15 marks will be there. In that 50, another 15 will be completed. By that, we will complete 30 marks paper. Listening? Finally, the last day, we will extend the session and everything we will do maximum possible, whatever we can do best. We will do that in closer sessions. Clear? I will not take bigger sessions or lengthy sessions for 5-6 days, 3 crisp days, but your confidence will boost to the next level. Okay? Let us see what we need to do in this regard. See, first one, write down there. Day 1. Cost of capital, capital structure, leverages. Okay? These are the 3 areas we are going to complete today. Next one. So, from what we are going to do? Institute study material, practical problems we are going to solve. Means what? Study material end means every chapter ending, book back, there will be practical questions given by the institute. Correct or not? Those and what is the next one? Selected illustrations plus the second activity DC RTP. Did you see? Last unit activity, did you see? Sorry, okay. I will not ask you to tell. We will do RTP. Latest RTP, whatever is released, we will do that. Listening? Such that you need not separately do the RTP. Clarity? We will also do that. So, ISM, practical problems, all we will do. Some selected illustrations in the study material we will do. Along with that, RTP also we will cover. Why you will not get 40 plus, I will see. So, why you will not get 40 plus after doing all this, we will see. So, I don't know what is your opinion on financial management before the class, but after the class, definitely it will change. Let us start with the concepts now. Okay. First, point number 1. This is a revision class. This is not a regular class. Therefore, concept, understanding, analysis, formula, derivation, all those things you should not expect. Listening, which I usually do. Because then it will be 170 hours of from class. We should cover everything in the limited time period available. Why am I telling all these in the beginning? You will first understand what we are going to do. Clear? Directly we will first understand the formula. Okay? I will show you all the formula applicable for the chapter. 2 to 3 minutes time I will give. Copy down all the formula. Then we will directly hit the problems, complete the chapter, next chapter we will start. Listening up. Let's not unnecessarily do any analysis here. Let's stick on examination orientation. In exam, if it comes, I should get marks. That's it. Listening. For that, see here. First, copy down the formula. 5 minutes time. When you are writing, first thing that you need to ensure is don't write these things. Okay? Write this, write the formula. That's it. Next one. Listening. Regular classes, I will ask them to write this, but you don't write. Don't waste time. First, write down all the formula. Debt concept completed. Make it fast. Redeemable, irredeemable completed. Okay, next. Copy down with flotation cost. With flotation cost examinations important. Okay. Can I go to the next one? Everyone in the class. Okay, next. Preference. Don't write all these. This is for regular class. Revision, only formula. Completed? Preference completed? Preference. Write down for the equity. All the five. Equity also completed. First one completed, constant dividend. Next one, constant earnings. Next one, constant growth. Next one, realized yield. Last one, CAPM. Give the heading, retained earnings. Retained earnings. Directly write down this. KR equal to KE into 1 minus rotation cost into 1 minus brokerage minus 1 minus tax. KR equal to have you written a formula? Completed? Next, WACC, KO, WACC calculation. Mark this very important for exam. Most important. That too, this is very important. Write down all this properly. Once you write, you'll start doing the problems. Time given for this chapter is 1.5 hours. Okay? We'll complete this max 2 hours. Completed? Market value. Book value is completed? Book value is up to here. Up to there completed? Okay, continue. Very, very important is the market value X. This attempt I am expecting this only to come. So careful. Be very, very careful with that concept. Okay. See here. So let us now begin with the chapter. As I already said, the time allocated for this chapter is 2 hours max will complete. Target number 1. Every student in the class must understand each and every formula. Okay? How to apply. This is not the time to learn derivations on the formula which I do in regular class. Here what you need to learn is, if this question comes, how I should answer. Clear? With confidence, with no doubt in application of that formula in the question. Okay? Listen carefully. Cost of capital chapter will totally, I'm talking about all put together, will be having 7 concepts totally. From these 7 concepts, only question will come. That's it. There is a boundary for the syllabus with regard to cost of capital. Beyond that, they can't ask questions. What are those 7 boundaries? KD, cost of debt. KE, cost of preference. KE, cost of equity. KR, cost of reserves. 4 things are completed. Listening. Next, after this, weighted average cost of capital. Weighted average cost of capital using book value rates. Weighted average cost of capital using market value rates. 6 completed. 7th one, marginal cost of capital. What is it? Marginal. Chapter. That's it. Question will come in any of these 7 aspects. Hopefully everyone understood what I said. What are the 7 areas? First to know the syllabus. Cost of debt, cost of preference, cost of equity, cost of reserves. Set number 1 completed. Next. Weighted average cost of capital using book value rates. Next one. Weighted average cost of capital using market value rates. Over. Last one. Marginal cost of capital. This is chapter. Once you do all these 7 things, chapter completed. That's it. Questions will get repeated only. No new questions will come. Listening. Study material questions are golden questions. What they are doing is, from the RTP, MTPs, the best questions they are picking and putting in the study material. If you do those questions in the study material, any kind of question that you see in RTP, MTP are based on the same models. 1 or 2 small adjustments will be there. If you do that, you are done. Listening. That's why always for FM, not for FM, entire inter syllabus, stick to the study material. If you do study material, you are 70% done. Do RTP, MTP, you are 100% done. And this formula for inter. Final, I will not tell this. But inter, I will tell this. Study material, RTP, NTP. Why you will not get 70 place in every subject we can see? When you start moving out from the study material, reading some private publications, you are buying the failure. Listening or not? You are buying, welcoming the failure. So do study material properly. Listening? So study material doing means what we need to do. Study material, 3 segments are there. Examples, illustrations, practical problems. Tell me, what are those? Examples, illustrations, practical problems. Okay? Normal regular classes, so we have to deal with all the 3 angles. But revision classes, examples, illustrations, and all the concepts put together, then we put in practical questions. If you do those, you need not do the remaining ones. Regular classes, when it is 150, 170 hours, we can't skip that. But in revision classes, what we will do is, unnecessarily we don't touch small examples and illustrations. If any illustration is really, I repeat, if any illustration is really worthy, then we will do those selected illustrations also. Okay? Big illustrations will be there. Those we will do. Small illustrations, let's not waste time. Clear? Such that 2 hours we have to complete this 8 marks area. I think you know cost of capital will come for 6 to 8 marks in exam. Last attempt also came for 8 marks. Last 4 attempts 80, 80, 80, 80. This is the weightage. 2 hours, 8 marks. Shall we start? Let's start with the wrong questions. Open the study material. Come to question number, illustration number 17. Very good question. Already came in exam for 8 months. Okay. We will do all practical questions and some good selected illustrations. Listening? Why we are doing this illustration? Reason I will tell you. See there. Here in this question, we are going to do book value. We are going to do market value also in the same question. Listening? And the good problem is, we will do KD, we will do KP, we will do KE. Means instead of doing independently KD, KE, KP, if you do one problem, you will cover everything. Na? This question contains flotation cost also. Super question. 100 questions, you need not do one question. Perfect. Over. You are done. Isn't it? So, instead of doing entire cost of capital, do illustration 17. That's what I will tell. Shall we start? Read the question first. Calculate the VAT using the following data by using book value rates, market value rates. Very good. Debentures, preference, equity. First tell me, what is this data? See the question. Don't waste time here. I will not repeat and repeat again and again. Please, fastly let us do. Tell me, what is this data? Very good. This is a book value character structure. What value? Book value character structure. Okay, next, continue. Market values are at same prices, changed prices, changed prices. See there. What is the market value of each debenture? 100 rupees traded at 105. 100 rupees traded at 110. 20 rupees 20, 10 rupees, 10 rupees traded at 24. These are all book values and market values. That means this character structure will be same or changing? Changing. Listening? Next. Data. Rupees 100 per debenture. Redeemable at par. 10% open, 4% rotation cost, 10 years maturity. When they given a life, it is a redeemable bond. When they don't give the life, it is a irredeemable bond. Here given a redeemable life, redeemable. Tax is given or not given? Tax is 30%. Given, not given? Given. Next. Rupees 100 of preference shares redeemable at par. 5% coupon, 2% rotation cost, 10 years maturity. Again, redeemable, irredeemable. Redeemable, irredeemable. Very good. Next, equity shares, market price, issue price, flotation cost, 4. Next year, expected dividend is how much? Rupees 1. With the growth of how much? 5%. The firm has a practice of paying all earnings in the form of dividend. Corporate tax rate is 30%. Use YPM method to calculate the cost of debentures and preference shares. This is the question. First rule in the class: don't see the answers. If you are seeing the answers, then why to come to the class? Correct? So therefore, read the question for 2 minutes. Understand what all you need to do. We'll start doing, we'll complete the question. Okay? Read the questions. Okay. Shall we begin? Point number 1. We need to do weighted average cost of capital using book value weights and market value weights. Both we need to do this question. Clear? Before we start, let us start doing here. I will tell you what we need to start with. First one, right now. Question illustration number 17. Make it faster. First, step 1. Calculation of KD. Calculation of KD. Okay, right. First write the formula. KD equal to I into 1 minus P plus RP minus, listen carefully. Whenever flotation cost is there, whenever what cost is there, flotation cost is there, you should always consider, whenever flotation cost is involved, you should always consider NP minus flotation cost. NP minus flotation. Did you write the formula or not? What is the price of the debenture today? 105. See the question. What is the issue price now? For example, what is the market price traded in the market for the debentures? 105. Means if company has to issue the debentures today, it will issue at 100 or 105. 105. But in that 105, it cannot use 105. In that 105, 4% will be gone in the form of flotation cost. Clear? You gave me how much? 105. I utilized how much? Less than 105. Because I took 105 from you, some expenses are incurred. In my hand, there is no 105. There is less than 105. Listening, now did you understand the logic? Calculator 105 minus 4%. Tell that number 100 point. 100 point. That's the NP we have to do. Shall we write in the formula? NP minus flotation cost. Whole divided by N. Whole divided by RV plus NP divided by 2. Whenever you take NP should be after flotation cost. Separately, I am not writing here. Okay, even here also, if you take NP minus flotation cost in numerator, denominator also you should consider the same. Inconsistency should not be there. Shall we start? Do it. Don't waste time. Start. You should tell them what is a par value. Debentures, what is the par value? Given 100. Okay. What is the interest rate? What is interest rate? Tell me. How much? 10 into 1 minus 0.3. Why 1 minus 0.3 came? Tax. Plus redemption part 100 minus, you said some value. 105 minus some number you said. 100.8. Okay. Whole divided by. How many years is the life of this debenture? 10 years. Whole divided by 200.8 divided by 2. So 100.4. Tell the answer, everyone. 7 plus, actually 7 minus 0.08 whole divided by 100.4 into 100. Tell the value. 6.89%. 6.89%. 6.89%. Okay. First, listen carefully. How much is the answer? How many of you have done this problem before in the class? How many of you have done this problem before? One. You have done. Next, anyone? No. Listen, because I have a very good question to this. You have done up to here. First of all, everyone repeatedly give a feedback and answer. Okay. Whenever you did not understand, let me know immediately in the class. Okay. Up to here, understood everyone? What to do? KD calculation using the formula. Okay. This is not a right answer. This is a approximate answer. Okay. That's why the question was clearly said, use YTM method. YTM gives you accurate answer. This is accurate or approximate? Approximate. Sir, why sir this is approximate? 1 minute will confirm and tell please. Number one, denominator what you take? FC you forget. Denominator what you take? RB plus NP divided by 2. Until you are taking redemption method, net purchase price average. When you take average, you will get accurate answer. Listening or not? Numerator what you are taking? Numerator. What you are taking numerator? RB minus NP divided by N. Hello, everyone. Tell me what you are taking? RB minus NP divided by N. You are taking that on numerator, denominator. Lovely. Now I ask a question. Tell me, what is RB? Redemption. When redemption will happen? Today or future? Very good. What is NP? Purchase price. Net profits. What is it? NP purchase price. When you will purchase? Today. When you will purchase? Today. When you will redeem? After 10 years. Correct or not? RB is happening after 10 years. NP is happening today. Time value of money is violated here. 10 years after cash flow, so today's cash flow, how can you reduce? Listening or not? This formula is not an accurate answer. This formula is a approximate answer only. Listening or not? Now tell me, what is this interest after tax? What is this? What is this? What is this? Forget about FC. What is this? That called as capital gain per annum. RV is the sale value. NP is the purchase price. Sale price minus purchase price is called as a capital gain. It's called as a. So everyone investing in a bond will get two cash flows. Number one, interest cash flow. Number two, capital gain cash flow. The capital gain or capital loss. Anything can happen. Here it's a capital loss. Understanding? So tell me, numerator there is a capital gain or capital loss? The capital loss is there, not capital gain. Clear? But tell me, capital gain or capital loss, when you will get today, every year, after 10 years. But you are dividing by n, showing it as if it is per annum. You are dividing it by means you are taking capital gain per annum. But actually capital gain will come today or after 10 years. Therefore, formula is approximate. That's why regular class I can explain for 35-40 minutes. Post-mortem of each and every element there. But time is not permitting me to do that. Overall, I said the logic to you. Did you understand? Why this formula is an approximate formula? Example, whenever KD question comes, first to do this. This is approximate. Next, we need to do YTM, also called as IRR model. Which model? IRR. Without any nonsense and formula, we can do IRR and get the accurate answer. Let's write down. Keep the heading KD using YTM. Below write down. KD using YTM. See, how to do this YTM calculation? Take year, cash flow, PV at the rate of. Take one rate below 6.89. I will take 6. Take one rate above 6.89. I will take 7. Listening, huh? You can take 8 also, nothing will happen. You will get the answer. Okay? So PVCF, PV at the rate of 7% PVCF. Tell me, how many rates I have taken? What are the two rates? 6%, 7%. Why 6? One rate below 6.89. Why 7? One rate above 6.89. Listening? Now tell me, what is the relationship between PV factor and the value of asset? PV factor and value of asset. What is the relationship? Inverse or direct? Inverse. Listen carefully. Basics, if we are not having a knowledge, FM is a villain. So please listen from basics. Common sense, let us use. Tell me. I am seller of a phone. You are the buyer of a phone. Phone cost 1 lakh. You came to me. You said, I wanted to buy this. I said, okay, buy. You said, please give me some discount. Now, 1 lakh is the example. I give 5% discount. Tell me, how much I will receive? Loudly, yeah. How much thousand, sir? 90,000. I give 10% discount. 20% discount. 30% discount. Common sense now. As the discounting value is increasing, cash flow coming out is reducing. That's how these also will work. As the PV factors are raising, cash flows will reduce. Listening or not, everyone? Do you know what is the value of any asset? Here, debenture is an asset. Value of any asset is present value of future cash flows. Repeat. Everyone repeat the statement. Value of an asset is present value of future cash flows discounted required rate of return. Debentures required rate is KD. Preference required rate is KP. Equity required rate is KE. Listening? Total required rate is called as a KO. Tell me, what is the value of any asset? Value of any asset is present value of future cash flows discounted required rate is called as the value of an asset. Okay, see here. Now, everyone, do you along with me? What is the life of this debenture? 1 to 10, 10. Why 10 here? Returns also will come after 10 years. Correct or not? Every year, how much interest I will get? Every year, how much interest I will get? 10 or 7? 7. Because 10 rupees I will receive, but there is a tax saving of 3 rupees. Correct or not? What is the net I will receive? 7. At the end, how much I receive? 100. Everyone else, you know how to calculate annuity factor? Equal to M plus, equal to M plus. Do 6% for 10 years. Yes. 1 to 10. Life is 1 to 10. Means 10 years you will receive interest every year. This is not 10th year. This is the first year, second year, third year, fourth year, fifth year, sixth, seventh, eighth, ninth, 10th. Like that for 10 years you will get 7, 7, 7, 7 like that. Instead of writing 7, 7, 7, 7 like this, you can write 7 directly and do the annuity. You know annuity factor? No. Really, you don't know how the annuity factors are calculated. Sorry, okay. I will tell. Everyone have written 6% annuity. How much is the answer? 7.3 digits you should tell. You should always use the 3 decimals. 360. How to calculate the 7.360? 1 divided by 1.06 on calculator. Okay, you have calculated with you? 1 divided by 1.06. Okay, equal to n plus for 10 times. 10 times. Okay, after that MRC. How much you got? 7? Can you show him once? Next. 7% also tell annuity factor. Huh? Okay. Multiply it. 7 into 7.360. 51.52. Next. 6% for 10th year. Alright, 1 to 10 first. How much? 40? 16? 17. Always remember PV factor with 3 decimals, answer 2 decimals. 60 year, 6% 10th year, not 10 years, 10th year. 1 divided by 1.06 equal to 10 times. I think you know this basics, right? 0 point. Next. 7%. Zero point 508. Okay. Total. 1032. Next. 90. Almost 100. Clear? Almost 100. Now you please tell me. Please tell the answer. We have calculated 6%, we got 107.32. We calculated 7%, we got 100. Isn't it? Yes, sir. We calculated it 6%. How much you got? 107.32. Okay. We calculated 7%. How much we got? 99.9. So almost how much? 100. I will approximate it to 100. But now listen carefully. What is our net purchase price? 107.32 or 100? 100.8. Everyone, first thing, everyone sitting here, I hope that you didn't have basic clarity on this chapter. So let me put certain important points. What is this? What is this called as? Basics, you are very weak. Please listen carefully. This is not present value cash flows or nothing like that. This is called as value of the bond. This is called as what? At 6% PV factor. This is the value of the bond at 7% PV factor. Why it is called as value of the bond? Let me explain. Tell me, what is the value of any asset? Just know you said 10 minutes back. Tell. Present value. See the markings there. present value of future cash flows discounted at required rate is called as value of asset. Here, what is asset? Therefore, this is the value of the bond. Selling or not? Then what is the value of a bond is present future cash flows discounted at required rate. But see the question and tell me, what is the value of debenture in the market? 105 is without rotation, but we have rotation also or not? We got 107.328, how much percent? 7%, how much we got? We don't want 100, we don't want 107.32, we want exactly how much? 100.8. Means 6 is right, 7 is right, both are wrong. Both are, but one thing I can tell, a rate is between both of them. Correct or not? That's what we are going to do. Shall we start? Right now, below. PV at rate. Write down the schedule properly. PV at rate. 6%, 7%. Value of bond. 107.32, 100. Desired value of bond. How much we want? 100.8, 100.8. Change is also called as a delta. You tell by calculating. 107.32 minus 100. 6 point plus. Okay. 100 minus 100.8 minus 0.8. Okay. Tell me now. For 1% change in the PV factor, price of the bond changed by 7.32 rupees. For, repeat, how to understand? This is not the time to copy the answers. Repeat. For 1% change in the PV factor, bond value changes by 7.32 rupees. Okay. To achieve our 100.8, we require 7.32 or only 6.5. 6.5. 7.32 or minus 0.8. Minus 0.8. Either from one side or this side, you have to do the answer. We will do both the sides in the class. Okay, right. 6% point of view, 7% point of view. 6% point of view, 7% point of view. 6% point of view. Tell me, for 1%, price changed by how much? 7.2. But from 6% point of view, how much change we want? 6.52. 6.52 divided by 7.32. 6.52 into 1 divided by 7.32. Fastly tell you, I don't wish your time. 0.89. 0.89. 6 plus 0.89. How much it is? 6.89%. Clear? No. Next. Sir, I will do from 7%. Let's do from 7. For 1%, 7.32. I want a change of how much? Minus 0.8. Tell me. Minus 0.8 into 1 divided by 7.32. Minus 0.1. 1. 7 minus 0.1 equal to how much? 6.89. Actually, it is also equal to the same. Listening. In this question, it is equal. All the questions. But if you understand how we do this, if you don't do this, marks are gone. That's it over. Your 8 marks are 4 marks are factor. Clear? First, did you understand this mechanism of doing the answer? Answer. Generally, for this, they will use one formula. NPV plus NPV minus R. Nonsense and factor, you can do like this. Easiest method to do this. Clear? Most meaningful method, by the way. You will understand and do. Clear? So tell me. Discounting factor increasing. PV factor. Value of the asset will reduce and increase. This is a classic illustration for that. 6% is not to answer is 107.32. But at 7% it became 100. Discounting increases, value reduces. Again and again, I won't ask you what is this. Very good. What is the value of any asset? Present value of future cash flows discounted by rate. As the discounting rate increases, value decreases. Clarity, everyone? Can you go to the next one? No doubt will come. Sir, approximate and accurate both are same, sir. Why? Question whether accept or not. I will tell you the reason also of that. If gap between these two is very big, approximate accurate is also very big. Difference will be there. Here 0.08 difference here, negligible difference. That's right, answer, sir. Same. But when in the question, for example, this is not 100.8, this is 110, then answer will also approximate accurate, there will be difference in percentages. Understood? Next one. Step 1 we completed. Please start step 2. KP. First read the question and do. Hurry, don't do the wrong answers. Tell me. Preference. How much is the market price? Flotation cost is how much? First in calculator. 110 we will receive, or we will receive only 110 minus 2%. 110 minus 2%. Tell us again. 107.8. Now you observe. 107.8 is the net purchase price. Net. Par value is how much? 100. Difference is big. Now approximate accurate also slightly changes. Isn't it? The gap between two numbers is going enlarged. Gap between approximate accurate also will enlarge. Difference should be very less than formula में accurate answer. Clear? Okay, done. Okay, now shall we do this together? Start. Don't waste time. Start. 2 minutes we should complete. PD plus RV minus NP by M whole divided by RV plus NP by 2. NP means NP minus flotation cost. So 110 minus flotation cost 2%. How much? No. Flotation cost value. 2.2. Totally how much we got? 107.8. Starting. What is the preference dividend rate? How much? 5%. So 5. Preference dividend don't have taxation. Why? After taxation that will come. So again taxation impact will not be there, affect them. Plus redemption value 100 minus 107.8 whole divided by what is the n? 10. 207.8 divided by 2. That will tell the value? No, total value is 4. I want one answer. 0.6. Approximate accurate. Approximate. Anything you do beyond 1 minute, you are killing your time. Okay? Be strict on that. Example, this calculation you should take only 1 minute. You are crossing 1 minute means you are wasting time. Next problem you will need the time. Like that only you will lose 4-5 marks in exam. Be strict on timelines. This is a revision class. Clear? Slowly if you go on writing, it will not work. Shall I continue to the next one? Tell me. How much is the answer you got? 4.06 is accurate or approximate? Now you tell what to do. I want accurate. What to do? How to do YTN? Year. Do it. Start. YTN. Year. Cash flow. PV at the rate of 4%. Or take 3%. You will also get clarity. PVCF. PV at the rate of 5%. PVCF. You will also get clarity. How many years? 1 to 10 and 10. Tell me. 1 to 10, how much I will say? 5. 10th year, how much you will receive? 100. 20 seconds time. Do 3% and you have printed. That's for 10 years. Tell me, 10%, 3% for 10 years, annuity. 8.530. Next, 5% for 10 years. 7 to 1. Okay. Multiply and tell. 8.53 into 5. 6. 5. 5 into 7.721. 38.60. 60 means you should tell 61. 38.61. Everyone got the answer? Okay. Next. 10th year to 3%. 0.744. 0.744 for the 5% for 10th year. 0.614. So multiply that. 74.4, 61.4. Please tell the values. Tell the values. 117 point. Next. 100 point. 100 almost. Tell me. We want 170, we want 100, we want 107.8. 107.8 we want. Means 3 rate, 5 both are. But something is guaranteed. What is it? Rate is between 3 and 5. Rate is between. Do the same thing. Start. PV at the rate of 3%, at the rate of 5%. Value of the bond 117.05, 100. Desired value of the bond 107.8, 107.8. Change. So 117.05 minus 107.8. Yes. How much? 9.25. 7.80 minus. Don't copy answers. Do it. For how much change in the PV factor? 2% change in the PV factor. Value of the bond changed by 17.05 rupees. So now 2 point of view from 3%, 5%. Are you doing with me? Start. For 2%, if it changed with 17.05 for 99.25 rupees, how much it has to change? 2 into 9.25 divided by 9.25 into 2 divided by 17.05. Plus or minus R? Plus 1.085. Therefore, that will be 4.085. Also written as 4.09%. Come on. Do it from 5% also. For 2% change, if it changes by 17.05, 5% minus 7.08, how much change? Minus 0.91. 5 minus 0.91 equal to how much? Both sides same answer. Everybody understood or not? This is how we need to do. Instead of doing KD separately, if you do this problem, you are done. All elements of this chapter will be covered in this question. If you are confident with this, we will go on to the next one. Shall we? Okay. What we done now? What we have done now, we calculated KD, we calculated KP. In this question only KD, KD, KE is also there. KE also there. Keep the heading KE. KE equal to D1 by P0 minus rotation cost plus T. Whenever rotation cost will come from P0 into the D's. Don't ask how logics now. This is not the time. Next, I will ask you one question, answer. Next year expected dividend. Next year means D0, D1. D0 means already declared dividend. D1 means next year dividend. D2 means 2 years after dividend. Here they have given which dividend? Next year. Means they have given D0 and D1. D1. So don't apply growth again. Dividend you should not apply growth again. Understood? Starting. D1. How much rupees? Rupees 1. Divided by what is the P0? 24 minus here 4% they didn't give. 4 rupees they have given. No, are you listening? Plus now what is the overall growth? 0.05. 1 by 20 plus 0.05. 1 by 20 means 0.05. 0.05. So how much percent? 10x over. What we calculated? K. So now tell me how many things we calculated? KD, KP, KE. Using all these in weights, can you calculate the overall cost of capital or not? Now, done. Keep the heading. Calculation of WACC using book value weights. Calculation of WACC using book value weights. Calculation of WACC using book value weights. Start. Sources, amount, proportion, cost, weighted cost. This is the standard schedule you need to follow. Sources, amount, proportion, cost, weighted cost. Standard schedule. Okay, tell me. Now you should tell, I should write. Do it along with me. Tell me. Sources. How many sources are there? Debt, preference, equity. We are taking book value or market value? Book value. See the question paper. See the question. 5 lakh, 5 lakh, 10 lakh. Right. 5 lakh, 5 lakh, 10 lakh. Total 20 lakhs. 0.25, 0.25, 0.5. Cost we calculated. What is the KD? 6.89. KP 4.09. KE 10%. Multiply 6.89 into 0.25. Huh? 7 double 2. 7 double 2 5 is 723. Next 4.09 into 0.25. 0.23. This is a 5. Total 5 plus 1.023 plus 1.723. Total KO 7.746%, or we can write also 7.75%. 7.75%. Are you all comfortable up to here? Shall we do the last step? What is the last step? Market value weights. Market value weights. Okay, right up. Sources, amount, proportion, cost, weighted cost. Sources. Debt, preference, equity. Be very, very careful. 100 rupee per debenture is 5 lakh. But the debentures are now trading at 100 or not 5? 105. So, Here, see here once, later you can do, see here, 5,000 debentures are there, 5,000 preference shares are there, 1 lakh equity shares are there. Correct? Now we have to multiply with what? 5,000 into 105, 5,000 into 110, 1 lakh into 24. Tell these values. 1 second. Tell me 5 lakh, 25,000. Next one. Next one. 5 lakh 50,000, 24 lakh. 34 lakh. 75,000. 5 lakh 25,000, 34 lakh 75,000. 0.15. Next. 1. 5. Next. 6, 9. 1. That will not change. 6.89, 4.09, 10. 1.0, 3, 4. 0.64, 6, 6.91. Total KO 8.59. Have you ever done one problem if you do? Let's say 10 cost of capital is covered in this question. Correct or not? KD covered, KB covered, KD covered, flotation cost covered, calculations covered, IRR covered, book value covered, market value covered. Listening. What is the final answers? Two answers you should tell. 7.75, 8.5. See that? All other things are not concerned. 7.75, 8.5. Perfect. That's it. 8 marks. Therefore, if you do perfectly, you will get the answer. If you don't do perfectly, everybody answer. Every adjustment inside the question understood clearly. Just to do this, 1 or 2 new adjustments you will see in every question. Do it, go into the next question. Shall we start? Okay. Now, this question also we will do at last. Which one? Illustration 18. I am expecting this question for the May 23 exam. Okay? Separate question, good question. That I will put it at the last. Let us start with the practical questions now. Open the practical questions. Now, for the practical questions, you will do. I will help you in doing everything. Clear? Read the question first. Gamma Limited has 5 lakh. If there is any new point inside the question, I will let you do. Everything is old, we can directly do means you will only do in the class. Practice and complete. Shall we? Yes, sir. Read the question first. Gamma Limited has 5 lakh, 1 lakh, 1 rupee ordinary shares. Current ex-dividend market price is 1.5 per share. Company has just paid a dividend. When I say just paid, next dividend already paid. D0 or D1? D0 they have given. 0.27. 0.27. 27 rupees or 27 paisa na? Per share. Dividends are expected to continue at the same level for some time. If company has no debt capital, compute weighted average cost of capital. First listen. How many kinds of capitals are there in this question? Only equity, equity and debt. See there and tell. Only equity, equity and debt. Equity plus debt plus preference, equity plus preference or only equity. That's why when only equity is there, KE, KO. Whatever you get for KE will become the KO. Why? 100% only KE is there. Correct or not? Tell me. With this data, how to calculate KE? Tell the formula for KE. Tell the formula for KE. I will ask you two questions. Answer. Growth is there or not there? Loudly. Growth is there, not there? This is a constant dividend model, a constant dividend with growth. Dividend. You have written the formulas at the beginning, right? Open the formula once. Open the formula, whatever you have written. There you can see one point. Cost of equity like A point. K equal to D1 by P naught plus G, D by P. That's it. Start. Shall we do it together? Start. Here itself I am doing KE equal to D by P. What is the D? What is the P? Tell the answer. How much? 18 is KE or K1? Both. Why? 100% when KE is only there, 100% is its KO. So therefore, what is the answer? See here. See here. Question number 1. Answer is how much? 18. Completed. Practical problem number 2. Like this, we are going to do all the practical questions now. Take it. Now, this you will do. Following details are given by GPS. Equity 12% preference, 15% payable, 10% convertible. Cost of equity, how much? And it has to be calculated already given. How much? 16.3. Remind me, given we have to calculate. Already given here. Nothing to calculate. What data is available to calculate? That's why they have clearly given here. Nothing you need to calculate in this question. Directly we have to do the weighted average cost of capital. What capital? I will ask you one question, tell me. Debentures, how much it is? Rate of dividend, how much? Rate of interest, how much it is? Tax is given. We need to reduce the tax and right there. Separately, no calculation required. Because this is redeemable or irredeemable. Irredeemable because life is not given. They apply brain fastly. Question like you see. Life given or not given? And if it is not given, what to do? As a redeemable, as a irredeemable. As a irredeemable only we have to do. Correct? Tell me, what is the rate of interest here? 15 into 0.7. Why 0.7? 1 minus 0.3. Tell the answer here itself. 10.5. Next. Now this we can write directly. How much? 7. So KD we know. KD, redeemable we know. Next one. Convertible also we know. Correct or not? Everything they have given. We need to just put that amounts and calculate the weighted average cost of capital. Tell me the columns. Sources. Tell the sources. Hey, sources in the same sequence you should tell. Equity share capital, preference share capital, debentures, convertible debentures. Debentures and convertible debentures. Okay. Since no data is given regarding the life, for redeemable also we are taking directly. Okay. Tell me. First sources completed. Amounts. 65, 12, 28. Okay. Second column over. Third column. Total different proportions. Fourth column. 16.3, 12, 10.5, 7. I think you understood now. Multiply, calculate, weighted average cost. Will you do it? This question came in examination. This question came for 2 marks. This question came for 5 marks. Time given for you is 2 minutes. Start. Have done with the calculations? Completed? Completed? Tell all the columns once. Sources, amount, proportion, cost, weighted cost. What is the total? What is the total weighted cost of capital? You said you have done. What is the problem in telling answer? How much percent? Everyone want the same answer. Everyone. See here. 13.99. So how much was that? 14. That's it. Clear? Question they have given redeemable, irredeemable amount. Redeemable. Which one? Redeemable. But life is given or not given? Not given. Therefore, we have taken directly. That's what they have also given the note. In the above solution, cost of debentures has been computed without considering the impact of redeemability in the absence of information. Information about the life given or not given or not given. When not given, we will, though you say redeemable, I will do it as if it is a irredeemable bond. Understood the point or not? Next. How many questions we have completed practical? 2. Take them 2 questions over. Come to the third one. Come to the third one. See. ABC company's equity share is quoted in the market at how much price? 25 per each share. 25 per share. What is this 25? Book value, market price. Market price. Company pays a dividend of rupees 2 per share, and investors market expect a growth rate of how much percent? Compute the company's cost of equity capital. If company issues 10% debentures of face value of rupees 100 each and realizes 96 per rupees per debenture, while debentures are redeemable after 12 years at a premium of 12%, calculate the cost of debenture using YTM. Means what we need to do? First to put the formula, calculate approximate, next to use the IRR table, calculate the accurate. Listening, this question is tested on what? KO na, KE, KD. This is KE, KD. KE and KD. First tell me one answer. Company pays a dividend of rupees 2. Pays a dividend. And already paid a dividend of 2. D0 na D1? D0. Loudly. D0. Tell the formula. K equal to D1 by P0 plus G. D1 can be written as D0 into 1 plus G. Yeah. Okay. Now tell me, what is the D0? 2. What is the growth? 6. Divided by P0, 25 plus 0.06. Tell the value. 2.2 into 1.06 divided by 25 plus 0.06. Everyone. 4? 4 into 14.48. What we calculated now? KE we calculated. Clear? Like that we should also calculate KD. But you will tell, I will listen now. Flotation cost is given or not given? So NP is NP. Tell me. Formula. Redeemable is redeemable. How do you know it is redeemable? Life. Life how many years? 12 years. Tell the formula first. I into 1 minus T plus RV minus NP by N whole divided by RV plus NP by 2. I will ask question, fatafat give the answer. What is I? 5. Because tax is 50%. Tax is how much? 50%. 100 rupees is the par. 10% 10 rupee, 50% tax, net you will get is only how much? 5 rupees. Listening? So I is 10. I into 1 minus t will be 5. Clear? Plus RV, 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 112. Redeemable at a premium, not redeemable at par. RV is not at par. RV will be at a premium. And at 100 we don't redeem. We will redeem at what price? 112 we will redeem. Listening. Today what is the price? 96. Today what is the price here? 96. Face value 100. But it realizes only 96. So tell me. That field I. I is a 10. I into 1 minus t will be 5. 1 theta over. RV. Why 112? Redemption is not at par or discount. Redemption is at a premium. 100 rupee debenture will redeem at 112. Listening? Okay. NP 96. Gap C 112 96 means there is 16 rupees gap. Definitely accurate approximate. Huge difference will come in the answers. Shall we do it together? First to do the KE. Do the KE calculation first. We got 14.48. KE, as you said, 14.48. Next, do this second one. This is number 1. Number 2, KD. Tell, what is the procedure to do KD? Formula. I into 1 minus t plus RV minus NP by N whole divided by RV plus NP by 2. I n into 1 minus 0.5. 112 minus 96 divided by 12 whole divided by 112 plus 96 divided by 2. 5 plus 112 minus 96. 112 minus 96. 17. 16. 16 divided by 12. 1.33 divided by 112 plus 96 divided by 2. Divided by 2. 1 or 4? Okay, tell me. 6.33 divided by 104 into 100. Tell the value. 6. Perfectly answer loudly. 6.09. Right? Approximate. Accurate or approximate? What we need to do now? Calculate accurate. Take 1% lower. Take 1% higher. 5, 7 we will take and do. Listening? Do it fast. Year, cash flow, PV at the rate of 5%, PVCF. PV at the rate of 7%, PVCF. Year 1 to 12. How much rupees after tax? 5. 112. Redemption careful, not 100. It is at 112. 5% 12 years, not 10 years, 12 years. Annuity. 1 divided by 1.05, 12 times, equal to M plus 8.863. Okay. 7%. 7%. 943. Next, 5% 12th year. 1 divided by 1.05, 0.557. Here, Others also please try. If there is any mistake with the other student, you can rectify. 5 into 8.863. Three one 32. Next, 112 into 0.557. 3 9. Next, 5 into 7.943. 39.772. 112 into 0.444. 49.73. Okay, total value of the bond, 106.69. How will you get 69? 44.32 plus 39 plus 32 is 71. Next, 89.445. Tell me, what is the market price of this share? Share or bond. What is the market price of this bond? Hey, how many times here? What is the market price of this bond? 96. 5% is 106. More than 96. At 7% is 89. Less than 96. 5% factor, 7% factor, both are wrong. But what is right? Between 5 and 7, one rate is correct. Shall we do it? Do it. PV at the rate of 5%, at the rate of 7%. Value of the bond 106.71, 89.45. Decide the value of the bond 96, 96. Change. Tell me. 106.71 minus 96. 10.71. 89.45 minus 96. 6.5. So, for 2% change, value changed by how much rupees? 17.26. So, from both the point of views, let us do from 5%, from 7% fast. For 2% change, price changed by 17.26. For 10.71, how much? 10.71 into 2 divided by 17.26. How much? 1.224. Next, for 2% if the price changed by 17.26, for 6.55 how much it should change? 6.55 into 2 divided by 17.26. 0. Minus. Tell me, 5 plus 1.24 means 6.24. This can I write as minus 0.76 or not? So 7 minus 0.76 also will give you 6.24. That's it. Answer is completed. Did you all understand how to do? Everyone in the class, tell me how many questions he asked me? 2. First one is what? KE. Next one is what? KD. KD we have to calculate using approximate of ITM. This is what is the ITM model using IR. Everyone understood?
Yes, sir.
Really, did you understand?
Yes, sir.
We have done 3 problems in the same way. This is another question we have done. Confident everyone how to do this? Okay. Next, let's check the answer. Question number 3. See here. 6.45. How much answer we got? 6 point. See, no, not like that. I will tell you why they will do. First one 14.48 everyone. Everyone. Next, how much you got here? See, why? First of all, how much is the interest? 5. Here, 1. Sir, we got 6.24. Instead got a slight change 6.45. Sir, why sir? Answer is changing. Question will arise or not? It depends on the rates you take. They have taken 5 and 10. Huge gap is there between the rates they have taken. Answer also will not be near to approximate for them. You have taken what two rates? 5 10, 5 7. I asked a common sense question you tell. In exam, how do you know what rates key will contain? Answer, what institute has taken, how do you know? No, don't know. Therefore, this is only assumption answer. If 5 and 10 is taken, this is the answer. If 5 and 7 is taken, that is the answer. Slight changes will come. 6 will not become 8, but 6.24 will become 6.4, 6.5 like that. But I always recommend take as near as possible. Accuracy will increase. What will increase? Sir, common sense shall I tell you one point. I will take 1% and 100%. Definitely everything will be in between them. I will take 1%. I will take 100%. Anything should be between them. But you should not do like that. Accuracy will not be there. Clear everyone? So in order to maintain a level of accuracy, take as nearer numbers as possible. Understood why the answer small change has come? Don't think the answer is wrong. Answer is absolutely right. And if that be the case, I will tell our answer is much more right than this. Because how many rates have taken? 5% gap we have taken. We have taken only 2% gap and answer came in between them. Clear everyone? Okay. How much is the answer you should have got? And it is between what and what? 5 and 7. That's why we have taken 5 and 7. Ours is much more accurate answer. Understood? Yeah. Clarity everyone? Full clarity on the chapter up to here. We are done with problem number 1, 2 and 3. Next. Very, very good question. Question number 6. Very good question. Question number 6. 4 times already asked in exam. Shall we do it? Read the question. Kalyanam Limited has an operating profit of 34,50,000. Employed debt, which gives a total interest charge of 7,50,000. Firm has existing cost of equity and cost of debt as 16 and 8%. KE how much? KD how much? Already given or to be calculated? Already given. Firm has a new proposal before it, which requires a fund of 75 lakh and is expected to bring an additional profit of 14,25,000. To finance the proposal, firm is expecting to issue additional debt at what rate? 8% and will not be issuing any equity shares in the market. Assume no tax culture. You are required to calculate weighted average cost of capital before new proposal, after new proposal. Very good question. Read it first. 2 minutes time for you to read. After that, we'll start doing the question. Everyone first give a try to do this question number 6. 2 minutes time you take. Roughly you do. If you are able, okay. Or else I will tell you how to do the answer. Okay. Did you try? Everyone who tried the answer? Okay. So see here. I don't know what you did, but I have to let you know how to do this answer. Time given. If you have done this right, very good. Or else at least see here. Okay. See there. First question for all of you. What is the new thing you found in this question? What is the new thing you found in this question? Shall I tell you what is the new one? Per share values, per share dividends they didn't give. Overall values they have given. What they have given? Overall values they have given. See, here per share values they didn't give. Clear or not? Okay. So therefore, tell me, life given or not given? Redeemable, irredeemable. Everyone? Tell the formula for redeemable. KD equal to I into 1 minus T by NP. Correct? For that purpose, tax also not there in this question. Clearly they have given here. You no tax structure. Means tax is not there. So tell me what will be the formula? I by NP over 1 point completed. Now I will ask you one question. Fatapat give the answer. Point number 1. What is the KD? What is the KD? 8%. What is the KD? First question I will ask you. Before new proposal, they are asking weighted average cost of capital. Correct? Tell what are the 5 columns? Sources. So first one, sources. Next one, tell the amount. That we have to calculate first. Okay. So see here, KD 8% we know. Interest 7,50,000 also we know. Correct or not? We don't know the NP here represents one bond, total debentures. Total debentures. Okay, tell me. What is the value of the bonds total? What is the value of the debentures? 7,50,000 divided by 8%. Tell the answer. 93 lakh. What is this? What is this? Value of debentures. What is this? Value of debentures. How much it is? 93 lakhs 75,000 is the value of debentures. So sources amount we obtained. Obtained for what? Before the new proposal is taken, this is the answer. Clear? Next. After that. Listen once. Cost of equity given or not given? Given or not given? Growth given or not given? Growth given or not given? Can you calculate the answer or not? See here, I have one point. See here. In this question, how much is the operating profit? What do you mean by operating profit? EBIT. Tell me. EBIT minus interest, EBT minus tax, EAT. This belongs to the equity shareholders. Correct or not? Tell me, what is the EBIT? 34 lakh 50,000. How much is the interest cost? 7 lakh 50,000. Tell. 27? Okay. Tax is there or not there? Not there. So how much is the EAT? 27. Tell. What is the formula for P naught? P naught formula without growth. How many? 4, 5 formulas you have written at the beginning of the class. Have you done or not? See there, not yes. Open that. Open the 5 formula. KE. 5 formula you have written. What is the first one? What is the first one? Heading. Constant what? Dividend. Next one. That's what you have to use here. When a formula was given, apply that properly. These are constant earnings. Because dividends are not given separately. Listening or not? Tell the formula. E by P. E by P. Okay. Now, we want this P naught value as technically to understand KE equal to E by P. Correct? Okay. We know KE. How much percent is the KE given in the question? 60. Earnings. How much? 27 lakhs. We wanted to know the value of equity now. Correct or not? Equity value we need to know. So tell me, what is the value of these shares? 27 lakh divided by 16%. Okay. So tell me, first column. What? First column. So second column. We know amounts or not? How much is the debt amount? Something you said, I didn't remember. How much? 93 lakh 75,000. Equity amount? 1 crore 68 lakh. We can total and write that. Take the proportion column. Next cost they have only given 8 and 16. We can calculate KO or not. So this is over. Then why you are breaking your head here? That's why I said read the formula properly. Shall we do it together? Let's do. Give the heading. Illustration number 1 or 2 or 3 or 4 or 5 or 6 are 6. Illustration number 6. Okay. First do this way. Step 1. Calculation of earnings after tax before and after proposal. Before and after the proposal. Write down. Particulars fast. Before, after. Tell me. You tell and write. What is the EBIT? What is EBIT? 34 lakh 50,000. After it will increase by 14 lakh 15,000. So tell me, 34 lakh 50,000 plus 14 lakh 25,000. 75,000 minus interest. Minus interest. Tell me how much? 7 lakh. Okay. Now I will ask one question that new proposal they are doing. How much funds they are required? 75. To finance the proposal, firm is expected to issue an additional debt. Means equity they are raising like 75 lakhs through debt they are raising. Huh? Through debt. Listening, already debt is how much? 93 lakhs 75,000 something is there. Correct or not? On that, what is the interest? 7 lakh 50. That 7 lakh 50 anyway will be there. Along with that, on the 75 lakhs again, how much will you to pay? 8%. Calculate 75 lakhs to be 8%. 6 lakhs. Huh? Plus already 7.5 lakhs is there. Total. They will reduce. EBT. Tell the value. 27 lakhs. 35 lakh. 25,000 minus tax, nothing. So tell me what is the EAT? 27 lakhs, 35 lakh, 25,000. Up to here, everyone understood the calculations clearly or not? Okay. Up to here, have you completed? Step 2. Step 2. Calculation of KD. Calculation of KD. Sorry, not KD. Value of debentures. Very sorry. Calculation of value of debentures. Very sorry. Calculation of value of debentures. Tell the formula. KD equal to I divided by NP. Tell me. What is the KD already given in the question? 8%. Equal to. Tell me. I is how much? We are doing partial total basis. Total basis. Next. NP we don't know. NPA value of debentures. Value of debentures equal to something you said. 93 lakh 75,000. Okay, 93 lakh 75,000. Next, write down below. Total debt after proposal equal to 93 lakh 75,000 plus how much? 75 lakh. Tell the total. Tell the total. 1 crore 68 lakh 75,000. Huh? Hey, then equity and debt both are same. 50-50 ratio. Clear? This is before or after? This is before. Clear? Okay. This is before. This is after. Can we do the calculation of equity? Step 3. Value of equity. Value of equity. Tell the answer to value of equity. 2 branches. Before, after. Tell me. First you tell about the before value. What is the formula? P equal to E by P. Tell me. What is the K given in the question? 16%. What is the earnings? 27 lakhs. divided by P. That we need to know. Value of equity equal to do it up to here. I will do 1 minute time. Calculate for after tell. Don't sit idle. Try doing the second one. Did you understand what I asked you? One question. Just to tell me the answer. Tell me. 1 crore 68 lakh 75,000 is the amount of what is debt equity capital. 1 crore 68 lakh 75,000 is the equity capital debt capital. Everyone? Very good. Equity capital. New project is taken. What project? New project is taken. We are raising the new project using debt or equity. Answer. The equity book value will change or will not change? Will not change. Will change or will not change? But I ask you one question. Tell me. How much is the earning? How much is the earning? How much is the KE? Because of the price became how much? 1 to 68 lakhs 75,000. Correct or not? We are doing book value. It's not market value. Because market value is not given in the question. Book value of equity will change or will not change? Will not change. So 168 75,000 will be same. Because 75 lakhs we are not raising by equity. We are raising by what? Debt only we are raising it. Correct or not? Now tell me. 1 crore 68 lakhs 75,000 is there. KE will change now. What will change? KE will change. KE equal to E. What is the earnings available to them? 35 lakh 25,000 divided by 1 crore 68 lakhs 75,000. Tell the value. 20.89. 89 means I can take 9. 20.8 means you can take 20.9 or not. How much is the percentage? 20.9. What is 20.9? What is 20.9? AE. After the new proposal or before the proposal? After the proposal. Now you answer me. We are doing in this question market value or book value. Book value we are doing. That's why equity share price is same. Clear everyone? Now you tell me the answer clearly. Did you understand the entire calculations? What he asked in the question? What he asked in the question? He is asking you to calculate the weighted average cost of capital. Can you do it together? Keep the heading. Step 4. Weighted average cost of capital. First one. Before source, amount, proportion, cost, weighted cost. Debt, equity. Tell. First case, what is the debt? Equity. Okay. Total. 2 crore. Proportion. 36. 6. 4. Cost. 8%. 16%. Tell the values. 88. 2. 4. Total. 13.1. What did everyone understand? Sir, if you have the doubts, you can ask. Did you understand up to here? Here my question is only one thing. Did you understand how 93 lakhs 168 100,000 came? Which formula we used? Earnings are dividends are. Earnings the model. With growth or without growth? Without growth. Here missing figure is KER, missing figure is value of equity. Value of equity. Book value sir, market value sir. Book value. Listening. So 168,75,000 is the book value of equity raised. But next project, we are not raising the equity, we are raising only by what? Debt. So 168,75,000 will be changing as same or same. But the earnings are changing. Because of that, they will increase. Listening or not? Okay. Now, number 2. After source, amount, proportion, cost, weighted cost, debt, equity. Debt will be 93,75 increase. Increase. How much? 168,75,000. 168,75,000 total. 3 crore. 0.5. 0.5. Cost 8. But here it will become how much? Okay. Do it. 4. Total 14.45%. Sir, everyone understood both the answers? See here. What is the question number we have done? Question number 6. What are the two answers? 13.12. They got conflict because of the approximation. Next one 14.45. But you got the same answer. Perfect. That's it. Answer is over. Hopefully everyone understood how to do the answer. Sir, if I spend any extra 2-3 minutes, other chapters ki time will be less. Did you understand? Everyone, speed, whatever we are maintaining, are you all comfortable with the doing the answers? I'm not just showing the answers, I'm doing along with you, each and every question. Okay, next. How many questions we completed? Practical questions. 1, 2, 3. 1, 2, 3, 6 we completed. Huh? Next. 1, 2, 3, 6 we completed. Next. Take question number 4. Take question number 4. Let's see. Moscow Limited wishes to raise additional finance of rupees 10 lakhs for meeting its investment plans. It has 2,10,000 in the form of retained earnings available for investment purposes. Further details are following. Debt to equity mix 3:7. Until 10 rupees if the total capital is there. Through debt we are raising how much? 3. Through equity we are raising 7. So we should not write as 3/7. We should write as 3/10, 7/10. Understood? Next. Cost of debt. Up to 1 lakh 80, 10%. Beyond 1 lakh 80, 16%. Both they are given before tax. We need to do it after tax. EPS given, dividend payout given, expected growth given, current price given, tax rate given. Determine the pattern of raising additional finance. Determine the post-tax average cost of additional debt. Compute the cost of retained earnings and cost of equity. Compute overall weighted average cost of capital. 8 marks. Read the question first. Try it first. First, we need to make a small try at least. Do it. I will give you 2-3 minutes time. Read the question first. Try it on your own. Are you at least trying for the answer? Do it. To do at least. Shall I do? Shall I do it at least? See here. See here once. So this question is very simple, easy, provided you understand the idea behind it. Nothing great. Let's see this way. In the company, how much is the additional finance they require? 10 lakhs is raised by equity or a debt or a combination. Everyone? How do you know that it is a combination? Debt equity mix was given clearly. By common sense, anyone can understand that. 30% will be raised by debt, 70% will be raised by equity. Understandable up to here? Use common sense. How much is the total capital required? Observe everyone. 10 lakh. In the 10 lakh, how much will be raised by debt? 30% means how much? Equity how much? Obviously, equity 7 lakh will be raised. Correct or not? Debt how much will be raised? 3 lakh. Debt 3 lakh will be raised not at the same rate. Two rates are given. Up to 1 lakh 80,000, 10%. Beyond 1 lakh 80,000, 16%. Let's use some common sense again. 3 lakh we need. How much? Up to 1 lakh 80, how much? 3 lakh minus 1 lakh 80 means a balance how much? For that 1 lakh 20, we should raise not at 10, but raise at how much? 16. Clear? So tell me, how much debt I wanted to raise? In that 3 lakh, again, two parts are there. Up to 1 lakh 80, balance 1 lakh 20. Balance 1 lakh 20. Up to 1 lakh 80, balance 1 lakh 20. 1 lakh 80 will be raised at 1 lakh 20 raised at. So first thing we need to calculate the weighted average KD. What we need to do? Tell me, how much is the total amount of debt? Answer, sir. First part is how much? 1 lakh 80 divided by 3 lakh. Doing the calculator. 1 lakh 80 divided by 3 lakh. 60, yeah? Answer. 60% you are going to raise at 10% rate. After tax, 5%. Clear? Balance 40% will be raised at 16. After tax, it will be 8. We can calculate the weighted average KD or not. That's the second bit they asked. Why you will get doubts here? Simple questions also. Listening, simple, normal LKG, UKG question. Total debt required is, so total amount required is 10 lakh. How will you raise? We will raise in 3:7. 3 lakh rupee debt, 7 lakh rupee equity. Listening? But common sense again. In that 7 lakh, 2 lakh 10,000 we will use the retained earnings. Balance of 4 lakh 90,000 only we will raise at the new rate. Listening or not, everyone? New equity, how much we will raise? Total 7, 4.9. 4.9 means 4 lakh 90,000. Yeah. How much is the required amount? Now tell me now. I will write here. You can copy later. Which question? Question number? 4. Tell me. How much is the total finance required? You tell now. How much is required by debt? How much is required by equity? 30%. Tell the 30% value. Okay. Next. Next. 3 lakh I am rising in 2 parts again. Tell me. 1 lakh 80. 1 lakh 20. 1 lakh 80 will be raised at what rate? After tax. Next 1 lakh 20. After tax. Sorry. Before tax is? After tax. Up to here, understood or not? Very good. Next issue. Equity also. I am not going to raise everything in the equity through new issue. Because in the question they clearly said it has 2 lakh 10,000 in retained earnings available for investment. In the 10 lakh, I need not raise all 7 lakh using equity. Listening? Tell me, how much using the retained earnings, how much using the new issue? 2 lakh 10,000, 4 lakh 90,000. Everyone understood clearly? I will ask you one question. Tell me, in this question, did they give any issue price, etc.? Flotation cost, issue price? Answer. Now tell me, brokerage, any tax, anything is given? Therefore, KE will be equal to KR. KE will be equal to, how to calculate KE? With the information given, how to calculate KE? What is the formula for KE? Growth or no growth? Growth or no growth? Dividend model or earnings model? 5 formula are there. Only dividend, only earning with growth, dividend with growth, CAPM model. Correct or not? Which one they are asking here? Earning or dividend? See the question again. See the question again. Consistently you are giving wrong answer. See the question again. What is given here? What is given here? EPS. Correct or not? Payout ratio given or not? In that EPS, how much will be paid as dividend? 50%. Therefore, DPS you can calculate 2 rupees. Listening or not? So this question was asked on dividend growth, earnings growth. Dividend growth. When earnings growth model should be used, as a dividend information or data should not be there in the question. Like in the previous question. Listening or not? Here we can calculate dividend or not. Use only dividend growth model. So first tell me, everyone understood how to do up to here? Tell me how to do KE. Formula you tell. D1 by P naught, not P. Dividend D1 by P naught plus what? G. Now answer next. D1 by P naught plus G you will do. Correct or not? What is the D1? Not amount. What do you mean by D1? Already declared dividend and next expected dividend. Answer. Already declared dividend, expected dividend. Expected dividend. What is the EPS now? What is the EPS here? Next, what is the payout ratio? And what is the D? This is the D0, already paid dividend. Already? How to calculate D1? D1 equal to 2 into, what is the growth? That will be 2.2. Understood a D1? What is the current price given already P naught? How much? Can we calculate the KE calculation or not? Answer. That will be used for KE or KR or both. Answer. Both. Why both? Because no data is given. For example, in the same question, if they give like this, listening, huh? New equity is raised at 44 rupees with 4 rupee flotation cost they have given. Means you should not take 44, denominator you should take only how much? 40, then KR KE will not be same. Clear or not, everyone? Here how much is a KE? We will calculate and we can do that or not. That KE and KR both will be treated as same in this question. But in the question, if they change the question in exam, they said new equity you are raising now 4,90,000. That raise will be made at a flotation cost of 4 rupee. They said now you are issuing at 44, issuing at 40 rupees. 40, then KE will be same or changing? Changing. KR ki normal KE you should take, KE new issue ki you should take only 40 in the denominator. Listening everyone? Answer will be same or different then? What answer will be different? KE answer will be different. Clear everyone? Shall we do this question now? Do one by one. Write down up to here. Up to here completed? Up to here completed? Okay. Next. This is the step 1. Step 2. Pattern we completed. Average cost of total capital, debt capital. Debt capital, because we are not raising 100% using same rate of debt. Khatta. Write down. Situation, amount, proportion, KD, weighted KD. Situation 1, situation 2. Amount 1,80,000, 1,20,000. Totally how much we are raising? Proportion how much? 1,80,000 on 3 lakh, 0.6. 0.6. And here it will be 0.4. KD up to there 5%, beyond that 8%. 6.2 up. You can calculate directly na. 60% of 5, 3. 40% of 8 will be 3.2. 6.2. Up to here clarity everyone? What is 6.2? WACC calculation, weighted average KD. Weighted average KD calculation. Understood? Clear? Next. Step 3. Determine the cost of retained earnings and cost of equity. Now you answer me one question. KR, KE will be same or changing? Why it will be same? Flotation cost is there or not there? If flotation cost is there, what will change? KR will change, KE will change. KE will change. Clear? But in this question given or not given? Therefore both will be same.
Write down. KR equal to KE. KE equal to D1 by P naught plus G. D1. D1, D0 how much? 2 into growth 1.1 divided by P naught. How much is the P naught? 44 plus G 0.1. 2.2 divided by 44 plus 0.1. Value please. 1.5 15%. What is 15? KE, KR, both KE and KR. Both KE and KR same. Clear? Next. So this over, this also over. Lastly, what we need to calculate? Overall weighted average after tax cost of additional finance. This is called as, sir, we are doing for existing capital, additional capital. See there, we are doing all these calculations for the additional financing. That 10 lakhs additional financing, we are doing all this calculation. This is called as a marginal cost of capital question. Previous questions are done for already existing capital. This is only for the additional capital we are raising. That additional capital raising, we call it as marginal capital. These calculations are marginal cost of capital. Listening everyone? Step 4. Marginal cost of capital. Source, amount, proportion, cost, weighted cost. Tell. Debt, equity. You will tell, I will write. How much is the debt total? How much is the debt total? How much is the equity total? Okay. You can or you need not, no problem. Anyway, both will be same. Na? If both are different, na, you should write it separately. But when both are same, you can write directly. Up to here, copy down. Proportion how much? 0.3, 0.7. Cost 6.2. 6.2 and how much is this? 15. Tell 6.2 into 0.3. 1.86. Next. 10.5. 12.36. Which question we completed? Question number 4. Let me check the answer. Question number 4. Exact 12.36. That's it. Answer over. Understood how to do the question or not, everyone? In this question, KD, KE, resource and equity I did not separate. Why? Like that we have to mug up. Why we have done like that? KE and KR both are same. If KE, KR are changing, what we need to do? 4,90,000 ki 1 KE will apply. Balance of 2,10,000 ki another KE will apply. Clear or not? Everyone? So we completed question number 4. Next. Come to illustration number 18. Ten marks question given in exam already. Shall we do it? Read the question first. ABC Limited has following capital structure, which is considered to be optimum as on 31st March 2023. 14% debentures, 11% preference equity. Company share price has a market price of 23.6. Next year dividend per share is 50% of 2022 EPS. Following uniform trend of EPS in 10 years. There is a EPS given. The company issued new debentures carrying 16% rate of interest and current market price is 96. Preference shares are 9.2 with annual dividend of 1.1. Company is in 50% tax bracket. Calculate the after tax KD, KP, KE. Assuming new equity from retained earnings. Means new raising is not done using the new issue, it is only using the retained earnings. So we need to calculate KR. We need to calculate what? KR. Next. Calculate the marginal cost of capital when no new shares are issued. Determine the amount that can be spent for capital investment before new ordinary shares must be sold, assuming that retained earnings for the next year's investment is 50% of 2022. Compute the marginal cost of capital when the fund exceeds the amount calculated in C, assuming new equity is issued at 20 per share. Forget about C and D. First, I want you to do A and B properly. Read the question first. Read the question properly. Have you read the question? Tried at least. What are you able to do? At least everyone calculate KD, KP. I think those you can do directly. First, I answer me one question and tell tax is there or not there? There. Life is given, not given. Redeemable, irredeemable. Tell the formula for redeemable KD. I into 1 minus T by NP. Can you do it? Next, KP formula. PD by NP. I think you might have done up to here properly. Correct? Next, what is the third one? What is the third one? Cost of new equity. Listen carefully. I will ask a question answer. I'll ask a question answer first. Tell me. In the question, EPS is given as a schedule. See here. Tell me. Company share has a current market price. How much is the current market price given here? Current market price means P not a P1 na. P0 na P1 na. P0. That was given. How much it is? Next year dividend is how much? 50% of 2022's EPS. Okay. 2022, what is the EPS? 50% will be how much? So D1 already came. How much is the D1? Again, don't apply growth. D1 ne 1.18. Listening. D1 divided by P0. What is the P0? 23.6 plus what is the growth? Growth ke we need to see this. See here. 1 became 1.1 means 10% growth. 1.1 became 1.21, 10% growth. 2.15 became 2.36. 10% growth. How to do? Take calculator. Small questions you should not get doubt at this stage. 2.36 minus 2.15 divided by 2.15 into 100. How much? 9.9 something, small difference will come. Overall, approximately how much is there? 10% is the growth that we are witnessing. Correct or not? That's it. That's the answer here. So the point you have to understand is growth is 10%. Can you all calculate KE now? First, tell me what is the answer for the KD. Let's do it together. Illustration number 17, 18? 18. Write down. Step 1. Calculation of KD. KD equal to I into 1 minus T by NP. I. What is the interest rate given in the question? 16. Into 1 minus tax rate? 0.5 divided by NP. Current market price is how much? 96. Tell the answer. 8 divided by 96 into 100. 8 point? What is this 8.33? KD. Okay, KD. New KD. Next, step 2. KP. PD by NP. What is the preference dividend? 1.1. 1.1 divided by 9.2 into 100. Tell the value. 11.96. Step 3. KE. D1 by P0 plus G. 1.18 divided by 23.6 plus 0.1. Okay. Whatever he asked in the question, first bit is over. KE, KD, KP. All the three are completed. Correct up to here, everyone? Next. Calculate the marginal cost of capital. At a new capital only we need to calculate if new shares are issued. Can we do it together? Start. Step 4. Marginal cost of capital. Sources, amount, proportion, cost, weighted cost. Debt, preference, retained earnings. That itself is a equity here. Okay, everyone? Yeah. Okay. Now, a beautiful question will arise. Sir, marginal capital we are raising, sir, understandable. How much we are raising? They did not give in the question, sir. They may not give amounts in the question. But one thing you need to understand. Whenever in this chapter, capital structure ratios are given and nothing is said about the new raising finance, assume that the same capital structure proportions they will use also later. Listen carefully. This is new capital, existing capital structure. This is new capital structure, existing. Existing, which is optimum. Means even after that, if they wanted to raise 100 rupee, they will raise in the same ratio. Listening or not? Therefore, amounts are irrelevant. Proportions we can directly write down. Clear or not? Tell me. 30,000 divided by 2 lakhs. 10,000 divided by 2 lakh. 1 lakh 60 divided by 2 lakh. 0.8. Now I will ask one question. With that, I will know whether you understood or not. Tell me, how much amount we raised? How much amount we raised? Wrong answer. It's not relevant at all. We don't know how much amount is there. 2 lakhs is a wrong answer. If you tell 2 lakh. 2 lakh is what? What is 2 lakh? Existing capital. How much a new one we are raising? We don't know. But we know one thing. What is it? Proportion will be same. What will be same? Proportion will be same. Even for the new capital that we raise. So therefore, this is the capital raised. Tell me, independently, what are the costs? 8.33, 11.96. Value, please. Tell the total. Tell the answer. KO equal to 13 point. Others also please do and confirm. %13.85%. Everyone got the same answer? So we completed bit number A and bit number B now. Everyone got the clarity up to here? Next. Listen, next to two bits are crucial. If you see the screen, I will explain. Determine the amount that can be spent for investment before new ordinary shares must be sold, assuming that retained earnings for the next year's investment is how much? Now listen carefully to my point. What is the EPS of this year? Answer. How much will be available as a retained earning? Totally how much? 1.18. Correct? Now listen carefully. Not yet completed. How many shares are there? How much? Very good. So 10,000 into 1.18. Don't nod head, do. Tell the answer. 11,000. This is the retained earnings available for investment. This is the retained earnings available for. Start again. What is the question he asked? Read the question. Determine the amount that can be spent for investment. And simply, do you know what he is asking? How much investment you can make? How much investment you can make? I repeat, how much investment you can make before new shares are issued? Before? And I wanted to raise the amount by retained earnings or only by new issue? Only by retained earnings. Not listening, listen again. You are raising the new capital through the new issue of shares or from the retained earnings? Retained earnings only you are raising. Correct or not? What he said, how much retained earnings are available? Take the EPS of last year. Take the EPS of how much? In that 50% will be this year retained earning. Into how much? 50. Means how much? 1.18. How many shares are there? How many shares are there? Totally how much it will be? So tell me, how much is a capital investment we can make? Wrong answer. Any investment you should make in the same ratio. Just now I said you forgot. 11,800 is what? 11,800 is equity part. Debt and preference to whom you will give? 11,800 is 80% of the value. 11,800 is from where 80% came? Here exams are there near. Please show some importance. See here. How much is the total? 100%. Equity part is how much? We are raising new equity here. We are raising money through retained earnings. Answer. Retained earnings. Okay. Now tell me. Marginal cost of capital if I do for the new issue, for the new project, sources, amount, proportion, cost, weighted cost. Correct? Debt, preference, equity. One thing I have a clarity. Equity is how much? How you got this 11,800? Did you understand or not? Tell me. Proportion is how much? 0.8. And these two put together should be how much? 0.2. That amount you tell me. That also you got doubt how to do this. 11,800 into 0.2 divided by 0.8. How much? 29 total. 14,000. That's it. This is what he is asking. He is not asking remaining part. Remaining part, if you do, you will get the same answer. Yeah. He is not asking remaining, but he is asking how much capital we can raise through the reserves and surplus, not by new issue. Understood the point clearly or not? If retained earnings are used at 11,800 being 80%, preference and debt I will use at 2,950. Total capital that I can raise will be how much? 14,750. Everyone understood the point clearly? Everyone? This is the question he asked. Shall we do it together? Right now. Step number 5. Step 5. $2.36 into how many shares totally? 10,000. So how much? 11,800. How much? 2,000. Total is how much? 14,750. Complete up to here, everyone. Can you go to the last step? Last one. Compute the marginal cost of capital when the fund exceeds the amount calculated in C, assuming the new equity is issued at how much? 20 rupees per share. 20 rupees per share. Now answer my question. What is the present market price of a share? That also you forgot. Eh? What is the current market price of a share? Are you now? By the time I go for new issue, price came to 20. Listening? And then normally, if you raise through resource, it is 23.6 at that time. But the moment you go for new issue after 2-3 months, share price came to how much? Now KE will be same answer as 15%. KE will change. Answer? Change. How much is it? He is asking. Shall we do it? Write down. Step 6. Before the class, what problems you have done in this chapter then? Bacha problems you are doing. KE calculation, normal D1 by P naught plus G. If you don't do practical illustrations in the book bag, you can't survive in exam. That's why we are concentrating on that directly. Listening? So, first tell me, calculation of marginal cost of capital with the new equity issue. Logic understood everyone what I said now? Tell me, you are raising by new issue means you will issue at 23.6 or at 20? Remaining data is same. 1.18 is same. Okay, growth of 10% is same. What is the only thing that will change? Denominator instead of 23.6, we have to take how much? 20 and do the answer. Shall we do it? D1. $1.18 divided by 20. 15.95 or 9. 15.9. And I am not using retained earnings. Completely I am going by new issue. Okay, na? In that case, what is the marginal cost of capital? He is asking that. Shall we do it together? Write down marginal cost of capital, sources, proportion, amounts we don't need, proportion, cost, weighted cost, source, debt, preference, equity. One thing is clear. What is the equity proportion? 80. Preference proportion 0.05. Correct? Next, 1.5. Debt cost already given 8.33. Preference 9.6. Equity. Tell the final answer to me. Tell me the answer. 14.5. Okay, na? How much is the answer? 14.57. See here, which problem we have done now? Illustration 18. See, 13.85. Have we got the first answer? Next we got 14,750. Right? Last one answer is 14.57. Correct? That's it. 100%. All the answers are right. Now you please tell me, understood how to do these questions? Now we have completed all the models. Just remaining 2 questions will be there. Practice at home. We will go to the next chapter now. Illustrations we have done. Practical questions also we have done. All core important areas we have done. Listening. Practice practical question number 7 and come tomorrow. Tomorrow's class we will do it together. Which one? Every day one question I will give you as a homework test. Chapter is completed or not? At least try one question at home. Practical question number 7 in the book. Okay? 5 also not needed. 7 you do properly. 5 has some mistakes, that's why. Question 5 has some errors inside. That's why I will tell you the errors at the last. So 7th question is very important. Try now. Try at home. Come tomorrow. I will tell again. Clear everyone? With this we completed our chapter called as a cost of capital is completed. The most important 8 marks area is completed. With this we are done with the cost of capital. So we first completed the chapter cost of capital. That's a 8 marks chapter. We are now going to start with another 5 marks to 6 marks chapter called as leverages. This is a 5 marks to 6 marks area. The benefit of leverages chapter is nowhere in the leverages chapter you will see PV factor. You will see? Nowhere you will see. Okay. So technically what you have to understand, there are 2 chapters in your syllabus where PV factor will not be there anywhere. Number 1, leverages. Number 2, ratios. In these 2 chapters, PV factor doesn't come. Therefore, these are uninfluenced by time value of money chapter. Listening? Yes, sir. Let us begin with the chapter leverages. Please keep the heading leverages. Like the previous chapter, let me first to show you what are all the concepts covered. First one, 90% of all the questions in leverages chapter given in exam are dependent on income statement. Means sales, variable cost, contribution, fixed cost, profit, EBIT we call. What do we call? EBIT. Minus interest, EBT. Minus tax, EAT. Divided by number of shares, EPS. This is called as what statement? 10 questions you take, 9 questions the income statement will be there. Listening? Next. What is the next one? Risk. There are two types of risk. Business risk, finance risk. Total is called as a total risk. So, next. Concept of leverages. This is not a regular session. Fast track, not even fast track, it's a crash session means we have to complete entire leverages again in 1.5 hours or 2 hours max we should complete. For that to happen, let's not put our efforts on understanding the concepts. Understanding the problems is our idea now. Cost of capital regular, if you see 19 classes are there. 19 into 2.5 if you take, around 43-44 hours I will teach. But the same cost of capital chapter, in a sum up of all the concepts, we have completed just in 2.5 hours or not? Same thing we are going to do also here. Clear everyone? Leverages also same way. Around 8-9 lectures are there. 8 into 2.5 almost around, that is also 17-18. We will put that in 1.5 hour and complete all the questions and answers from the exam point of view. Okay. There are 3 types of leverages. Tell me the names. Okay. First of all, I want every one of you to write these 6 formulae. Keep the heading leverages. Write down these 6 formulae. Okay. Written? Yes, sir. Okay. See here. What is the name of the chapter in study material? I told now we are starting with financing decision. Financing decision, 3 segments are there. What are the 3 segments in financing decisions? Cost of capital, capital structure, leverages. We completed cost of capital. Next one we are taking leverages. Next one we will take a capital structure. That's it. That segment of financing decisions will be over. Listening? Yes, let's begin. Have you written all the 6 formulae? Yes, first everyone tell me. How many formulae we have seen now? 6. Tell me. What are all the 6? First one. What is the first leverage? Tell me. How to calculate operating leverage? Formula? Contribution by EBIT. Next one. Change in EBIT for the change in sales. Change in EBIT for the change in? Next one. Financial leverage. EBIT by EBT. EBIT by? Instead of writing EBT, how can I write? EBIT minus interest. That is next formula. Type 2. Percentage change in EPS to the percentage change in EBIT. Clear? This is one thing. Next, combined leverage means this into this. Listening? This into this. What is this? This into this. Contribution by EBIT into EBIT by EBT means both will cancel or not? Contribution by EBIT will be left out. Listening? Tell me, what is the 4 formulas? Contribution by EBIT. Next, percentage change in EBIT by percentage change in sales. Next, EBIT by EBT. Next one, percentage change in EPS to the percentage change in EBIT. Understood the point clearly? These are the formula that we need to remember. Combined leverage, nothing is there, just a multiplication of both of these will give combined leverage. 6 formula, everyone understood? Tell the income statement format. Sales minus variable cost, contribution, minus fixed cost, EBIT, minus interest, EBT, minus tax, EAT, minus preference dividend, earnings available to equity shareholders, divided by number of shares, EPS, into payout ratio, DPS. Understood? Huh? This is a format of what statement? Understood? Next. Sir, when to use the first formula, when to use the type 2 formula? Anyone? Tell. When to use the type 1 formula, when to use type 2 formula? Huh? Yes. If 2 years data is given, then you have to use the second formula. Then you can understand the change. Last year 10 rupee, this year 12 rupee, change 20%. Like that you can tell. Correct or not? When 2 years data is given, then what to do? Type 2. There is only 1 year data given. Type 1 we have to use. I think everyone understood the logic clearly. When only 1 year data is given, type 1. When there is a 2 years information given, that's why first I have written 1 to 2. 1 year information ke type 1. 2 years information ke type 2. Easy to remember. Understood? 1 year information, type 1. 2 years information, type 2. Understood everyone? This is the point. After this, okay, write down. Operating leverage equal to 1 by margin of safety. Don't ask the logic, sir. See, regular classes la used to give derivation also. How the formula came, logic, understanding, background, everything. But this is not a time to learn those. Now the problem is, we have to take the question, we need to do the solution, that's it. So take alternative formula. Degree of operating leverage equal to 1 by margin of safety. Don't ask extra questions on this. Okay. So degree of operating leverage equal to 1 by margin of safety. If you are clear up to here, we will start doing the problem. Shall we? Okay. Practical problem number 1. Write down in the notes. Practical problem number 1. 11 questions are there in the book. Good amount. 11 questions means more than enough. In 11 questions, we will do 8 questions here in the class. Good questions. Selected 8 good questions I will do. Remaining 3 will you do at home? all questions like previous chapter, all important core areas of this particular chapter will be fit in 8 questions. We will do those 8 and complete first. If time permits, I will do remaining also. If time do not permit, if we are running out of time, I will go to the next chapter. But guarantee we will do how many illustrations out of 11? 8. Clear? 75% we will do. 20% I will ask you to do later. Take question number 1. From the following information extracted from the books of accounts of IMAX Limited, calculate the percentage change in EPS if the sales increase by 10%. Fixed operating cost how much? 157,500. EBIT 31 lakh 50. EBT 14 lakh. This is the data given. Okay. First I will ask you one question. Tell me. Percentage change in EPS for the percentage change in sales means which leverage they have given? Huh? Percentage change in EPS for the percentage change in sales means which leverage they have given? Combined leverage. Financial leverage means what? Percentage change in, for the percentage change in EBIT. Here they have given sales and EPS. Means which leverage? That's why I asked you write the formulas first. Have you written? Then why wrong answer? Shall we start? Okay, first tell me, what is the EBIT? What is the EBIT? What is the EBT? What is the fixed operating cost? Answer. First he is asking percentage change in EPS. If the sales increase by how much percent here? 10%. Fixed operating cost is how much? 1,57,500. First of all, every one of you, you will answer, I will listen. Tell me what we have to do. What leverage he is asking? Answer, what leverage he is asking? Hey, why you will get this small doubts, yeah? What he is asking, I am asking you. If you don't even understand question, what answer we will do in exam? See here, I am copying the question here. See, number 1, this is the data given. He is asking us to calculate. Calculate the percentage change in EPS if the sales increases by how much? 10%. Fixed operating cost is how much? Okay, first tell me sales minus variable cost, contribution. Fixed cost, EBIT, minus interest, EBT, minus tax, EAT. Correct? Okay. Divided by some number of shares will be what? EPS. But listen carefully. How much is the fixed operating cost given? EBIT? 31 lakh. If I add these, I will get the contribution value or not? Tell me. $37,000. Correct? Next, what is the interest cost? Did they give anything? No. But they gave EBT value. How much? Did they give anything about the tax? Answer, sir. Did they give anything about the tax? No. Okay? But listen carefully. Is this really useful in the question? Is a question from my side. You have calculated income statement. Does this have any utility to do with this question is a point now. Listen carefully. He is asking percentage change in what? If sales increase by how much? Now you tell me. Sales increases by 10%. Sales increases by percentage change in EPS divided by percentage change in sales. I will ask you one question. Tell me. What is the another formula for calculating the operating leverage? Not percentage change. Normal formula. Contribution divided by I am asking about operating leverage. Contribution divided by EB. Very good. What leverage it is? What leverage it is? Next, what is the financial leverage formula? Divided by EBT. When you get both of these, can we calculate the combined leverage answer? Tell me, how much is the contribution? Divided by what is the EBIT? Tell the answer. $33 lakh 7,500 divided by 31 lakh 50,000. 1.0. What is this? Financial leverage. EBIT given, EBT given. Can we calculate? 31 lakh 50,000 divided by 14 lakh. 2 point? Very good. 2.25. This is financial leverage. Combined leverage can be written as what? Operating leverage into financial leverage. 1.05 into 2.25. Value. 2.3625. Yeah? Okay. Now you tell me. Had we got the answer of combined leverage or not? How much? 2 point? Meaning is what? What do you mean by 2.3625? For, listen, I will tell. For every 1 rupee change in, listening? For every 1 rupee change in sales, for every EPS changes by 2.3625 times. 2. And if the sales increases by 1 rupee, EPS will increase by 2.3625 rupee. Clear everyone in the class? Yes, so now tell me, point number 1. How much is the percentage change in the sale? 1%. Then how much EPS will change? 2.3625. In the given question, sales is changing by 1% or 10%. Then how much EPS will change? 20.3625% it will change. Listening everyone? Tell me. In the given question, how much is the sales increase? EPS will increase by 10 into, tell the value, 23.625%. Correct? Now see here what he is asking. Calculate the percentage change in EPS for the sales increase by 10%. Amount he is asking, percentage he is asking. How much is the percent? See here. Perfect. Answer is over. That's it. Clear? In this question they are asking amounts of percentage. That's it. Restrict your answer to percentage and do. Okay. Copy down the answer first. Completed? First practical question everyone understood and did? Okay. Amounts are percentage, they asked in that question. Percentage, not the amounts. Next. Let us take question number 2. Consider the following information for the Mega Limited. Production level 2500 units, contribution per unit 150, operating leverage 6, combined leverage 24, tax rate is 30. Compute the earnings after tax he is asking. And the income statement he is asking us to prepare. First I want one question. What is the contribution? Per unit, correct? Operating leverage is how much? Can we know the total contribution? Per unit 150, total units 2500. Can we get the total contribution? How much? Can we first fill the income statement with the available data? Start. Keep the heading. Practical question number 2. Income statement. I am doing very much in a rough way. Start doing. Tell me, how much is the sales? Had they given anything in the question? No. Sales minus variable cost, contribution, fixed cost, EBIT, interest, EBT, tax, EAT. That's it. First tell me one by one. Contribution we know. Tell me. 150 into how many units? Tell the value. 3 lakh? They have given operating leverage in the question or not? Tell me, how much is operating leverage? Tell the formula for operating leverage. First formula. Contribution by EBIT equal to 6. Correct? Already what number we know? Okay, ma? Contribution we know, EBIT we don't know. Tell me what is the EBIT? Fill that number. Now can I know the fixed cost or not? Yes. How much? 3 lakh? Next. Combined leverage we have or not? Tell me. What is the formula for combined leverage? Operating leverage into financial leverage. Means financial leverage can be written as combined leverage by operating leverage. Correct or not? Tell me. Financial leverage equal to what is the combined leverage? 6. Financial leverage equal to 6. Oh, sorry, 4. Financial leverage equal to 4. Tell the formula for financial leverage. EBIT divided by EBT equal to 4. Already EBIT we know how much? 62,500. EBT, sorry. EBT equal to 4. EBT equal to, tell me the value. 15,625. Tell the value of interest cost. 875. Okay. In the question, did they give tax rate? Yes. 30%. Apply. 4,088. Reduce and tell EAT. 10,937. That's it. Understood? Tell me. What are the 2 leverages they have given? Operating leverage, combined leverage. Using that what we calculated? Financial leverage. Through that we calculated EBT. Listening everyone? Okay. See here. Question number. Which question we completed? 15,625. 10,930. We got how much? 1 rupee. Okay. We got the same answer. That's it. Now we have completed question number 1 and question number 2. First one everyone should tell. Are you all comfortable up to here? Yes, sir. Can we do the next question? Yes, sir. Take practical question number 3. Start. From the following data, Prepare income statement of the company A and B. Margin of safety given, interest given, PV ratio given, financial leverage given, tax rate is given. You will tell me, I will ask. Margin of safety is given. Can we calculate operating leverage? What is the formula? 1 by margin of safety. That's why they given both the answers. Clear everyone? Next answer. Interest is given. PV ratio, you know what is the PV ratio? Contribution by sales. Contribution by sales. Now you will answer. Do we know operating leverage? Yes. 1 minute time it will take. MOS 1 divided by MOS will give you operating leverage. If operating leverage is known, we can calculate contribution by EBIT and we can calculate the remaining figures and we can fill the entire income statement data. Shall we do it together? Right. Keep the heading. Practical problem number 3. You do with the same pace what I am doing, you will complete all the chapters. Clear? And you need not again do this. Directly you can do 1 or 2 RTPs and you can go to exam. Practical problem number 3. Income statement. First write down the format. Sales minus variable cost contribution. Fixed cost EBIT. Interest EBT. Tax EAT. First, available data you fill. What is the interest cost? Company A and B. 3,000 and okay. Now you please tell me one by one, write like a working note. A. Operating leverage. Company A, company B. What is the margin of safety given in the company A? 0.2. Next. Operating leverage formula 1 by, tell me, 1 by 0.2, 1 by 0.25. Tell the values. 5, 4. Write down. Okay. Now you tell me, what is the formula for the operating leverage? Operating leverage formula, contribution by EBIT. Contribution by is equal to, for first company how much it is? 5. But in this data given, do we know what is the contribution? We don't know. Do we know what is the other EBIT or EBT etc.? Yes, we can calculate. That's why you have to apply your mind. Financial leverage is 4 and 3 given or not? Yes, tell the formula for financial leverage. EBIT by EBT. EBT can be written as what? EBIT minus interest rate. Missing figure we can calculate EBIT or not? Let's do that. Keep the heading. B point. Calculation of EBIT using financial leverage. Company A, company B. Financial leverage. EBIT by EBIT minus interest. Tell me. EBIT divided by EBIT minus I equal to how much? 4. EBIT divided by EBIT minus I equal to 3. EBIT divided by EBIT minus interest how much? Equal to 4. EBIT equal to 4 EBIT minus 12,000. 3 EBIT equal to 12,000. EBIT equal to 4,000. First company EBIT write down 4,000. Next one. EBIT divided by EBIT minus what is the interest cost? Equal to 3. EBIT equal to 3 EBIT minus 6000. 2 EBIT equal to 6000. EBIT equal to 3000. Sir, EBIT we know, interest cost we know. Can we calculate EBT? Yes. How much? 1000. 1000. Tax how much? 450. 450. 650. Sorry, 550. 550. Clear? Huh? Now you please tell me. Listen. We calculated all the things in the income statement below EBIT we calculated. Correct? Now you tell me, what is the formula for operating leverage? Contribution by EBIT. We know EBIT. Missing figure, can we calculate the contribution or not? Start. See. Calculation of contribution using operating leverage. Company A, company B. Tell the formula for operating leverage. Contribution by EBIT. What is the operating leverage already? We calculated 5. Contribution by 3 or 4? 4,000. Okay. Contribution by 4,000 equal to 5. So contribution equal to 20,000. Here also. Contribution by 3,000 equal to? How much is the answer? Contribution by EBIT. Just you seeing the answers, what you will get here. Do it. Tell me what is the operating leverage answer for the company B? Contribution equal to? So 20,000 and 12,000. Tell me, what is the fixed cost? 16,000, 9,000. Clear? 16,000 and 9,000. PV ratio given in the question or not? When you given PV ratio, formula for PV ratio, contribution by sales. Contribution how much? Write down there. D. Calculation of sales using PV ratio. A, B. First write down. Contribution 20,000 and 12,000. PV ratio. See the percentage and tell. 25%, 35.33. 33.33. Okay. Sales. First tell me, PV ratio means contribution by sales. Already PV ratio we know how much? 0.25 is equal to what is the contribution? 20,000 divided by what? Sales. So tell me. 18,000? 80,000. Okay. 80,000. Next. 30? That's it. 80,000 and 36,000. 60,000. Everyone understood the question clearly? Tell me, this entire question is based on income. That's what I told you. So leverages chapter, nothing will be there in exam also, except quite a 2-3 questions which are tricky in nature. All the questions one common element. Missing information will be there. We need to understand the missing information and do. Tell me, just in a span of 35 minutes, we have completed around 3 practical questions in leverages chapter. Are you all comfortable with these calculations? Understood? How many formulas are there totally? Costing, some formulas are there that you have to remember from costing directly. Then I C by S, PV ratio, all these. Technically here there are 6. How many? 6. In the technically 4 only will be there. Anyway, last one is only just a multiplication of 2 things. Clear? Contribution by EBIT, EBIT by EBT. Over. percentage change in EBIT for the percentage change in sales, percentage change in EPS to the percentage change in EBIT. That's it. These are the four formulas you have to remember. Clear? Which problem we have done now? Question number 3. Sorry, question number 3. Okay. Take a break and come. We will do question number 4, 5, 6, 7, 8 after the break. Okay. Once we are done, remaining just give a try at home enough. Okay, 8 problems we will do in the class. So let us continue. Take question number 11. Practical question number 11. Shall we? Okay. See the question first. You are given the following information of 5 firms of the same industry. 5 firms of the same industry. There are 5 different companies. Different companies, different types of impact will be there. Every company will not have the same EBIT, same earnings, same contribution will not be there obviously. Company to company, sales will change, contribution will change, EBIT will change, so leverages also will change. Correct or not? So what he is asking, see there, name of the firm, MNPQR. What he is asking, they gave the change in revenue. Change in revenue represents what? Sales. Operating income means what? EBIT. Earnings per share, we know already, EPS. He is asking 2 questions. Degree of operating leverage, degree of combined leverage. Can we do it or not? Tell me how to do. How to do? A simple question, na? How to do? First tell me what is operating leverage percentage formula? Percentage change in EBIT by percentage change in sales. Here percentage change in EBIT sales is given or not? So we will calculate. Tell me about financial leverage. 1 second. Here in the question did he ask about financial leverage? Yes. Combined leverage can't be calculated unless and until you have financial leverage on hand. Clear everyone? So we will calculate operating leverage, we will calculate financial leverage, multiplication of both of them will give you operating leverage. I'm very sorry, combined leverage. Can we do it together? Start. Take question number 11. First let us write the data. Practical problem number 11. Write down company MNPQR. MNPQR. Next. Operating leverage, finance leverage, combined leverage. Don't write entire question and waste time. Directly take question on hand. Tell me, what is the formula for operating leverage? Percentage change in EBIT by percentage change in sales. 26 by 28. Point? Next. 1 point? Next. Fast. 1.52. Next. 1.86. 87. Next. 1.6. Okay. Next. Financial leverage. What is the formula? Percentage change in EBIT by, EPS by percentage change in EBIT. This and this. 32 by 26. Like that you tell. 1.23. Next. 0. Next. 0.60. Next. 62. Next. 7. Now combined leverage means what we need to do? Multiplication of both. Do it. 1.1313 2 digits lo you round off. Next, fast sir, this much time you should not spend. Next, 91. Next, 6. Next, that's it.
Sir, EPS divided by sales. EPS divided by sales.
EPS.
Change in EPS divided
That also you can do.
directly without
Change in EPS divided, yes, you can do. But generally, when this data is given, do operating leverage into financial leverage. Better, easy way. Why unnecessarily to go for a tough one? Easy way, sir. Fourth one? 1.16, Okay. See here. Sir, which question we have done the answer now? No, I'm talking with you. See here. See here. We have taken 0.92, correct? They have taken 0.929. That's why small changes will come. So these are all decimal changes. In examination, they don't consider like that. You can take 2 digits or 3 digits, but write an assumption there. For example, if you have taken 2 digits, write down. Problem was done on the basis of 2 decimals. Clear? 3 decimals, answer can slightly change. Write down that and leave. Because even Kaushik Mukesh or some other person, how would we know what is there in the key? Correct or not? That's why question paper first what they will give, assumptions should form part of your answer. Means what? Whenever you take some assumption in mind and write it, how would the valuer will know? Therefore, write your assumption also. Clear? Done. Next one, 1.25, 0.76. 1.259, 0.96. Clear? 0.9. We got 0.95, they got 0.96 because of the decimal. Okay, na? Sir, are you all comfortable with understanding this? Yes, that's it. So 1.16, 0.91, all these things, same answers, they also got slight change in the decimals. Up to here, everyone understood? Yes, sir. Next, take practical question number 12. So this question came for 4 marks in exam. This is a 6 marks question already came. Okay, let's see. Following data have been extracted from the books of LM Limited. Sales, interest payable, operating leverage, combined leverage. Calculate the financial leverage, fixed cost and PV ratio. I think my students will never do wrong on this. Now after understanding income statement and other things clearly. Yes, tell me, can you prepare income statement for this question? Yes, sir. Can you? Yes, tell me what data they have given? No. I will ask you one question, tell me. Can you calculate financial leverage? Yes, how you will do? Operating leverage is given, combined leverage is given. Can you calculate? Yes, but there is one problem here. I will tell you what. See here. Operating leverage, combined leverage is given. Like that you can calculate as a missing number financial leverage. That is one way. Or you can also calculate EBIT. You can also calculate EBT. Through that also can we calculate or not? Yes, okay. Now listen carefully. What is a new thing in this I will tell. Before that, please keep the heading. Practical problem number 12. Income statement. Write down the income statement full detail. Write down. Sales minus variable cost, contribution, minus fixed cost, EBIT, minus interest, EBT, minus tax, EAT. Okay, va? Write down. Sales, how much? 100 lakhs. Tell me now, sales by contribution is PV ratio, correct? Sorry, very sorry. Contribution by sales equal to PV ratio, correct? But PV ratio also they didn't give. They are asking us to calculate the PV ratio. They are asking us to calculate what? PV ratio. First to fill the data. What is the interest cost? 10 lakh. Okay. Next. After that, financial leverage not given, all these not given, interest cost is given. Okay. First you tell me. Operating leverage is how much? 1 point? Very good. Financial leverage? We don't know. Combined leverage? As a missing figure, can you calculate the financial leverage or not? Tell me. Combined leverage divided by operating leverage. 1 point? What is 1.8? Now you tell me. Financial leverage 1.8 means EBIT divided by EBIT minus interest. Interest already we know. Can you calculate the EBIT value or not? Through that all down and up top everything will be covered. Shall we do it? Do it below. So financial leverage 1.80 equal to EBIT divided by EBIT minus 10. 1.8 EBIT minus how much? 10 into 1.8. How much? 10 into 1.8? 12.5. How much? EBIT. Tell the value. Fast. How much? EBT.
12.5.
Okay. Tell me, operating leverage is given. What leverage? Operating leverage. Tell me if operating leverage is available, what can I do? Operating leverage is available means what can I do? Tell me the formula for operating leverage. What is operating leverage? 1 point? Contribution. We don't know. But EBIT we know. How much? Tell the value. 27, huh? Okay. Now variable cost can you tell? Yes. How much? 73. So now you tell me what is the fixed cost? Very good. 4.5 lakhs. Okay. Now see here. Financial leverage we calculated. Correct? Fixed cost we calculated. PV ratio we calculated. Enter income statement filled or not? Tell me what is the first bit we calculated? Financial leverage. How much is the financial leverage? Okay. Next. Second bit. How much is the fixed cost? Second bit. Next one. Tell me PV ratio equal to contribution by sales. Tell me how much percent? Third bit also calculated. Everyone clarity? Yeah? See here. Question number 12. Perfect. Answer is over. That's it. That's it. Do study material questions. If you don't do study material questions, questions will come from that in exam. Unnecessarily you will be in the depression once you see the paper. Now, I will give you one question for practice in the class. Will you try? Yes, sir. Okay. Now, I want you to do question number 10. This is a 10 marks question given in exam already. Rarely financial leverage chapter will come for 8 and 10. Three types of questions are there, those we are going to do now. Try question number 10. 5 minutes time for you. After that I will do. Start doing, please. Don't sit idle. Are you all doing? Try the question. Don't see the answers. Another 2 minutes more. Once you do, I will show you the answer. Okay, completed. Tell me what are the answers you got. So enough, everyone stop. First tell me, he is asking which leverage? Everyone? Financial leverage. Okay, listen carefully. What is the fixed cost excluding interest? Huh? Okay, now listen. 3.4 lakhs. Sales given, all these things are given. First thing, tell me, can you fill the income statement for the question? Can we prepare income statement for this question or not? Okay, let's do that. Keep the heading. Practical problem number 10. Income statement. Write down the schedule properly. Okay, first, everyone fill the numbers properly. What is the sales?
50 lakhs.
Tell me how much? 50 lakh. Now tell me, operating leverage is how much? See there and tell ya, why you are silent? Operating leverage is how much? Tell me, what is the formula for operating leverage? You don't know what is the formula for operating leverage? What is the formula for operating leverage? Contribution divided by sales. Okay, so, very sorry. Contribution divided by what? EBIT equal to how much? 2. Now tell me, sales is given in the question. Now you answer my question. One second, listen. Sales is given 50 lakh. Operating leverage is given 2. Operating leverage represents contribution by EBIT. Contribution by EBIT. Correct or not? Next, tell me. Operating leverage is there. Combined leverage is there. Can we calculate the financial leverage as a missing number? Tell me how to calculate. Financial leverage equal to combined leverage divided by operating leverage. 1.25. Up to here, understood everyone? First write down the income statement up to here. Write down the income statement up to here. Sir, whatever you have done is only rough work. We are doing the fair work again. Write down properly. First write down and fill these numbers. I will tell you how to do this question once you copy up to here. There is one important point, that's why I am asking so many times. Okay? Listen now. Sales is how much? 50. Variable cost we don't know. Contribution we don't know. Fixed cost EBIT. These are the missing numbers. All are missing numbers. Correct? Now listen carefully. I wanted to tell you one thing. They have given in the question 3.4 lakhs is the fixed cost excluding interest. Excluding what? Interest. Can you please tell me what does it mean? Fixed costs are of two types. Operating fixed cost, financial fixed cost. Tell me what fixed cost? And a cost structure there will be fixed cost portion. rent, lease of a particular asset. These are all are fixed operating cost. For example, I have taken this building on rent. Every month I have to pay a fixed rental or not. Whether 1,000 students come, whether 10 students come, I have to bear this. This is called as what cost? Fixed cost. Which kind of fixed cost? Financing fixed cost or operating fixed cost? Very good. I have taken bank loan. On the principal amount I need to pay interest regularly or not? Which kind of fixed cost it is? Financial fixed cost. Listening? That's why see here once. They have given fixed cost excluding interest. Means what kind of fixed cost? Write down 3.4. How many of you does this? How many of you does this? Very good. Now can you please tell me what is the formula for operating leverage? Contribution by EBIT. Contribution by EBIT can be written as contribution minus fixed cost. EBIT can be written as contribution minus fixed cost. Correct or not? Do it. That's it. Understood how to do? EBIT can be written as contribution minus fixed cost. Correct or not? That's what we have written. So, tell me what is the contribution? 6.8. Tell me the variable cost now. 43.2 or 43.2. How many of you got this? How many of you got this? Definitely you might not get this. Reason I will tell you, because you calculated financial leverage as a multiplication of operating and combined leverage. Correct or not? You have taken financial leverage equal to combined leverage by operating leverage. If you do that, this answer you will not get. Okay? Done up to here everyone? Next. EBIT. EBIT 3.4. Next. Debentures 8% interest on 30.25 lakhs. Tell the value here. 2. EBT. 0.98. Tax given a 30%. How much? 0.29. EAT 0. All these things are in rupees, in lakhs of rupees. All are in lakhs. Do up to here first. Okay, now tell me, what are the questions he is asking? What is the first question he asked? Financial leverage. Write down. Bit 1. Financial leverage. EBIT by EBT. 3.4 by 0.98. Value please. 3.46. I said round it off. 3.47 times. All your doubts I will clarify at the end. Okay? Because there are two alternatives for this question. Number 2. PV ratio and EPS. Tell me, what is the formula for PV ratio? Tell me, what is the contribution? Divided by sales, how much? Tell me. 13.6, huh? Okay. Number 3. EPS. 0.686 lakhs or 68,600 divided by how many shares are there in this particular company? 3,40,000. Tell the value please. 0.20? 201? 202 you should tell na again. 0.202 per share. Okay? Done? First, listen. We completed financial leverage answer, PV ratio, earnings per share. All these are completed. Now listen carefully. Sir, why we have done this way? Question will arise. Okay? Listen. Students will generally get this doubt. The first doubt anyone will get once they do this question is, see, sir, operating leverage is given. Combined leverage is also given. Like in the previous question, I will calculate financial leverage equal to combined leverage divided by operating leverage. In such a case, everything in this question will change. Yes, correct or not? Yes, yes or no? Why that is not correct? Can anyone in the class tell me? I'll wait for your answer. Sorry, I will ask you one thing. Will you do that at least? You calculated financial leverage equal to combined leverage divided by operating leverage. How much you got? 1 point? Very good. 1.25 you got, correct? Using that, can you calculate the EBIT minus interest, all those things will you do? Answer?
Yes, sir.
Do and tell.
12,10,000
Show me that. Everyone, have you done? You didn't do at all. You have done alternatively.
Yes, sir.
Sales 50 lakh, variable cost 34 lakh 50,000. Okay. Combined, contribution 15 lakh. Fixed cost 3 lakh 40. EBIT. Okay. Now you calculate operating leverage, contribution by EBIT. 15 lakh 50,000 divided by 12 lakh 10,000. How much you got? What they have given? That's why we should not do. Understood the point? So, in this question, what we need to learn is, we should not calculate financial leverage in the normal way what we do generally. Listening? Yes, because in that way if you do, automatically your operating leverage answers are changing. Yes, sir. Correct or not? But see my answer now, whatever you have done now. See the answer what I have given you. You have written the answer. Yes, open that. At least see here. See this income statement. Now take calculator. Do contribution by EBIT. Answer tallied. Next, what is the formula for financial leverage? Do that 3.4 by 0.98. That we calculated already. Combined leverage, what is the formula? Not that. Using the income statement. What is the formula? EBIT by EBIT divided by EBT. Sorry, EBIT divided by, sorry, contribution divided by, do that. Have you done that? What is the formula? One second. What is the formula there? Combined leverage formula? Contribution divided by EBT. EBT. Okay. Contribution divided by EBT. 0.98. Okay. So if you do this way, operating leverage will not get tallied. In the question they have given different operating leverage. That's why I am asking you to do this question. That question is a wrong one. Institute has given that question, but there are a lot of mistakes inside that. There is no consistency in the answers. If you do in one way, two things will tally, others will not tally. Listening or not? That's why that question will not come in exam. That's what I wanted to tell. There is a lot of mistakes in that question. Listening or not? Why I ask you to do first? At least you will understand what is going wrong. In one way, if you do, one answer will come. Till now, whatever the problem we have done in leverages, what we understood, any way you do, answer will be same. Correct or not? But in this question, that won't happen. That's why this question has a lot of alternatives. There is a mistake in this question. Clear? In examination, for example, you did this way. Operating leverage, combined leverage they have given. Like in the previous question, you calculated financial leverage. That also is right. This also is right. Clear or not, everyone? You do in any way, you should calculate income statement, financial leverage, PV ratio, EPS. That's it. Listening, everyone? That's why. This question has a mistake. That's what I wanted to convey. Okay? Done. Next. See here, if you want, I can show you the study material answer also. See there. Which question we have done? See. Okay? I think you might have done like this. Next. How much? Contribution we got or not? You got contribution of how much? Here we got how much? That means try to understand. Here financial leverage they have done this way. Answer they have done in a different way. That's why answer has a mistake. Question has a mistake. Understood? We got this answer or not? EBIT also we got. 0.202 also we got. Correct or not? That's it. This is a point. But don't take that problem so seriously. Why I gave this to you? After the class, if you do this question, then you will get a doubt. Why this question is having double answer or triple answers possible? In order to clear that doubt, I am telling you that question itself is having some mistake. Clear? After that, that question was never tested in exam, neither in the RTP nor in any MTP. Even when you are doing after the revision classes, remember that this question has a mistake. Let's not do. Go to the next question. Clear? That's it. Next. 10. Okay. Next. No, the question is wrong. Those are all dependent on the remaining things only. Next to 2 bits also not needed. So 10th question you ignore because the question has a mistake. I can also tell 10th question has a mistake, don't do. Student will not understand what is the mistake. That's why I am asking you to do first and know about what is the mistake inside that. Clear? Next one, I will give you another question with the hope that you will do. In this question, no mistakes are there. That's the only question where some mistakes are there. Question number 5. 2 minutes time for you to read, 3 minutes time for you to do, totally 5 minutes. Sale revenue of TM Excellence Limited is rupees 20 per unit. Of output is 20 lakhs. Contribution 10 lakhs. At the present level of output, degree of operating leverage of the company is 2.5. Company does not have any preference shares. The number of equity shares is 1 lakh. Applicable corporate income tax rate is 50%. Rate of interest on debt capital 16% per annum. Calculate the EPS at the sales revenue of how much? 20 lakh, and the amount of debt capital of the company if a 25% decline in sales will wipe out the EPS. Very good question. Question came for 8 marks. Read the question. Don't sit idle, try the question. Are you trying the answer? Another 2 more minutes only for you. Right for the answer? 30 seconds more. Even if you don't do, no problem, but try. Okay? Now tell me, time up. Listen, first I will explain how to do. Later, did you understand it in the same way or not? You tell. Even if you are wrong in the class, no problem. At least it's a last chance for you to rectify. Clear? Now also if you don't rectify, exams are there in another 1.5 months. So, no problem if you do wrong, but rectify the mistakes where you are going wrong. Okay, I don't know from which book you have done till now. Not doing ISM itself is the biggest mistake from your side. At least you are trying to cover all those now. Clear? First understand one point from my side. They given some data. Whenever data on leverages is given, don't first panic to the question. There will be some link that is given in the question. Link that they have given is 25% decline in sales will wipe out the EPS. Means EPS to sales. What is the leverage which links EPS and sale? About combined leverage, they have given one answer. Listening? Yes, tell me. Let us say, for example, last year EPS is 10 rupee. Last year EPS is? Assume, we don't know anything. Let us assume. Last year EPS 10 rupees. EPS will become 0. That's called as wipe out EPS. Listening? Wipe out EPS means entire 10 will become 0. When EPS will become 0? No. Hey, listen. I am not yet done. Listen. 10 rupee EPS last year, let us say. Or 1 rupee EPS, let us say. Or 2.3 rupees, let us say. One number you take first. 10 rupees is the EPS. Wipe out entire EPS. Wipe out entire EPS. What do you mean wiping out entire EPS? 10 should become 0. 10 should become 0. Now you tell me, what is the percentage change? 10 becoming 0 means how much percentage change? 100% change. How much change? 100%. So change in EPS is how much? 100%. 100% EPS will change if sales changes by how much? 25. 4 is the combined leverage. From there the question starts. Did you understand? Yes, at least now will you try? Yes, try that. Did you understand how to do? If you are done, we will do together. Shall we do together now? Understood how to do? I gave time even when we are not having enough time. Why I have given? You should practice. That should capture your mind, your attention. Tell me, did you understand what do you mean wiping out EPS? Yes, whenever in exam a question on wiping EPS comes, change is how much percent? 100% change. And to change EPS by 100%, sales required to change only by how much percent? 25. Means how many times the EPS is sensitive to sales? 4 times. From there your answer should start. Clear? That means the last point of the question is the core. From that everything will begin. Shall we do? Start it, sir. Keep the heading. I will tell you how to present in the exam. Step 1. Calculation of combined leverage. For EPS to change by 100%, sales percentage change required is 25%. Percentage change in EPS 100, percentage change in sales 5. So how many times, sir? 4 times. You see the question there, they have given degree of operating leverage already. Correct? Can we calculate the financial leverage? Write down. It is A bit, B bit. Financial leverage equal to combined leverage by operating leverage. What is operating leverage given? Tell me what is the financial leverage? 1.6. Okay? Done. Next. At the end, what is asking us to calculate? Calculate the EPS at the sales revenue of 20 lakhs. Okay, calculate the EPS at the sales level of 20 lakh. Can we do that? Can we put the income statement and do the answer? Before that, I want one answer from you. Debt is there or not there in the question? There. Hey. It is given or not? Debt. How much percent? 16%. Okay, first tell me, what is the sales? Contribution. And fixed cost, or variable cost, 10 lakh. Variable cost, 10 lakh. Fixed cost, is there anything given in the question? No, sir. No. So EBIT, financial leverage, all these things are available or not? Okay. How much? 4 lakh. How you calculated 4 lakh? How you calculate the 4 lakh? Operating leverage is given or not? How much is operating leverage? We have sales, we have contribution, we have operating leverage. Can we calculate EBIT or not? Yes, that's it. Shall we do? Yes, write down. Calculation of EBIT. Sales 20 lakh. Next, sales 20 lakh. Tell me, what we have given already in the question, contribution how much? Write down, 10 lakh. Variable cost, 10 lakh. Not required, but still, just write down. Next, one thing we know, operating leverage is how many times? Operating leverage means what? Equal to 2.5. Equal to 2.5. Tell me, contribution already is there, how much? Divided by 2.5 equal to EBIT. So EBIT equal to? Now you people will tell. If this is 4 lakh, how much is the fixed cost? Write down. Calculated? Do it. If you did not copy, copy down. If you already done, okay. If you are done, I will go to the next one. Shall we? Yes, sir. Tell me now, you will tell, I will listen. Tell, He is asking us to calculate at the end what? EPS. Tell me. Bit number D. Write down. Calculation of EPS. Okay, write down. EBIT minus interest, EBT minus tax, EAT divided by number of shares EPS. Correct? Now you will tell, I will write EBIT. Okay? Next one. Did they give the debt capital amount? No. But how to do? Interest rate you forget. Financial leverage when you use as a missing number we can calculate or not? Yes. Write down. Okay, ba? Yes, sir. But I will ask you one question. You try to answer. Combined leverage is available? Yes, sir. Combined leverage available. Yes, how much is a combined leverage? 4. Equal to 4. Formula for combined leverage? Contribution by EPS. Contribution by EBT. See here. 1 second. Listen. Contribution by EBT equal to how much? EBT can be written. Contribution is there already. What is there already? Contribution. EBT can be written as what? EBIT minus I. EBIT minus equal to 4. Like that we can calculate or not? Everyone here? Yes, tell me. How to calculate? Contribution is how much? 10 lakh. Correct? Divided by EBT equal to 4. Correct? Now tell me. How to calculate EBT? EBT equal to how much? 2 lakh? Tell me now. 1 lakh? Now I will ask you one question. Will you answer? Okay. 1,50,000 is the loan amount, interest on loan. This is equal to 16%, correct or not? Yes, on what it is 16? Some X amount. Can you calculate that X amount or not? Yes, X into 16% will become how much? 1,50,000. How much is this X? 9,37,000. That's a debt value. Though we don't need, I'm just telling you. Listening? Yes, tell me. So tell me, take calculator. 9,37,500 into 16%. Like that we got this number. Listening? Yes, so tell me, what is the tax portion? 50, yeah? 50. Means 1 lakh. Number of shares. Answer. Right up. Did you understand how to do all these points? Yes, sir. Instead of doing like this, contribution by EBIT minus interest also you can do. Then also you will get the same answer. Did you understand what I said? Yes, sir. EBT can be written as? EBT can be written as minus interest. Directly interest you can calculate then. Clear? Like that also you can do if you want. But it's easy, na? Table law we can fill everything. Understood the question? What is the EPS in the question? 1.25. See here. Perfect. 1.25. They have does it as EBIT minus interest. Like that they have done. We have directly done using EBT. Yes, but anyway, answer will be same. Correct? Yes, sir. Done. Which question we have done now? Question number 5. Sir, what is the only important point you learnt in this? What is the only important adjustment in this? Wiping the EPS represents change is how much percent? 100%. If you understand that, remaining answer can be done in 2 minutes. Clear? Done. Which problem we completed? Question number 5. Next. Very good question, 8 marks question. Take question number 7. A company had the following balance sheet as at the end of current financial year. equity share capital, reserves and surplus, 15% debentures, current liabilities, fixed assets, current assets. Additional data. Fixed cost per annum excluding interest. Means what fixed cost? Operating fixed cost. Variable operating cost ratio, total assets turnover ratio, and income tax rate. Calculate the following and comment. EPS, operating leverage, financial leverage, combined leverage. 8 marks question given in exam. Read the question first before we go into solution. Like in the previous case, 2-3 minutes time I will give, try on your own first. If you could not do, I will do. Try. Don't just sit idle. First tell me, did you prepare an income statement? What I said to you when we started with leverages, every question will have income statement. First in exam, first write an income statement. First we will not lose the marks. At least 2-3 marks they will give, further 2-3 marks you will get. Every leverages chapter, step 1 will be the income statement. Shall I do? First thing, every question will have one important new point. That new point we need to understand. What is the question here? Practical problem number 7. See there. First, time given you have done. Now it's my time, I will explain and go into the next question. See there. In this particular question, they have given total assets turnover ratio or not.
Yes, sir.
To prepare income statement, we should start with a sales not given. That was linked with this turnover ratio. Total assets turnover ratio means this is the total assets. Okay? Total assets turnover ratio means turnover by total assets. Ratios chapter. Turnover by? Okay. What is the ratio? 2.5. Total assets we know. So turnover equal to how much? 50. That's it. With this you can prepare income statement. After that operating leverage, combined leverage, financial leverage, 1 minute each. Shall we do it together? Yes, start. Question number 7. Income statement. Do it along with me. Tell me everyone, what is the sales? Variable cost. See in the question, 1 second. See in the question, variable cost is how much percent? Tell me. 32 point? Balance. Fixed cost. EBIT. Interest cost. Already given in the question, huh? I mean, debentures given, interest rate given. Correct? Next, EBT. Huh? Tax rate? Tell me. Reduce. Number of shares? Number of shares. 50 lakh shares. How much? 50 lakh. EPS. 8.4 crores, all these? 50 lakhs, I will write this way. 0.5 crores. Correct? Tell me, value. 16 point? What is 16.8? EPS. EPS. Up to here, everyone, clarity? Next. Tell me now. One step completed, your main step over. A, B. Now you tell me, what are the 4 questions he is asking? EPS we calculated already. Okay. Next. Tell the formula for operating leverage. Contribution by EBIT. Tell what is the contribution? Divided by value. C. Financial leverage. EBIT. Divided by 12. Value please. 1 point? D. Combined leverage. One point? That's it. Everyone got the answer? Everyone, are you able to do on your own this question at least? Okay. Tell me, what are all the 4 answers? Fatafat, tell the answers. Perfect. 1.296 or 3. Okay, next. Very good. Next. 4, 6. They have written 1.458. Correct? Have you got the same answer? That's it, done. Over. So which question we have done now? Question number 7. Take question number 6. First of all, everyone tell me, are you all getting confidence in the chapter? Yes, do it. Next, come to question number 6. Betatronics Limited has following balance sheet and income statement. Equity capital 10% debt, retained earnings, current liability. Net fixed assets, current assets. Total 19 lakh. Sales, operating expenses, EBIT, interest, EBT, taxes, EAT. Determine the degree of operating financial combined leverages at the current sales level if all operating expenses other than depreciation are variable cost. If the total assets remain at the same level but the sales increase by 20% or decrease by 20%, compute the EPS at the new sales level. Super question given in exam for 7 marks already. Recent attempt May 23. Read the question properly. Read the question. 3 more minutes for you to do. First, what we need to prepare? No need. He has only given in the question. Just you need to do calculations only in this question. Income statement also not required. Because they have only given in the question clearly. Why again to prepare? I think with the data available, can you calculate the operating leverage, financial leverage and combined leverage? That's the formula for operating leverage? Oh, Ganesha. Tell the answer and write. What is the formula for operating leverage? Contribution by? See there? Contribution given up? Huh? Given here? What not given? What no? Sales is given. Variable cost given. Because in the question they clearly said. What they said? In the question, except depreciation, all are variable costs. Tell me, what is the total operating expense? Either depreciation is 60 and remaining 60 are what variable cost. So 3,40,000 minus 60,000 will become the contribution. Take separate which bottu petti. They have to tell you Babu is not contribution. Indirectly you should understand in the question itself. Start doing. Tell me the operating leverage, financial leverage and combined leverage answers. At least the first bit have you completed? Tell me the answers for operating leverage, financial leverage and combined leverage. Here itself I can do. Sales is how much? Sales is how much? Here they have given clearly, na? See here. Operating expenses including depreciation, how much? 1,20,000. 1,20,000. All operating expenses other than depreciation are variable. Means if you remove the depreciation, you will get the variable cost or not? Tell me. Minus? Contribution? 2 lakh? Fixed cost? 2,20,000. What is 2,20,000? EBT. Remaining they have only given in the question after that. Can we calculate the operating leverage? What is the formula for operating leverage? Contribution by EBIT. What is the contribution? Divided by EBIT. Answer. 1.27. Okay. Financial leverage. EBIT by EBT. 2.2 divided by 1.6. 1.375. Combined leverage 1.27 into 1.375. 1.74. 6. Almost 1.75. Correct? Almost 1.75. 75. Now my question. We calculated all the three. Done. You got the half answer. Next, think about the point clearly. If the total assets remain at the same level, but the sales increase by 20%, decrease by 20%, compute EPS. Tell me, sales ki EPS ki linking leverage is what? Operating or financial or combined? Already tell me what is a combined leverage? What do you mean by 1.75? For every 1% change in the sales, EPS changes by 1.75%. Here sales is changing by how much? 20. If sales increases by 20, EPS increase by 20 or 20 into 1.75. Understood the point or not? Let's do. Keep the heading. This alone I will do along with you. Do it. Practical question number 6. Combined leverage and impact. Keep the heading. Combined leverage and impact. Shall we? Okay. Combined leverage equal to 1.75 means, write down, for every 1% change in sales, EPS changes by 1.75%, brackets will write down in same direction. In same direction means if it increase, this will also increase. It will decrease, this will also decrease. Direction is same. Shall we? Tell me now. 2 branches you did. 2 branches. First branch. Sales increase by 20. Next one. Sales decrease by 20. So EPS increase is 20 into 1.15. Tell. 30. Same also here. EPS fall by 35%. What is existing EPS? Existing EPS, yeah? Oh, before question. Sorry. What is the EPS in the given question? 1,04,000 is the earnings after tax. 20,000? How many shares? 80,000? Okay, 80,000 shares, correct. 1,04,000 divided by 80,000. Tell the EPS. 3? 3. 1.3. Okay. Tell me. Here, sales increase. EPS will increase or decrease? Increase. Take calculator. 1.3 plus 35%. 1 point? Next. 755. So 756. Next. This will be 20 minus 20, sorry, how much? 1.3 minus how much percent? 35%. 0. Right now. So 1.3 become 1.756 in the first case. 1.3 become 0.845 in the second case. So first everyone tell me understood? Yes, which question we completed? Question number 6. See here. See here. Have we got the same answer all the 3? Yes. 1.76, 0.85. 1.76, 0.85. Okay. Perfect. Answer style it again. Done. So I told you 8 questions I will do. How many questions we completed? You don't know how many completed also. 11 questions are there. 1 we did, 2 we did, 3 we did, 5, 6, 7. How many are still there? I will do another 1 more question also for you. Clear? I said you how many questions I will do? 8. But how many we have done? How many we have done? 8 we have done exactly. Eighth one also completed now. Another one more question we will do. Take question number 4. Exam question for 6 marks. Last question for leverages. Remaining 2 questions I am leaving you for you to do. Will you do that? Yes, without fail you do. See there. Capital structure of PS Limited at the end of current financial year consisted as follows. Equity share capital 10 lakh, debentures 10 lakh. During the year, sales decreased to 1 lakh units as compared to 1 lakh 20,000 units in the previous year. However, selling price stood at 12 rupee, variable cost at 18 both the years. Fixed expenses were 2 lakh, income tax 30. You are required to calculate degree of financial leverage at 1 lakh 20,000 units and 1 lakh units. Operating leverage at 1 lakh 20,000 and 1 lakh units. Percentage change in EPS. Good question for 6 marks. Okay. Read the question first before we go with the solution. 5 minutes time I will give. Try this. Try the question, please. Don't waste time. That question will take hardly 3 minutes if you do. Think and do, very easy question. Can you tell me what you need to do before you start? Tell me what you need to do. One second, stop once. Tell me. What is the question he is asking? Last year, how many sales units we sold? 1 lakh 20. This year? Okay, very good. What is the selling price? Now, units are reduced. 1 lakh 20 became 1 lakh. Selling price reduced or not reduced? Not reduced. Variable cost reduced or not reduced? Not reduced. Fixed expenses will go reduce or will not reduce or will not reduce. Just to you have to prepare what statement? Income statement you prepare. After that calculate operating leverage and financial leverage. See how to do. Particulars. First column, particulars. 1 lakh 20,000 units, 1 lakh units. Income statement. Clear? Operating leverage, financial leverage, combined leverage. Start. under 1,20,000 units. For 1,20,000 units, you will calculate EPS. How much? 12. EPS, huh? Oh, financial leverage, huh? Okay. Yeah, done. Next, 12.6 became how much? 7. Operating leverage? Calculate. What is operating leverage? 1.712. Correct? Financial leverage? 1.552. We got the same answer. Combined level not required. Terminal, what he is asking? Percentage change in what? EPS. Now tell me, how much is the EPS last year? 12.6. That became how much now? 7. Reduced or increased? Reduced. 7 minus. Like that you need to do always. P1 minus P0 whole divided by P0. Okay? 7 minus 12.6 whole divided by 12.6 into 100. 44.44. Positive or negative? Negative. You should write numerator minus 5.6, not 5.6. There is a reduction in value. Okay, done? Understood everyone? That's it. See here, which question we completed now? Question number 4. After doing so many questions in leverages, all practical questions, did you get the confidence of doing the good questions in exam or not? Yes, these are all 10 questions we have done are all are exam questions. Clear? Nothing is normal question. All are exam questions. Some good points are there, some simple points are there, but all are exam questions. Okay? Now, I will stop with the leverages here. Enough of practice. Next, what you need to do? Illustrations will be there in this chapter or not? Yes. Nothing great in those illustrations. Small illustrations you can do. Mainly practical problems are in this area. So, practical problems we have done and completed. Next chapter we are going to start is capital structure theories. Keep the heading. So next chapter we are going to start is capital structure theories. Okay? 8 marks area. 2 questions will come from this chapter. 1 question will come from capital structure theories. 1 question will come from EBIT EPS analysis. EBIT EPS analysis. From that 1 question will come. From the normal 1 question will come. But the difficulty of this chapter is, this chapter students don't learn in exam. Okay? Randomly if you see, we completed cost of capital first. Correct? Yes, now in everyone, honestly you tell me, did you find any difference between before the class and after class? Understanding or learning or practice, did you find a change and difference? Yes, answer. Yes, now why the numbers came, everything when you are putting, we completed. Just in a span of 2 hours if you can do, if you spend 30 hours on the chapter, you will become an expert in that. Clear? It's all requires some practice. FM requires practice, background understanding. Without touching any background, because of the time limitation that we have available, just by doing the problem, see if you can understand that much. From the beginning, if you concentrate on understanding and learning, how beautiful FM will be. Clear? Sorry, happened has already happened. We can't bring it back. But at least we can rectify now. Capital structure theories, cost of capital we completed. KD, KP, KE, KR, weighted average, marginal cost. 2 hours low, you have completed all the questions in study material. Yes, clear? Now you answer. Is that 100% new or something you know? 100% cost of capital new chapter? No, at least you have some basics, correct? you know what is the I into 1 minus t, all those things at least 1 or 2 times you might have done wherever you took the coaching, correct or not? But here when you come, when you practice and understand and do, it becomes much easier. But, and next, leverages. Leverages we have completed today. Leverages chapter also when you do, everything is new, already something is done. Maybe good amount of problems you have done in no time. Confidence may get boosted now. But at least you have some clarity on that formula. Answer. But bond paper I will write and give you, capital structure no one will know. Tell one formula in capital structure chapter. Adi. I was never wrong. Students are literally leaving the chapter and going. Why? Learning itself is horrible. At the stage of learning, capital structure chapter, if you don't learn properly, gone. We don't understand even when you do questions, because institute study material one question, one answer they will give. Because the model changes. So students should first recognize which question they are asking in exam. That makes the chapter difficult. That's why often students will leave one chapter commonly in examination. That's capital structure theories. That's why I am putting in the first day of our revision classes as well. Clear? Today I will cover some part. Tomorrow I will cover 30% or 40% of this chapter. Listening? Later I will take another 2 chapters. Dividends I said no tomorrow's session. Yes or no? I said or not? Dividends we will do. After that, after dividends, I will make you to do one very important chapter. After the dividends, ratios. Which one? Ratios. Tomorrow's session main concentration is on 2 important chapters. 6 marks area dividends, 8 marks area ratios. Okay. Ratios like you do more number of problems, you will get more clarity on the questions. Clear? Like leverages, 80% of the ratios chapter is on missing figures. Data will be missing, we need to fill the data. For that you need to know the formula first. Everything I will explain in the tomorrow's class. Clear? Tomorrow's class I have no great targets. Simple target. Capital structure la left out area. Clear? 1.5 hours. Dividends exactly 1 hour 30 minutes. Remaining full time ratios. Clear? By that time we will complete 5 chapters out of 7. Listening? The next day, first I will start with capital budgeting. Finally I will take working capital close. Understood the point or not? Such that you will get confidence on the subject as well. Clearer? Let us do this. Keep the heading capital structures. Okay. In these 2 parts are there. Part 1. Capital structure theories. See there in tell EBIT, EPS analysis. Now, today's class we will do this one. Which one? EBIT, EPS analysis. Tomorrow's class, 1.5 hours again required. We will do the area on capital structure theories. Listening? EBIT, EPS analysis la 3 concepts are there. Impact analysis, financial break-even point, EBIT, EPS indifference. EBIT, EPS. From this, one question will come for 4 marks. From this, one question will come for 4 marks. Chapter will come for 8 marks. Clarity, everyone? If you are all okay, we will begin. First, everyone tell me, do you all understand income statement? Everyone? This part, EBIT, EPS part starts with income statement because EBIT, EPS are the income statement. Correct? What are all these three concepts? I will first explain. First listen, after that you can do problems. Listen first, I will tell the logic. Point number 1. EBIT, EPS impact analysis means they will tell a company can be financed by only equity, financed by debt equity, financed by equity debt preference, financed by equity preference. Any combination of financing can be made. Tell me, what are the possible combinations? Equity, equity debt, equity preference, equity debt and preference. No equity concept will not arise. Why? Why no equity concept will not arise? Because there can be no company without equity share capital. Section 2 class 68 Companies Act, private company. Private company means a company which is having minimum paid up share capital, and by its articles it restricts the transfer of shares, limits the total number of members to 200 except in case of a one-person company, prohibition on the subscription of securities to the public. Section number 2 class 71 public company. Public company means a company which is not a private company and which is having a minimum paid up share capital. What you understand from these two definitions? Without capital, there will be no public or private company. Clear? So, first to have public-private company, what should be there? Share capital must be there. Listening, once you become public or a private company, later holding company section 2 class 46, subsidiary company section 2 class 87, small company section 2 class 85, one person company section 2 class 62, or for that case, if it is a listed company section 2 class 52, company limited by guarantee section 2 class 22, company limited by shares will be section 2 class 21. You take any kind of company, it should first come into the category of private or public. Correct or not? Even government company also, when you take, government company must be a company first. What is a government company? Government company means a company which not less than 51% of the paid up share capital is held by central government or state government, or partly by central government and partly by state government or state governments, and includes a subsidiary of such a government company. Section 2 class 45. That should also first be a company. Even foreign company, when you take foreign company means a company or a body corporate incorporate outside India having a place of business in India, whether by itself or through its agent or physical or electronic mode, and conducts business in any other manner. Section 2 class 42. What is the logic in all this? Commonly one point is there. First they must be company. No company without a share capital. Clear? So to have a company, share capital is mandatory. What is mandatory? No share capital? No company. At a equity capital without that debt to combination not possible. Equity debt possible. Equity preference possible. Equity debt preference possible. Only equity also possible. But what is not possible? Only debt, only preference. There can be no company like that. Clear? Can there be a company only with a preference share? Can there be a company with preference shares? Only prefer, no equity. இல்ல என்னடா why? What is a preference share? Preferential right over preference shareholders will have preference over. For that, equity should be there first. That's why there can be no company without equity. You are bigger than them to show that there should be someone. Listening, everyone? Bahubali is bigger than Bhalal Deva, means first Bhalal Deva should be small. Correct or not? Like that, when you want to tell preference is having more preference than equity, first equity should be there for comparison. So therefore, without equity, No preference. Clear? From this, what you have to understand, Companies Act clear? Companies Act revision will come at that time, we will discuss about the logics there. First, complete the financial logic. Point number 1, tell me. No company can be there without equity share capital. There can be what combinations? Equity debt, equity preference, equity debt and preference. Only equity also possible. But what is not possible? Only debt preference or only debt, only preference, not possible. Clear, everyone? One logic completed. Tell me, in my company, debt equity is there. Debt equity is there. What cost will be there? Interest. What will be there? In my company, equity preference is there. Preference dividend. Preference? Very good. In my company, both debt preference is there. Interest cost, preference cost. Correct? Now you tell me, my company is financed by only equity. Interest, dividend, no interest and no dividend. No interest and no preference dividend. Correct or not? So he will be asking in that area, which is good for company? Only equity good, equity debt is good, equity debt preference is good, equity preference is good, or only equity is good? On that we are going to do the EBIT EPS impact analysis. Are you understanding what is the thing we are going to do? Next, financial, very good concept. Financial break-even point is level of EBIT at which EPS will become 0. Tell me what I said. Level of, at a particular EBIT, EPS will be 0. What is that? That's what we are going to do here. For that there is a formula, I plus preference dividend by 1 minus T. Tell the formula. Regular class I can tell the formula, derivation, everything. As of now, remember, we don't have that much time now. Clear? Tell me what is the formula? Remember, loudly. I means what? Interest. Plus preference dividend divided by 1 minus tax rate. Very good. What is this formula? Financial break-even point. Financial break-even point. Okay. Next. What is the next one? EBIT indifference point. What is this? This is a level of EBIT at which two different kinds of options are there. One is equity only, another one is equity and debt. Clear? One is only equity, another one? What is this? At what level of EBIT EPS is same? Whether you finance by equity, whether you finance by debt, at one particular EBIT, EPS under both the options will be same or not? That we are going to calculate in indifference. Did you understand what are the three discussions we are going to make now? Tell me what is the first one? EBIT EPS impact analysis. That is easy area. Second one? Financial break-even point. Third one? EBIT EPS indifference concept. Shall we do it? 10 question papers you take, 8 question papers you will find question on any of these three. Last attempt the question came from indifference point. Asal without that question paper will not be there. You forget about it. You are leaving capital structure chapter, you are leaving 4 marks and going to exam. Listening? You are leaving theories, you are losing another 4 marks and going to exam. You are going to write only for 42 marks. Understood? That's why we are putting this chapter at the beginning itself. I think you are all having a clarity. Take the study material. Clear? Shall we start? Okay. Now, see the question. A Limited is considering a new project which requires a capital investment of how much?
9 crore.
Interest on term loan, how much? 12%. Corporate tax rate, 30%. Calculate the indifference point considering the debt equity ratio is how much? 2:1. Read the question properly first. Once I ask the question, no wrong answers expected. Read the question. Okay? First tell me. Shall we start? Tell me. This is only equity, debt and equity. How much is debt? 2/3. Equity 1/3. Okay? Very good. Continue. Now answer. What is the EBIT? That only we have to calculate. Why you are looking my face? They are asking to calculate what? Indifference. Indifference means he is asking indifference EBIT. At what level of EBIT? EPS under both options will be same. Shall we start doing? Yes, sir. Tell me, see there and tell. What is the interest on term loan? 1%. Okay. Can we prepare the income statement from EBIT onwards? Yes, putting EBIT as X? Yes, can we? Yes, sir. Start. Keep the heading. Indifference point. Indifference point. Okay, indifference point. But answer my question. Calculate the point of indifference for the project considering the debt equity ratio insisted by financial institutions is how much? 2:1. Okay, first lesson. If only equity financing is made, what financing? Don't do, I will first do one question. Second question we will do together. See. Only equity, debt and equity. Tell me by seeing this, first point number 1. EBIT, interest, EBT, tax, EAT, EPS. Fill the available information. Fill the available information. Tell me, how much is the capital investment? How much is the capital investment? 9 crore. 9 crore. Very good, 9 crore. In this 9 crore, only equity means? They use this. Only equity means entire 9 crores will be raised only by equity. Answer? Yes, okay. Nothing is given in the question. Par value, let us assume 10 rupees. Let us assume par value as 10 rupees. Okay. 9 crore divided by 10 rupees means 90 lakh shares. Not 9 lakh. 90 lakh shares. Correct? Okay. Don't do, I will do. Okay, first listen. Tell me. EBIT will be taken as X. We don't know. Next. Interest cost will not be there. Why interest cost will not be there? Only equity means why interest cost will come? Not there. EBT, X. Tax rate given or not given? Given. How much percent? 30%. Tell me. Correct? Number of shares. How many lakh shares are there? 90 lakh. EPS will be 0.7x divided by 90. 0.7x divided by 90 or 90 lakhs. Now, this you will tell. 9 crores, 2:1 ratio if you take, 2/3 will be debt financing, 1/3 will be equity financing. Yes, sir. Correct? 9 into 2 by 3. 6. 6 crore. On that 6 crore, interest will be charged. Tell me how much? 0.72. 72. Tell me. No. That is not 0.72 x. X minus 0.72. Tax. 0.3x minus 0.72 into 0.3. 0.216. 0.7x minus 0.50. How many lakh shares, sir? When I raise 9 crore with the 6 crore debt and 3 crore equity, number of shares will be 9 crore. Number of 90 lakh. Number of shares will be 30 lakh. You are not listening. Listen again. Like this only you lose the marks. How many crores I wanted to raise? 9. Previous case la entire amount is raised only by equity. Therefore 10 rupee par value we assumed. Yes, how many shares we should have? 90 lakh into 10, 9 crore it became. Yes, correct? Yes, second case lo we are raising in what ratio? 2:1. Means 2/3 of the total 9 crore will be raised by what? Debt. Means 6 crore. On that 6 crore, interest of how much is charged? 12%. 6 crore into 12% came to how much? 0.72 lakhs. 0.72. So, x minus 0.72 lakhs, tax rate, everything we reduce, it came to 0.7x minus 0.504. Correct? Next, number of shares. 9 crore, okay, 1/3 only equity. Means how many crore? 3 crore. Divided by what is the par value? 10. Means how many lakh shares will be there? 9 lakh shares, 90 lakh shares, 30 lakh shares. Divided by 30 lakh. What is this? See here. What is this? Financial indifference point is a situation where what and what will be equal to each other? What and what will be equal to each other? EPS will be equal to each other. Tell me. Divided by 30. 3 times. Correct? Okay. Now tell me. 0.7 divided by 3. 2 point. What 2.1? 0.23? Okay, wow. Now calculate 0.7x minus 0.233x. 46? X equal to 0.504. X equal to 1.08. 1.08 what? Crore. 1.08 crore means 1 crore 8 lakhs. Write down. So the first point not writing down. Tell me and write. Understood? Yes, what we did? Whenever question is coming on financial indifference point, they will not tell. Assumption is only equity versus debt and equity. Only equity versus. If only equity is there, this is the answer. Only debt is there, this is the answer. Indifference means both sides EPS should be same at a particular level of EBIT. Clear? Okay. Now, how much we got? 1 crore. Simply or else it can be written as 108 lakhs. Anything is okay. Correct? See here once. Exact. Clear? And assumed that par value is how much? 10 per share. Will you copy down the answer? Do it fast. Have you done? Did you understand the working clearly? Okay. Next. Take question number 2. Xylo Limited is considering 2 alternative financing plans. Obviously, when they say 2 alternative financing, what it could be? Only equity, debt and equity. See there. First option, only equity. Second option, equity preference. Listening? First option is equity preference comparison. Second option is equity debt comparison. But what is common? I told now there can be any combination. Equity only, equity debt, equity preference, equity debt preference also is possible. But without equity you cannot do anything. Understood? Done. The indifference point between the plans is 4,08,000. 4,80,000. Super. In this question, what is already given? Indifference point is already given. What do you mean by indifference point? EBIT. Already given. Calculate the tax, corporate tax rate is 30%. Calculate the rate of dividend on preference shares. Rate of dividend on? Tell me, from where we need to start this question now? You are not listening. From where we need to start this question? From where we need to start? From sales or from EBIT? Yeah? What is the EBIT? Other side how much? 4,80,000. Correct? Then lastly what we need to calculate? We need to calculate the rate of what dividend? Preference dividend we need to calculate. Can we do it? Start. Keep the heading. Income statement. Okay. Okay. Shall we start? Tell me, how much is the EBIT? 1 and 2 situations. 4 lakh. And here also 4,80,000. What is the interest? Other side, no interest. Tell me, EBT. Here, tax at the rate of 4,32,000 minus 30%. 1 lakh? Huh? 4,80,000 into 30%. EAT. Next. Preference dividend. Nothing. On the other side it is 4 lakh. 4 lakh is the total preference capital. On this we need to pay what? Preference dividend. We know now, we don't know now. We don't know. Put as a X. Okay, next. Number of shares. See the question and tell. Next side. 80,000 only, right? EPS 3 point. Next. Sir, indifference point is a situation where this EPS and this EPS both should match. Correct or not? Match them, you will get the answer for X. Correct? Tell me. $80,000 into 3.78. 3 lakh 400. X equal to 33,000. What is X? Preference capital, preference dividend. Preference dividend. So preference dividend equal to 33,600. Preference capital is how much? 4 lakh. Rate is tell 8 4 4 4 4. Okay. Have you done the answer, everyone? See the answer in the textbook. See here. Exact answer tallied. How much? 8.4%. Next. Take question number 3. Read the question. Read the question. Ganesha Limited is setting up a project with a capital outlay of how much? 60 lakh. It has two alternatives. Alternative 1, 100% equity finance. Next one is a debt equity finance at 2:1. Rate of interest payable 18%. Corporate tax 40. Calculate the indifference. Will you do that? Start doing. Last one question is similar to this. Start doing. 3 minutes time. Question gave us 6 marks. What should be X? EBIT X or EPS X or? EPS sir. EBIT should be the X amount. Start. Everyone, have you got the same answer? Answer is 10,80,000. See here, everyone. Which question we have completed? Question number 3. See here. Perfect. Have you got 10,80,000, everyone? Some are still doing. Make it fast. If you say you completed, we'll go to the next one. Everyone got the clarity?
Yes, sir.
Next. See here. Sixth question you read. Alpha Limited requires. Read. Alpha Limited requires funds amounting how much lakhs? 80 lakhs to raise the fund. There are two options. Issue equity shares of 100, issue equity shares of rupees amounting to 60 lakh and borrow the balance amount. To issue equity shares and debentures at the equal proportion. Income tax rate is how much percent? 30. Identify the point of indifference between two available options and state which is beneficial. I will ask you one question, tell me. Listen first. First option is what? 80 lakhs plus 60 lakhs we will take equity, 20 lakhs we will borrow. How much we will borrow? 20 lakhs we will borrow. Second case, 40 lakhs we will equity and 40 lakhs we will borrow. In both the cases, interest cost will be same or different? In both the cases, interest cost will be same or different? Different. Now you answer my question. See here. First option, 60 equity, 20 debt. Second option, 40 equity, 40 debt. In both the options, EBIT will be X. EBIT? Tell me how to do? Tell directly. Tell. EBIT. X. Second. Minus interest. Same interest or different interest? Shall I tell you what will happen? 20 lakh into 12%. That is one interest. 40 lakh into 12%. That is the interest. Listening? So X minus interest will be same or different or both options? Different. Finally, you will equate to EPS and tell what is the indifference point on EBIT. Will you do it? Start. You should do. Practice. Start. Do it. Have you done? Last 2 minutes. If anyone is doing, complete it fast. How much is the answer? EB80? 10 lakh? 9 lakh 60,000. Huh? Everyone got the answer 9 lakh 60. Tell me what is the new thing you learned here in this question? Till now what we did? Only equity versus other kinds. Now in this question what you learned? Equity debt versus equity debt with a different composition. Clear? I think everyone might have done the answer correctly. Now still another 2 problems are there. In EBIT EPS impact. Listening? 10 questions are there. In that 10 questions, how many we completed? How many we completed? Another 2 will complete now. With that EBIT EPS impact, all these things will be over. Next class tomorrow, first 1.5 hours I will complete all the theories on capital structures. Listening? With that you will become expert in this particular chapter. When you start first with capital structure. When you prepare. Okay. Let us do question number 4, 5. Both are 2 8 marks questions. Very good questions. Let us see. Shall we start? Listen. Ganapati Limited is considering 3 alternatives. Total investment 2 lakh. Plans for raising. Plan A, only equity. Plan B, equity debt. Plan C, equity and preference. Okay, va? Cost of debt, cost of preference, tax rate. Equity shares issued at a premium of 10 rupee par value, issued at 10 rupee premium. Means actually the issue price is how much? 20. Expected EBIT how much? 80,000. Calculate what? EPS. Next one, financial break-even point. And third one, indicate if any plan dominate and compute the EBIT among the plans for indifference. Simply shall I tell you what he asked? Everything in this chapter he asked. Understood? This one problem if you do, you need not do other problems in EBIT EPS impact. Because 3 times we are going to do now. What are the 3? Only equity, equity and debt, equity and preference, equity and preference. How many plans? 3. Plan A, plan B, plan C type. Correct? Next, in all the 3 plans we will calculate EPS. Calculate. After that we will calculate what? Financial break-even point. Finally, indifference we will do. Shall we? Start. Keep the heading. Illustration, question number 4. Practical problem number 4. Practical problem number 4. Shall we begin? So now first write down particulars. Plan A, plan B, plan C. Do it. Don't just see. Plan A, plan B and plan C. Okay. In that, first, whenever question is asked, first thing we need to write the EBIT. Write down. Understood first step? Now you will tell and write. Minus what? Tell me. Interest. In the first case, debt not there. Third case, debt not there. So interest will come only in second case. Tell me. Interest. How much in the second case? 2 lakh rupees is the total. 50% only debt. And how much? 1 lakh. Into what is the rate of interest? 8%. So tell me how much? Very good. Do it. Dash again. 80,000, 72,000, 80,000 again. Minus tax rate. Tax at the rate of how much? 40,000, 36,000, 40,000. EAT 40,000, 36,000, 40,000. Minus preference dividend. First case no preference dividend. Second case no preference dividend. Third case, on that 1 lakh rupees, how much is the preference cost? 8,000. Amount is same but the deduction is different. Earnings available to equity shareholder. 40,000, 36,000, 32,000. Number of shares. First case. Tell. Listen carefully. Hey. Don't write like that. Aves 10 rupees is not the share price. 20. Clear everyone? That you need to remember always while doing this question. Issue price is not par. Issue price is 20. Okay. First plan, how much is raised by equity? How much? 2 lakh. 2 lakh by how much? 20. Becomes how much? 10,000. But in the next case, we will raise only how much? 1 lakh. That too not at 10. We raise at how much? 20. Means how many shares? 5,000 will come. Did you understand or not, everyone? Do it. 10,000. 5,000. 5,000. EPS 4. 7.2. 6.4. That's it. Okay. Now you tell me which is better. Plan A na B na C ya? Plan B. Plan B means what? Only equity A, equity plus debt. Equity plus debt. Why I am asking this question? See, indicate if any plan dominate. Tell me, any plan dominate? Yes, plan B will dominate. What is dominating? Plan B is dominating in nature. Clear everyone? Okay. That you need not write now. So, what are the two questions we completed? EPS, domination of one plan over another. Clear? Next, tell me what is the next one? Do it. Keep the heading. Financial break-even point. Okay, financial break-even point. See, write down first plan A. You tell the formula for financial break-even point. Financial break-even point equal to I plus PD by. Shall I tell you one point here? Huh? Listen. Plan A is what? When equity only is there, interest is not there, preference dividend is not there. Answer is 0. That's it. Financial break-even will be 0. Okay? Next, write down. Plan B. Tell me. Plan B is what kind of plan? Equity and debt. So interest will be there or not? Yes. Interest plus preference dividend 0. So tell me, how much is a break-even point? 8,000. So you need to make a EBIT of how much? 8,000 in order to stay on break-even. Okay, va? Next, plan C. I plus PD by 1 minus T. I is how much? 0. Plus what is the PD? 0.5. So how much it is? Financial break-even point is 16,000. Clear? This is the disadvantage of having preference shares in the capital. Do you know what will happen? Regular class means I will get lot of time, I can explain everything inside. But I will try to explain the logic behind. Okay? Listen carefully. Whenever company has only debt, only debt means equity with debt. That's what I mean. Whenever company is having debt without preference, there is a greatest advantage called as tax saving. What saving? Tax saving. That's why always debt will always be lucrative for the company. That's why it gives highest. Because of tax saving. Because of. Now you tell me the answer. In the first case. In the first case. How much is the EPS? How much is EPS? Because there is no tax saving. There is no. Next, plan B. Tax saving is there. Correct or not? How much tax saving? 50% tax saving is there. The tax saving has increased the EPS. Clear? Second case, third case, if you observe, payment is 8,000 only. But one is with tax saving, and the one is without tax saving. Clear? This is the logic. Next. Understood the financial break-even point concept or not? Last and final touch. Compute the indifference. I want you to tell how to do this answer. EBIT indifference, how to do? Shall I tell you? Listen. We will do AB comparison. We will do BC comparison. We will do AC comparison. What is A? What is B? Equity plus? Can we compare or not? Yes, we will get. Next one? Only equity. Equity and first one is what? Equity. B means what? Equity debt. So only equity debt will compare and do the EBIT indifference. Next, AB over. Next one, BC. Next one is what? What is B? Equity, debt. Next one. Equity and preference. Equity and? These two we will do. Next one. AC. What is AC? Equity. Equity only with equity and preference. Always remember one thing. Whenever you make comparison, you should compare with in such a way that with the financial leverage, without financial leverage, comparison should be done. Simply to tell, company is all equity financed. Which finance? And what is not there? Debt is not there. And with financial leverage or without financial leverage? Without financial leverage. Compare with equity debt, which is having a financial leverage. Which is having a 100% right comparison. Equity only with equity debt is correct. Equity only with equity preference correct. Equity debt with equity preference cannot be compared because, listening everyone, both are having financial leverages. Clear? Equity debt will have financial leverage. Equity preference also will have financial leverage. Comparison cannot be made. We will prove that in this question. Shall we do it together? Yes, sir. Start. Until we are going to do the indifference for how many times, sir? 3 times we will do. 3 questions we are doing now. Start. Indifference point A and B. EBIT will be X minus interest 0. Sir, don't copy. You tell and write. Second case, what is the interest? 8,000. EBT X. What 80,000? Don't write 80,000. We are doing indifference. Put EBIT as X. Next, minus at what rate? So 0.5 X. Here also 0.5 X minus 4,000. Correct? Do it. EAT 0.5x 0.5x minus 4,000. Preference student anyway not there. Number of shares you will tell. First case number of shares. Second case number of shares. Equate 0.5x divided by 10,000 equal to 0.25x equal to 0.5x minus 4,000. Tell me x equal to. Tell. How much? 16,000. Understood the point clearly? Done. So tell me x is how much? 16,000. Indifference point with AB completed. AC you do first. Okay, AC. Plan A, plan C. Everyone tell me EBIT will be X. Minus interest will be 0 in both the cases. Are you with me everyone? Next, EBT X and X. minus tax 0.5x and 0.5x. EAT 0.5x. Next. Very good. Preference dividend. Here it will not be there. Here there will be 8,000 preference dividend. Correct? So, earnings available to equity shareholder. Number of shares 10,000, 5,000. Match them. $32,000. Do it. I think every one of you now are confident in indifference calculations. Technically 6 problems we have done on the same. Okay. Exam never you should do mistake again. Okay. So now tell me, everyone understood to here? Clear? Now I will give you an assignment you do in the class. Do for plan B and C. AB we have done, AC we have done. BC you try to do. Rather than me telling that it is not possible, you learn yourself. You will understand much better. Never you will do mistake again. Do it and tell. Is it possible or not? You tell. Do it. Try it. Are they comparable? You cannot. That's what I also said. So whenever in examination, comparison between equity preference versus equity debt comes. Both are having financial leverage. Financial leverage means what? Some fixed committed cost. Equity means only dividend, which is variable. Equity dividend is optional or mandatory? Equity dividend is optional or mandatory? Optional. But debt ki preference ki interest and dividends are compulsory. Fixed committed capitals both are. You cannot compare both of them. Listening? Yes, sir. So how much is the answer you got? Both will be equal. You cannot. Both will cancel and answer is 0. That doesn't mean 0 is the answer, na? So you can compare or cannot compare? You cannot compare both of them. I think a good lesson was learned. So remember this point. Very good question. That's why it came for 10 marks. Next. Last question for today. Take question number 6. 6 one second. 1, 2, 3, 4, 5. Completed, huh? Fifth one not completed? 6 completed, huh? Then take 5. Last question for today. With this EBIT EPS analysis over. See there. Yojo Limited is presently having 36 lakh in debt, bearing interest rate at the rate of 10%. It wishes to finance 40 lakh expansion program, 3 alternatives. Debt of 12%, preference 11%, equity 16 rupees per share they wanted to issue. Okay. Currently, company is having 8,000 shares, 40% tax. If EBIT is 15 lakh, determine the EPS under three alternatives, assuming no immediate increase in profitability. Analyze which alternative do you prefer. Compute how much would be EBIT needed to increase before the next alternative would be the best one. Read the question, 8 marks question again. Easy question, nothing is there. Just EBIT EPS impact. So this is on indifference or not on indifference? This one. This is not indifference. This is not break even. This is a normal analysis of EBIT EPS. Read the question first, you will only understand. Read the question? First tell me. Answer first. Company is already having how much debt? Interest. And already 3,60,000 fixed cost is there. Correct? Next. Now it wishes to finance 40 lakh, considering three alternatives. Okay, what is the first alternative? Answer. Debt at the rate of how much? 12%. Preference? Equity? 60. No. Equity shares will be issued at 16 rupees per equity share. Listening? Next. Company presently has 8 lakh shares outstanding, 40% tax bracket. See. What is the existing EBIT? Answer. We raise a new finance of 40 lakhs or not? Because of that, EBIT is not going to increase immediately. Therefore, immediately no EBIT rise. That's why 15 lakhs, we will take in all the three alternatives. Project is financed only by debt. Project is financed only by preference. Project is financed only by equity. Clear? Sir, you only said no, sir. Without equity, there can be no company. Now also I am saying the same. This question they are not telling company only debt is there. Project is financed only by debt. Company already is having equity shares. Hey, see here, yeah. Project financing they are talking, not total company finance. Okay? Now tell me. Point number 1. How many alternatives they have given? What are the three? Only debt, only preference, only equity. What we need to calculate? EPS. Under how many alternative? 3 alternative. We should tell which is best one. Listening? Let's start. Write down. First one, EBIT. How much is EBIT? But be careful while you are putting the interest cost. Minus interest. Here be careful. We are having debt already 36 lakh. Correct or not? Already the debt is having how much interest? Hey, 36 lakh is total. How much interest cost is there? 10%. Means how much? 3,60,000. Now additionally again how much you are borrowing? 40 lakh at 12%. Both interest will be reducing. Correct or not? Tell me total. 36 lakh into 10% plus 40 lakhs into 12% value.
8,40,000.
Second case, only preference, sorry, Second case, old debt interest only should be reduced. Which debt? Old debt. Old debt is how much? Tell me now. What is the EBT? Hey, fast here, everyone. 6 lakh. Next. Next. Minus tax. Tax how much? 40, yeah? Tell the value. Next. 4 lakh. Tell me what is the EAT? Huh? 6 lakh? Next? 6 lakh? 84,000. Minus preference dividend. First case dash, second case. Tell me, how much is the preference dividend rate? How much percent? So 40 lakh into 11%. 4 lakh. Third case is no preference dividend also. Correct? Tell me, what is the earnings available to equity shareholder? 3 lakh? 96,000? 2 lakh 44,000? 6 lakh 84,000. Number of shares? 8 lakh. Second case? 8 lakh. Third case is 8 lakh or more than 8 lakh? Already 8 lakhs is there. Okay. Plus 40 lakhs are issued at how much? 16. 2 lakh? So how many shares? EPS? 0.495. 305. 651. That's it. What is this 0.495, 0.305 and 0.651? What are all these? EPS under 3 different alternatives. What he asked? If EBIT presently is 15, determine the earnings per share calculated. Which alternative you prefer? Alternative 1 or 2 or 3 or which one? 3. 3 means what? 3 means what? Only equity of new financing. Old already debt is there. Clear? So which alternative is preferred? 1, 2, 3. 3. See here. Let me show you the answers also. Then you will also get a clarity. Which question? 5 or? 0.495, 0.305, 0.651. Exactly. Answers are tallied or not? That's it. Next. Remaining is only just a comparison. Remaining only just a comparison. They are asking us to calculate EBIT indifference type that we have already calculated for so many problems. Up to here we are stopping today. Did you all understand the concept that we have dealt in the today's class? Yes, everyone? Yes, good amount of syllabus also completed. So what are the 3 chapters that we have almost completed? Cost of capital over, leverages over, capital structures also over, only theories are remaining. Tomorrow's class, the theories we will do first. Once the theories are completed, then we will go into the next area called as dividends. Dividends also completed, ratios. Clear? So thank you. We'll meet again in the next class. So let's continue with the area capital structure theories. Yesterday's class, in the last class, we completed capital structure theories like EBIT, EPS analysis is completed. Correct? Yes, in the 3 segments we have covered.
So many problems we have done. 8 problems we have done in the class. Regarding what we have done, all the problems. EBIT, EPS impact analysis. Next one. EBIT, EPS break even and financial break even. Indifference point, financial break even. This is all we discussed in the last class. Next there is another area called as capital structure theories. Okay. In this 4 segments are there. Net income approach, net operating income approach, traditional approach, Modigliani-Miller model. How many are there? 4. Tell me what are the 4? Net income, net operating income, traditional, Modigliani-Miller. Sir, already Modigliani-Miller we completed. Adi dividends la Modigliani-Miller we completed. Modigliani-Miller has shown 2 concepts: dividend irrelevance, capital structure irrelevance. There we have seen the dividend irrelevant. Whether you pay dividend, whether you do not pay dividend, value of the company is same. Yes or no? Here we are not going to prove that. Here we are going to prove whether you infuse a debt in the capital structure or equity in the capital structure, value of the company will remain same. Is the discussion we are going to make here. Shall we?
Yes, sir.
Very complicated area in the entire FM is capital structure theories. That's why students will leave and go to exam. Okay? So for that, like whatever I said till now, when I say if you can remember this formula, any question you can do. Like that whenever I said, really did you do or not after learning them? Like that in this chapter also there are 4 formulas. If you can understand that 4 formulae properly, any question in capital structure theories you will be able to do. This entire chapter revolves around 4 formulae. Number 1, first formula. V equal to B plus S. Second one, I will give time. B equal to I by KD. S equal to EBIT minus I whole divided by KE. V equal to EBIT divided by KO. How many are there? 4. And if 4 formulas, if you know, any question that comes in exam, you will be able to answer. Literally any question. Just application of this 4 formula according to the situations given in the exam. That's it, you will get the 5 marks. This chapter will come for 4 marks. This chapter has 2 segments. Segment 1 is a theory. Theory means not theory, capital structure theory. Second part is EBIT EPS. That comes for 4 marks in exam. This comes for 4 marks to 5 marks in exam. Chapter weightage is 8 to 9. Listening? This is the second biggest chapter in the syllabus. So then what is the first biggest? Capital budgeting. Which one? Capital budgeting. That's the biggest one. And conceptually or size of the questions wise, everything, capital budgeting is always the king of FM. Listening? After that all this will come. Working capital, GP. Chapter illa, working capital. Working capital is a small area. If you do the answers in every question, same format. Okay, I don't care about those chapters. There should be something new when you do the questions. Those are the difficult ones. When you ask me which is really difficult from the student's point of view, capital structure theory and capital budgeting. Yeah. Difficult when they don't practice ratios analysis. Isn't it? That's it. As such, there is no such difficult concepts here. If you practice, you will do well. Shall we move on to the question now? Before that, I want every one of you, please write down these 4 formulae first.
Written? All the four. Tell me what is the first formula? V equal to B plus S. Sir, what is B? B means value of debt. Value of, then why sir D kada? Why they mention B? Borrowing is the point there. Okay? S means share capital fund. That's why they write S. Actually S means value of equity. Value of what? Equity. Tell me. V equal to value of debt plus value of equity. Sir, what is the total value of a company? Total value of equity and debt is the total value of company. Correct? What is the value of debt? I by KD. I by debt DC. Again, you tell me, I will write. What is the formula for KD in cost of capital chapter if it is a irredeemable debt? D I into 1 minus T whole divided by NP. Do you know what is NP? Value of the debt. NP means a purchase price. NP means what? You will purchase at what price? You will purchase at what price? Market price. You will purchase at what price? Here I will write it as B. Value of debt. Value of debt. Okay. Tax is not there. What to write? B equal to I by KD. That's how this formula came. That's why in this chapter there are 5 assumptions. There are only 2 sources of finance. There are only 2 sources of finance. Tell me, what are those? Equity, debt. Debt is a irredeemable debt. That's why this formula. No taxes. That's why this formula. Understood the point or not? Tax or no tax? No tax. Debt is which debt? Redeemable or irredeemable? Irredeemable debt. Listening? 100% dividend payout. 100%? 100%? What do you mean 100% dividend payout? Earnings after tax is total dividend paid. Earnings after tax is the total dividend paid. Okay. Next. All investors will have same expectation. Means KE is same for every person. Is the assumptions. If you don't know these 5 assumptions, you can never understand this chapter. So read all the 5 assumptions properly. Okay? Shall we begin? Let's start. First tell me, what is the formula number 1? V equal to B plus S. Second formula? B equal to I by KD. Why tax is not, why 1 minus T is not there? Tax is not there. Clear? Understood? What is B? It is nothing but NP. NP is for one bond. B is for total bonds together. Listening? Next one. See here. Preference share capital will be there or will not be there?
No.
Preference share capital will be there or will not be there? Will be. Assumption like we have written. There are only 2 sources of finance. Means what? Debentures and equity. And debt and equity. Means what is not there? Preference is not there. Correct? Okay. 1 point completed. Tell me. Income statement if you write EBIT minus interest will be called as what? Answer. Wrong. Earnings available to equity shareholders are EAT because tax is not there, preference dividend is not there. Whatever is EBT will become the earnings to the shareholders. Correct or not? So tell me, technically can I write like this? EBIT minus interest will belong to whom? Will belong to whom? Equity shareholders. Correct or not? Tell me. Formula for P naught through earnings. Don't forget. Formula of P KE. At least tell this. There you can tell P naught. Earnings divided by P. Correct? P means what? P means what? Price per share. I want total value. I can write it yes. I can write it yes. By E. Equal to what? K. Now I will ask a question. Answer properly. What is this E? E and E means what here? EBIT minus interest divided by KE equal to yes. Correct? That's how this formula came. Understood? Tell me what is the formula for yes? EBIT minus I. What is EBIT? Earnings before interest and tax. That belongs to whom? EBIT belongs to whom? Equity or debtor? Both equity as well as debt. Both equity. In that I belongs to whom? Debenture. If you remove I from EBIT, remaining will belong to whom? Equity. Divided by that particular KE will give you the value of the share. Clear or not? Next. Tell me. V equal to formula? B by yes, sir. B plus yes. What is the B? I by KD. Plus what is yes? EBIT minus I whole divided by KE. Both together KO. KD, KE combination is called as what? KO. I plus EBIT minus I plus I cancel. EBIT by KO. That's how this formula came. Beyond this revision class, don't expect great things to happen. Great thing, if anything to happen, that is your understanding. Beyond this analysis, I don't want to waste time. Understood the point up to here? Actually, I just wanted to tell 4 formula, mug up and continue. But at least if I can give how it came, it will become easy for you when you practice. Clear? So now tell me. Tell all the 4. No, not telling. Write. Already you have written, huh? Write again. You have to remember. Write down. V equal to B plus yes. Second. B equal to I by KD. S equal to EBIT minus I whole divided by KE. V equal to EBIT whole divided by KO. This is clarity. Now any question if it comes you will be able to answer. Up to here everyone got the clarity? Okay. Now let us start doing the problems now. Illustration 1. Capital structure illustrations also we have to do. See the question. Or you do one thing. See here. I will put it on the screen. Read. Read the question everyone. Rupa Limited's EBIT is 5 lakh. Company has 10% 20 lakh debentures. Equity calculation rate KE is 16%. What you are required to calculate? Market value of equity and market value of firm. And next one, overall cost of capital. Overall cost of capital. Okay. First, you tell me, I will ask. 1 minute. Listen first. What is the EBIT? Answer. Market value of equity means he is asking B A, V A, S A. Market value of equity means V, B, S. Answer. Tell the formula for yes. EBIT minus I whole divided by KE. What is EBIT? 5 lakh. Minus what is the I? 20 lakh interest I ante. I am asking number. 2 lakh into 10, 20 lakh into 10%. How much? 2 lakh. Divided by what is the KE? 3 lakh divided by 16%. 18 lakh. What is this 18 lakh 75,000? Value of the shares, equity. Correct? Already value of debt we know. How much? 20 lakh. What is the total value of the firm? B plus S, that equal to 38 lakh 75,000. He is asking KO. Tell the formula for KO. V equal to EBIT divided by KO. KO equal to EBIT divided by V. EBIT is how much? 5 lakh divided by V, 38 lakh 75,000 into 100. 12.90. Over. There. Right down. Have you done? Have you done on your own? Able to do? Next. Or else do you know what problem will come? I will tell you. Why this chapter is always a difficult one. Let me tell you. Examiner like this question they will ask. Student will see this. Immediately cost of capital mind will go. Because calculate overall cost of capital means anyone will think about which chapter? Obviously cost of capital chapter they will think. Mind will always rotate inside the cost of capital. Cost of capital where, how to do this, how to do, but they don't do this chapter at all. Understood? But actually question was not asked from the cost of capital. Tested from capital structure theories. Understood? So, at least to understand from where the question has come, you need to do this chapter. Done. Now let us do second. See there. Indra Limited has EBIT of 1 lakh. Company makes use of both debt and equity. Firm has 10% debentures of 5 lakh. Firm's equity capitalization rate is 15%. Calculate the total value of the firm and overall cost of capital. Can we do it together? Start. Tell me. To know the total value of the firm, first we need to know the value of equity. S equal to formula I divided by K. What is the EBIT? Minus I divided by KE. Value please. 3,33,000? 333. Okay. Points will you. So what is this answer? Answer for yes. V equal to S or B plus S or? So total it will become how much? 8,33,333. What is the formula for KO? EBIT divided by value. 1 lakh divided by 8,33,333 into 100.
12%.
How much?
12%.
See the screen? See the screen? Answer over. Next question. Okay, ba? Illustration 1 and illustration 2. Everyone got the clarity? Next. From here, lot of concentration is required. Listen. Net income approach. Net income approach. Before we start with net income approach, I will give you one clarity on one important thing which you already know. Just we are going to reinforce the concept. Once that is done, then we will be going into the understanding of net income approach. Okay, listen what I say. Number 1, net income approach says like this: more debt in the capital structure. More debt in the capital structure. More will be the WD, weight of debt. More the weight of debt, lesser will be the cost of capital in the company. Lesser the cost of capital, more the value of company. These many things they said. Instead of telling entire net income approach, just in 4 points we can tell. But I will tell you the meaning of all these things now. Listening? Okay. Let us assume this way. KD 6%, KE 12%. KE 12%. You take calculator and tell me. Okay? We are using 4 cases of weights. First case, 50:50, 75:25, 90:100, 100. Do you know what does it mean? 50 debt to 50 equity, 75 debt to 25 equity, 90 debt to 10, 90 debt to 10 equity, 100 debt to 0 equity. Let us assume, understand. Clear everyone? Now tell me, what is KD? They see there and tell, yeah, how much is a KD? How much is a KE? Now tell me, in the first case, how much debt? 50% debt. How much equity? 50% equity. What is the KO? KO formula is what? WD KD plus WE KE. 50% into 6, 3. 50% into 12, 6. How much? 9. Listening? Understood? 75% of 6. 4.5 plus 25% of 12. Total 7.5. Okay, next. 90% of 6, 5.4. 10% of 12, 1.2. How much? 6.6. Finally, how much? 6. Now tell me, as the numbers are passing by, what is increasing? Equity component is increasing, debt component is increasing. Loudly. Debt is increasing. That's what I said. As the debt increases, WD increases. As the WD increases, KE will reduce. 9 became 7.5, 7.5 became 6.6, 6.6 became 6. Yesterday's class I told you one point, if you remember. As the PV factor is rising, value will fall. Yesterday only I told you. As the PV factor increasing, value will fall. PV factor decreasing, value will increase. So 6% value will increase. Understood? Let us assume this way. EBIT of the company is 100 crore. How many crores, sir? Here 100 crore divided. What is the value of the company? Fourth formula? EBIT by KO. Here 100 by 9, 100 by 7.5, 100 by 6.6, 100 by 6. Tell all the 4. First one how much? 4 ones, sir. Next. 1, 3. Okay, next. 15? Next. 1667. Now you tell me, value increased or decreased? Increase or decrease? Increase. As the KO is reducing or increasing? How many times I should tell you? As the KO is reducing or increasing? KO is reducing, value is increasing. That's what we said here. Proof. Tell me now. As the debt component is increasing, WD will increase. As the WD increases, KO will reduce. As the KO reduces, value will increase. Clear? That means which companies will have the highest value? Companies having full debt. Companies having will have what value? Very good value. As per which approach? Net income approach. So tell me, as per net income approach, companies which are financed by full debt will have the best value. Companies which are financed by lesser debt will have lesser value. Is the logic of net income approach. Understood? Now you tell me, capital structure decision will decide the value of the company or not? Yes. If more debt is there, more value will come. Less debt is there, less value will come. Therefore, the capital structure proportion will decide the value of the company. This is what who said? This is what who said? Net income approach. One economist with the name Durand, D-U-R-A-N-D, Durand said this concept. Understood? Yes, see here. You are listening as if this is the first time in your life listening to net income approach. Read this. Pack your bags and come to Chennai. Read this. Have you read? Answer. Why debt is always good for company? First thing, KDA having tax shield. Second thing, KD is already lesser when you compare with equity. That lesser is again having a tax benefit. So two benefits debt is giving. The benefit one, lower cost. Debt benefit two, tax benefit, tax saving. Two benefits they are giving. Correct or not? Who is giving? Who is giving? Debt. Because of that, more debt in the capital structure, two benefits will be coming in more. Automatically the overall value of the company will raise. This is what said by whom? Durand in net income approach. Funniest part, net operating income approach also he only have written. Contradictory to net income approach. Okay? So that we will read it separately and do. Up to here everyone understood clearly? Yeah? Now see here. Let us do one question. But listen carefully one point. Whenever question is asked on net income approach or net operating income approach, any approach, first you need to understand this entire chapter will be dependent on comparative analysis. Means two companies they will give. How many? Two company details they will give. Both the companies will be having same business, same assets, same EBIT. One company will have only equity, one company will have debt and equity. Which company have more value is the question there. Understood the point or not? That will be dependent. Net income approach la debt company, net operating income approach la? No. Whether you finance by equity, whether you finance by debt, value of the company will not change. Is the argument of net operating income approach. Listening? What net income approach says? What net income approach says? More debt in the capital. ఎన్నిసార్లు చెప్పాలయ్యా? More debt in the capital structure, more will be the weight of debt. More the weight of debt, lesser the KO. Lesser the KO, higher the value. Clear? See the question. Amita Limited's EBIT is how much? 5 lakh. Firm's cost of debt 10%. Firm currently has how much debt? 15 lakh. Overall cost of capital how much? 15. Calculate the total value of the firm and cost of equity. Can you calculate here itself? Tell. Total value of the firm. First what we need to calculate? First what we need to calculate? Value of equity. Means what? Yes. Divided by K. What is EBIT? 5 lakh. Minus interest 1,50,000. Divided by KE. No, that's why you cannot do that way. KE is given a missing figure. Missing figure itself is KE. Listening everyone? Listen. How to do? Listen first. So up to here everyone understood? Answer. See the screen. Practical problem number, illustration number 4. Tell me one by one. Don't do. First problem, net income. Let me do. See here. EBIT minus interest, EAT. EAT. Correct or not? Tell me. What is the EBIT? Very good. What is the interest? What is earnings available? Up to here everyone understood clearly? Next. Tell me, what is the data given? KO they have given in the question or not? How much is the KO? How much? 15%. Okay. Now you tell me. EBIT divided by KO will give the value of the company. Correct? Tell me, what is the value of the company? Tell me. EBIT divided by KO. Tell me. 33 lakh. What is this? Total value of company. From this, if I remove the value of the debtor, which is how much? 5 lakh or 15 lakh? 15 lakh. I will get the value of S. Tell me how much? 333. Now S is there, V is there, B is there, S is there. Can I calculate KE or not? Tell me, what is the formula for the KE? KE equal to? I'm not telling. KE equal to EBIT minus I whole divided by S. So KE equal to EBIT minus I means what? 3 lakh 50 divided by 18,33,333. 19 point? See here. Done. Answer is completed. Do it. Understood? Everyone understood how to do? Done. Illustration 5. See here. Before going into illustration 5, let me also explain the concept of which concept? Net operating income. First, tell me everyone understood the concept of net income approach clearly? Next one we are going to do is a net operating income approach. How this net operating income approach works? Let's try to understand. See here, important area. Net operating income approach says that, you tell me the answer given by the net income approach first. More debt, more will be the WD. More the WD, more the WD, lesser is the KO. Lesser is the KO, more is the value. Correct? But net operating income approach, they said, this is only one angle inside this. There is a second dimension. Second dimension is the risk dimension. Okay? What is KE? Cost of what? Equity. Equity risk is more. They will ask same KE, higher KE. Equity is taking more risk. They will ask more KE, lesser KE. More KE. More the KE, more the KO. More the KO, lesser the value. Do you know what this approach says? You saw only one dimension. Higher the debt, higher WD. Higher WD, lower KO. Lower KO, higher value. Correct. Undoubtedly right. But that is only one dimension. There is a second dimension in which we should understand. That second dimension is risk dimension. See the screen. Tell me. More debt. More risk to the equity. Because from their income only they have to pay that extra interest. Debenture holders will ask what return? Interest. More interest. Who should pay? EBIT only should pay. Correct or not? EBIT comes out of what? Business. Business is done by debt holders or equity holders? Equity holder. Means from their pockets they have to pay higher interest now. Means who is sacrificing interest and paying? Therefore, whenever more debt is there, more finance risk is there. More? You tell me one answer. EBIT 100. Interest 50. Tax not there. 50 rupees belongs to me or not? Answer. Next. I raised 80% by debt. Okay. 100 rupees EBIT. 100 rupee? 80 rupee debt. Now what is remaining to me? 20 rupees only. That means my risk of revenue is reducing or not? So tell me. First stage. One dimension you tell first. Higher the debt, higher the WD. Higher the WD, lower the KO. Lower the KO, higher the value. This is one dimension. What is the second neutral dimension again? Higher the debt, higher the risk to equity. Higher the risk to equity, higher the KE. Higher the KE, higher the KO. Higher the KO, lower the value. The higher value here will offset by lower value here. Value of the company remains neutral. Is the argument of net operating income approach. Understood the point clearly or not? So, where raise is there, there fall is also there. Because of that, because of debt, market price is increasing. Because of risk to equity, they are asking more KE. More KE means more KO. More KO means lesser value. How much upward side value is increased, that much to the downward side value will come down. 10 rupee increase, 10 rupee decrease, value of the company will remain constant. It will not change is the argument of net operating income approach. Everybody understood the concept or not? Understood? Net income approach ki operating income approach, how to understand? See, X, Y, two companies are there. Two companies are similar in everything. Same business, same assets, same EBIT. Clear? Same business, same assets, same EBIT. The only difference between both the companies is what? One is debt financing and equity, another one is only equity financing. Clear? Who will have more value? Who will have more value? Which company will have more value? Company with data, company without data. Wrong answer. Net income approach says company with debt. Net operating income approach says anything is okay. Understood? So, in net income approach, in what approach? This point, if you don't listen, gallante. Please listen carefully. This point. In net income approach, which approach? KE of both the companies is same. KE of both the companies is same. KE of both the companies is same. In which approach? Okay. So, same. Okay, next. Under net income approach I am talking. Value. Type of company. Equity plus debt. Listening? Next. Value. Lower value, higher value. Lower value, higher value. Understood? KO. Higher KO, lower KO. Higher KO, lower KO. Same thing if you tell for net operating income approach. How much will be KO? KO is same. What is same? KO is same. When KO is same, value is same, KE will change now. KE will change. Why KE will change? Companies having higher debt will have higher KE. Because of more debt, more risk to equity. Because of more debt, more risk to equity. Because of more risk to equity, more KE. Correct? From this what you have to understand? In the question, again repeating, in the question, KO is already given. KO is, and they are not asking you to calculate. Already what is given? KO. They said the KO is same. It's a net operating income question. Which question? Net operating income question. KO ne you have to calculate. Net income approach question. Listening or not? Now I will ask. KE should be calculated. Net operating income approach. Because net income approach, the KE is a constant. Listening or not, everyone? Answer. Value is already given in the question. Value of the company is already given in the question. Net operating income. Because net operating income approach, whether you finance your company either by equity or by debt and equity, value will be same. Listening? Rather than discussing like this, let's do one question on this, then you will get full clarity as to what I am saying. Yes. Shall we start? Yes, sir. Take question number 5. Take question number 5. Alpha Limited and Beta Limited are identical, similar companies, except for their capital structure. I told you in this chapter there will be how many companies given in the exam? Two companies they will give. Both are same assets, same business, everything same. Only thing is one will be only debt equity financing, and the one will be equity and debt financing. Start. Alpha Limited and Beta Limited are different companies are identical, except for their capital structure. Alpha Limited has how much debt? 50% debt, 50% equity. Whereas Beta Limited is having 20% debt and 80% debt. Both are having debt equity in a different proportion. All percentage in market value. Borrowing rate is 8%, no tax. If you own 2% of the shares of Alpha Limited, determine your return. If the company has net income, operating income of 3,60,000 and overall capitalization rate is 18%. Already what is given in the question? KO is given in the question. Clear or not? KO given in the question means what? That's it. Calculate the implied rate of return. Beta Limited has same net operating income as Alpha. Calculate the implied rate of return of equity of Beta Limited. Analyze why does it differ from that of Alpha. Very, 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 very good question. Read the question. It will give the answer. First read it. Read the question. Read the question. See here. Alpha Limited, Beta Limited are identical. One company is having 50-50 equity debt, another company is having 20-80 equity debt. Borrowing rate of both the companies is 8%. If you own 2% of the shares in Alpha Limited, how much shares? 2% if you hold in Alpha Limited. Determine your return. If the company's net operating income is how much? 3,60,000. Imagine this way. What is the net operating income? Alpha. Alpha. Net operating income means what? EBTI, EBITI. What is it? EBIT. How much? 3,60,000. You are holding debtor, you are holding the shares. Being a shareholder, you will wait for EBITI, EBIT minus interest. EBIT minus interest. Take calculator. EBIT, how much? 3,60,000. Interest is how much? Interest is how much? See, 50% equity, 50% debt. Correct? Answer. Okay. Now tell me. If I know the total value of the company, if I know the total value of the company, in that 50% is the value of debt. On that I will apply this 8% value. First we need to calculate the value of the company. Shall we do it together? Start. Step 1. Calculation of value of company. Value of company. Don't wait for me. Tell the answer. What is the formula? EBIT divided by KO. Okay. What is EBIT? Divided by KO. Value please. 20 lakhs. Next. Number 1. Number 2. B equal to 20 lakh into 50%. 10 lakhs. Understood? Next. Step 3. Okay? Next. Write down. S equal to. Okay? S equal to. How much? 10 lakh. S equal to 10 lakh. How you got this 10 lakh? Total value of the company is how much? 20. In that already B is how much? 10. And balance S is how much? 10. Understood? Okay. Next. Number 4. Tell and do. We want what? KE. We want what? KE. Before that, I will ask you one question. Tell me, how much is the debt?
10 lakhs.
How much?
10 lakhs.
10 lakh. How much is the equity?
10 lakhs.
If you are holding 10 lakh, what is the KE? Given in the question to be calculated. Loudly, sir.
To be calculated.
But I want one answer. Debt is 10 lakh. EBIT is 3 lakh 60. EBIT is?
3 lakhs 60.
Can you please tell me what is EBIT minus IE? 3 lakh 60 minus how much? 80,000. Value please.
2 lakh.
Sorry, 2 lakh.
80,000.
Right. We have S value, we have EBIT minus I value. Can we calculate the KE or not? Before calculating KE, I want one answer. What is this 2 lakh 80? What is this 2 lakh 80? What is simple question also you are not answering here. What is this 2 lakh 80? E80. Okay, you are holding how much percentage of shares in the company? 2%. In this 2% you will get. Write down. Return to shareholder. 2,80,000 into 2% value.
5,600.
That's it. First answer over. Done? How much is the answer? 5,600. Next. One bit over. Calculate the implied rate of return on equity. Now he is asking KE. Sixth step. KE. Tell the formula of a KE. EBIT minus I whole divided by yes. What is EBIT minus I? 2,80,000 divided by 10 lakh.
28%.
How much? That's it. Answer is over. Understood the first question or not, everyone? See here, illustration 5. Let me show you the answer. You will also get clarity. Okay, na? Satisfied, everyone? 5,600, 28%. That's why you follow the procedure I said. Any answer you will be able to do in exam. Up to here, everyone understood clearly? Next. This is alpha limited. Keep the heading beta limited. They ask the same type of question for beta limited also. See there. Calculate the implied rate of return of equity on beta limited. Okay? Tell me. In beta limited, what is the EBIT? In beta limited, what is the EBIT? Same, identical except for the capital structure. Correct? Tell me. Right now. Which company we are doing? Beta limited. Okay. Beta limited. Tell the answer one by one. What is the EBIT? 3,60,000 minus interest. Now you tell me. What is the total capital structure? What is the total capital? Amount here, total capital 20 lakh. In that, how much is the debt? How much is the equity? 20% debt, 80% equity. Okay, now tell me, how much is the 20% of 20 lakhs? 4 lakhs. On that 4 lakh, the interest will be charged at the rate of how much percent? Multiply.
22,000.
Tell the EBIT minus I value.
3,28,000.
3 lakh? 3,28,000. Okay. Next. Okay. S equal to how much?
16 lakhs.
Oh, sorry, 16 lakh. Correct. 16 lakh. Can you calculate KE? How to calculate KE? 3,28,000 divided by 16 lakh. 20.5. Listen carefully. As per net operating income approach,
What he said? More debt? You are not answering again. More debt? More WD. More WD, lesser KO. Lesser KO, higher value. Lesser KO, higher value. But this is not final. Second dimension is also there. More debt, more WD. More WD, higher the risk to equity. Higher the risk to equity, higher the KE. That's why 20% debt ki 20.5, 80%, 50% debt ki 28% KE. Hence proved. Understood or not everyone? If you listen, you will understand. I told you already what is the thesis of this particular net operating income. Understood the concept clearly? So more debt in the capital structure, more the KE will be. That's why 50-50 debt time la KE is 28, 20:80 case la it came to 20.5. Understood the point clearly? Okay, we have KE now. How much is the KE?
20.5.
How much is the KE? 20.5. Now you answer to my question. What he is asking? Calculate the implied rate of return on equity of Alpha Limited. How much is the final answer? 20.5. That's it. Answer is completed. See here. See the same. 20.5. That's it. Last one is only a theoretical answer. That's it. Answer over. Net income approach completed. Net operating income approach also completed. Listening everyone? Listen. This is not final. I have some good questions with me. We will do one question out of them. Take this question. Have you noted the question? Tell me now. There are how many companies in the question? Two companies. One is J and the one is M. EBIT is same. Debt 9 lakh, no debt. KD 10%, KE, KO. There KE 15, since no debt is there, KE will become KO. Okay, it's a all equity company. We are first going to do using which approach? NI. Keep the heading. Calculations using NI. Calculations using NI approach. Calculations using NI approach. Shall we continue? You will do now, not me. Tell me the answer and do. NI approach, what will be same between any two companies? KE will be same. What will be same? KE. Simple logic. KE will be same in NI. KE will change in NOI. That's it. Remember this. Clear? What is the KE in the first company? The M? What is the KE in M Limited? 15% you should take in the other side also. Okay? Let's do it together. Will you help me with the numbers? Tell the numbers properly. Do it along with me. Which approach we are using? NI. Tell. J, M. Tell you. What is the EBIT? 3 lakh. Right now. 3 lakh. 3 lakh. Next. Minus interest. First company, 9 lakh is there, 10% is the cost. How much? 90,000. Here nothing. 2 lakh, 10,000, and next one 3 lakh. Okay, wow. KE will be same for both the companies. Just now we spoke or not? So tell me, KE equal to 15%, 15%. Okay. Tell me, KD already given how much? 10%, nothing. KO, we have to calculate. Let us now do this. I will ask you 3 questions answer. I want the answer for BSV. Tell me, what is the answer for BSV? What is the value of debt? Debt to value also you are checking 9 lakh. Next, equity value. EBIT minus I whole divided by KE. Do it.
14 lakh.
How much?
14 lakh.
14 lakh.
20 lakh.
Next, here how much? 23 lakhs. 20 lakh. What is the value of the company?
23 lakh.
23 lakh. And here how much? 20 lakh. Sir, we have BSV. Can we calculate the KO or not? What is the formula for KO? EBIT by V. EBIT by V. 3 lakh divided by 23 lakh.
13.0.
13.0? Next, other side. 3 lakh divided by 20%. 20 lakh. That's it. Answer is over. Clear? Tell me, what net income approach said? What net income approach said? More debt. See here. Observations. See here. More debt. More debt. Very bad response. Start. More debt. More WD. More WD. Lesser the KO. Lesser the KO, more the value. Proved. Understood the point clearly or not? Theoretically what we discussed, practically also we proved this. Shall we do the same type of question for net operating income? Then you will get full clarity. Undoubtedly you will get a clarity on that. Take this question. By the way, answer. In case of net operating income approach, which is a constant? KO is constant because values are same. Okay, write down. Write down the question properly. Note it down. Okay. Have you noted the question?
Yes, sir.
Now, same type we will do for net operating income approach. Start. Tell me first. How many companies are there? 2. Tell me. What is the EBIT? 3 lakh. Here also EBIT will be 3 lakh. Next.
Interest, how much? 90,000. Here, nil, nothing is there. Next, EBIT minus I, how much? 2,10,000, 3 lakh. What is the assumption of net operating income? KO is constant. What is the KO already given? 15. So, once you know this, KO, KD, already known KD, how much? 10% and nil. Next, V, again I want this. B, yes, V. Now missing figure is KE. Listening, tell me, what is the B? 9 lakh dash. Yes, sir. Yes, sir. Total value of the company is 20 lakh. But we need to do that. Okay? Tell the formula for V. EBIT by KO. What is EBIT? 3 lakh divided by KO. 15. How much? 20 lakh. Here also how much? 20 lakh. Tell me. V we know, B we know. S will be how much? 11 lakh. And here it will be 20 lakh. KE. KE. How to calculate KE? EBIT minus I divided by S. So 2,10,000 divided by 11 lakh. 19.09. Other side? That's it. What net operating income approach said? Start. More debt. More debt. More WD. More WD. Lower KO. Lower KO. Higher value. Next. More debt. More WD. More WD. Higher the risk. Higher the risk. Higher the KE. Higher the KE. Higher the KO. Higher the KO. Lower the value. Lower the both will offset each other. Constantly the value will maintain. That's why here also 20 lakh, here also 20 lakh. Listening? But what will change? KE will change. Why KE will change? Companies having more debt will have more KE. That's why more KE is there here. Again, hence proved. Clear everyone? With this, all the concepts in this area also completed except one area. What is it? Modigliani Miller. Keep the heading. Modigliani Miller model. I will tell you the logic of Modigliani Miller. Okay, in the today's session. Two problems other we will do in the next session first and complete. Because time will not permit. Okay, after this I have another class, that's why. Okay, so that's why I will be having final class. So that's why. I will first explain the full idea about Modigliani Miller concept. Problem only for 30 minutes will be taking. Next session of first I will do that.
Yes, sir.
Yeah. Once the Modigliani Miller problem is completed, we will go into the last trump card, capital budgeting. Clear?
Yes, sir.
Let's begin. Now, answer. What is the name of the concept? Modigliani and Miller model. Let me explain what is the idea behind this. What this model says is irrelevance theory. Whether you finance by equity or you finance by debt or debt and equity, value of the company will not change, will be same. Means companies having same EBIT, companies having same business, companies having same assets. Why value should change because of capital structure? Listening or not? Why they should have a different value because of capital structure? They will not have. Companies having same EBIT, same assets, same business necessarily should have same value. No sir, values are changing. See, one company is having 60 lakhs, another company is having only 55 lakhs. If that be the case, this change difference is a temporary difference.
That is not a permanent difference between both. Listening. That is not a permanent difference between both. That is only a temporary difference that is happening in the economy. Okay? Now listen. Answer to my question. You wanted to purchase an Apple phone. Okay? Say for example, in Jubilee Hills, there is a shop. There they are selling it at 1,70,000. Same phone, 16 Pro Max, 512 GB memory, everything is same like what I am using. Another shop is in, say for example, Banjara Hills. There it is available at 1,60,000 rupees. What you will do? What you will do? I am asking normally, what you will do? No. Do you know what I will do? I will buy in Banjara Hills and sell in Jubilee Hills. Are you understanding the point or not? Then what is the difference between normal person and chartered accountant? Everything we will see money. So now answer my question. What necessarily we should do? Buy in Banjara Hills, sell in Jubilee Hills. Listening, Then all the people in Hyderabad, what they will do from the very next day, once they come to know about it, buy the phone in Banjara. So tell me, 16 Pro Max, iPhone, blue color, every spec is same. Price should be same or different? Answer. But here what happened? Difference is there. Clear? When difference is coming, what people will do? They will buy where the phone is undervalued and they will sell where the phone is overvalued. Where the phone is? We will buy where the phone is undervalued. Sell the phone where it is overvalued. But you must understand another contradictory effect because of this. As more number of people comes to Banjara Hills and start buying, demand will increase, automatically what will happen? Price will increase, both will come into constant at one point of time. This concept Modi and Miller calls as arbitrage. Understood the point or not? That problems will come in exam. Understood the point or not? Okay? Summary of this entire concept is very simple. Two companies which are having same business, same asset, same kind of EBIT cannot have two values. Both the companies must have same valuation. Understood the point or not? But if there is a difference by any reason, that difference is only temporary difference. That's not a permanent difference. Market will adjust that very quickly. Listening? In the meanwhile, before the market adjusts, what people can do? Jump into the market, buy the underpriced asset, sell the overpriced asset, you will get the minimum gain. How that arbitrage happens, we are going to see. In that there are again two concepts. Primary arbitrage, secondary arbitrage. Primary arbitrage is a situation where companies with debt will have more value than companies only equity. Secondary arbitrage is companies having equity will have more value than companies with both debt and equity. Isn't it?
Yes, sir.
Companies which is having debt are having financial leverage or not. Therefore, they are called as levered companies. Called as what company? Levered company. Company not having a debt is called as what? Unlevered company. Levered company value more than unlevered, primary arbitrage. Unlevered company value more than levered company, secondary arbitrage. In case of primary arbitrage, to get the gain, jump from levered to unlevered. Secondary arbitrage, jump from unlevered to levered. How to jump from one company to another company and making the gain is a subject matter of discussion in the Modi and Miller. Understood or not? How that works, everything. We will do 3-4 problems in that and we will complete this particular chapter called as capital structure theories. Everybody understood the concept? Idea understood first. Idea is understood, problems will be completed just like this. Clear? Sir, after listening to the capital structure theories discussion today, did there is any change that you find in yourself in doing the problem, sir? Just like that you can do capital structure if you understand the concept clearly. Just for a revision session by understanding formula, if you can do like this, if you can understand fully, just 1 hour if you can understand, efforts is not important. Right way of putting the efforts is important. So understanding, everyone will do capital structure chapter, but only few will do it meaning. Once you understand that, you can easily cross these particular concepts. Okay. Tomorrow's session we will continue with the Modigliani-Miller at the first part. 1 hour I will take. 1 hour to 1.5 hours. We will take and complete because that's a guaranteed question in the exam. Which one? Modigliani-Miller. 7-8 times this question came in exam. Students are leaving. And here also confusion. When they see Modigliani-Miller, dividends from Modigliani-Miller they are thinking. Here there is another Modigliani-Miller concept. So this Modigliani-Miller problem we will do in the next session. 1 hour to 1.5 hours you take. Because in all the questions done till now, taxes are taken or not taken. If taxes come in the question, that also we have to do. I don't want to leave any point in capital structures chapter. That's why yesterday have we done all the problems in the EBIT, EPS or not? Now we are doing these. Illustrations also we are doing in this chapter. Correct? So tomorrow 1.5 hours we will spend, complete this. Then we will be going into the next area called as capital budgeting. Clear? Capital budgeting also every model one problem we will do. Clear? Accounting rate of return, payback period, discounted payback period, NPV, IRR, modified NPV, modified IRR. Okay. After that finally the calculation of EAB and EAC. That's it. After that your practice has to start. Clear everyone in the class? Everyone clear? Thank you. Meet you in the next class. So very good morning. So in the last session, we started with the concept of Modigliani and Miller. I just told you the introduction to the concept, how it actually works. So first let us complete the questions on Modigliani-Miller aspect. Let's complete it. Then we will be coming into the last area of capital structures called as capital structure theories with the taxation. Till now we have seen all the concepts only without tax. But if tax is involved, how to tackle is what we are going to see there. Clear? Before going into this, first Modigliani-Miller model, let us try to understand. See here. What this model tries to tell. See here. Two companies which are similar in terms of business, assets, EBIT. Business, assets and EBIT. Volume reduce. So companies which are similar in terms of business, assets, reduce chesa. Cut reduce in the line. Light. Okay. So company. So companies which are similar in terms of business, assets and EBIT, their value also must be same. If any one company value is more than another company or any company value is less than another company, this is because of because of what? Economic imperfection. Something is going wrong. That's why that happened. See here, I will show you. See there. Companies which are having same business, companies which are having same assets, companies which are having same EBIT cannot have different values, should have same values is the argument of Modigliani-Miller. However, sometimes even though companies are having same assets, business and EBIT, sometimes value of the company will be more than another company. Such a situation is called as economic imperfection, which is temporary in nature. In the other class, I told you the example or not. So, what is the idea behind this concept? Even though there is a market imperfection, that imperfection is a permanent or a temporary. It is a temporary thing only. It will not continue forever. Understood? So, therefore, what they said, whenever value of one company is more than value of another company, though both the companies are having same EBIT, same assets and same business, it is because of some imperfection happening in the market. So people can jump into the market when that situations are going on and they can make a gain out of it. But making a gain out of it is a permanent or a temporary? Temporary only. Once the market comes to know about it, it will correct itself. Clear everyone? On this, Modignan Miller concept starts. The other day I told you the entire introduction to the topic, if you remember. What is same? What is same? What is same? What should be same? If value of one company is not equal to another company, this is permanent or temporary? What do you call this temporary thing called as? Arbitrage. That economic imperfection out of which you will make a profit. That concept is called as what? Arbitrage is a concept of read it. Riskless gain. What gain? Without making any risk, you can make a gain. Example, simple to understand. The other day I told you, if a product is very costly in one place, cheaper in another place, what any person can do? I told you, na, in Jubilee Hills, the phone is costing 1 lakh. Same is available in Banjara Hills at 80,000. What a person can do? Buy in Banjara Hills, sell in Jubilee Hills. Why? You will make a 20,000 rupee gain. With risk or without risk? That's called as a riskless gain. Product price should be same across any place. If the product pricing is not same, people can make an obvious gain out of it. Listening or not, everyone? So that's concept of arbitrage. Simply, there is a company 1. There is a company 2. Company 1 is equity financed. Company 2 is equity and debt finance. Listening? Both the companies are having same assets, same business, same EBIT. Listening? Huh? But capital structures are not same. Why? One company is what company? Unlevered company. Another company is a levered company. What do you mean by unlevered? No debt. Levered, debt is also there. It's called as a levered company. Listening? What is an unlevered company? Any company which does not have debt is called as unlevered company. Means those companies cannot get financial leverage. What leverage? Financial leverage those companies cannot get. Okay, those are unlevered. These are levered. So company 1 is equity, company 2 is equity and debt. Company 1, company 2, company 3 have the same assets, same business, same EBIT. Therefore, the value of unlevered should be equal to value of levered. If really this is happening, no arbitrage. Listening? Sometimes value of unlevered can be more than value of levered, or value of unlevered can be less than value of levered. This situation is called as primary arbitrage. This situation is called as secondary arbitrage. What do you mean by primary arbitrage? Value of levered company will be more than value of unlevered company. Reverse. Secondary arbitrage means value of unlevered company will be more than value of levered company. Everyone understood the point clearly? Shall we do a problem? Start. Very, 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 very important and difficult area in this chapter. So please keenly observe the points. Note down this question once. Note down this question. Completed writing? Have you written the question? Okay. See here. I will make you to do 2 questions. After those 2 questions, we will do study material questions. Then you will understand the clarity in the Modigliani-Miller aspect in capital structures. Shall we begin? Listen. If you can understand this problem, there can be no question that can be tested in exam on Modigliani-Miller. Concentrate properly. See the screen. Observation. How many companies are there? In the particular question, how many companies are there? 2 companies. One is unlevered, another one is levered. What do you mean by unlevered? What do you mean by unlevered? Companies which are having data, not having a data. Very good. Tell me. Both the companies are having how much EBIT? What you understand from that? Same EBIT, same business, same value of assets are assumptions. Okay? EBIT not an assumption. They have only given 750. Listening. When you are getting same income, I am also getting same income. How much value I have, that much value you also should have. Correct or not? But see there and tell. What is the value of S Limited? 50 lakh. What is the value of B Limited? 52 lakh 50,000. 52 lakh 50,000. So tell me, what is the value of S Limited? 50 lakh. What is the value of B Limited? 52 lakh 50,000. Means both are having the same value or different value. So simply, I will tell this way. Both of us are doing same business. Both of us are doing same business. Both of us are having same assets. Both of us are having same EBIT. Then me and you should have same value. But I am having 50, you are having 52 lakh 50,000. Now you tell me, I will ask. In this situation, which is an undervalued company, which is overvalued company? Everyone. S is undervalued. B is overvalue. Correct or not? Below, see the question. An investor holds 10% equity shares of which company? B Limited. For him, show the arbitrage process. Now you tell me, I will ask a question. Tell me, you are a shareholder of S Limited or B Limited? You are a shareholder of S Limited, B Limited. B Limited, you are a shareholder. So you are not a shareholder of S Limited. You are a shareholder of B Limited. From this, what is the moral of the story? If you are a shareholder in B Limited, tell me, actually, B Limited, S Limited should have how much value? Value, tell me. 50 lakh. But how much B Limited value is? 52 lakh, 50,000. Means that is not because of performance of B. If really that is because of performance of B, your profit should be more than my profit. Correct or not? And this is not because of performance, this is because of some economic factors which are temporary in nature. Therefore, if you are holding 10% shares in B Limited, since they are overvalued, what you have to do with them? Sell the shares. Sell the shares in which company? A Limited, S Limited, B Limited. Answer. And they put that money in which company? S Limited, because they are underpriced. Because they are, start again. Tell me, S and B should have what value? Same value. But here, who is having more value? Is it worth having more value? No. That's a sudden occurrence. What you have to do immediately? Sell them. Get full money. Invest in which company? S Limited, such that your money is safe. Listening or not? This is the point. How to do this is a concept now. But before we start, you will tell me one answer. Levered value is more or unlevered value is more? Levered more, unlevered more. What is the moral of the story? If the levered value is more than unlevered, this is a concept of primary arbitrage. You will shift from which company to which company? Levered company to unlevered company you will shift. Up to here, everyone understood? Try to do the answer. Start. Keep the heading. Solution. Shall we continue? Step 1. Identification of arbitrage. Identification of arbitrage. In my notes, I have clearly given the entire analysis. Later you can see that. Now roughly I am first, if exam the question comes, you should not leave. You should be able to write. For that, what is required, I am doing that. Shall we? Tell me. In our question given, how many companies are there? 2 companies. Write down. S Limited, B Limited. Unlevered, levered. 50 lakh. Next one, 52 lakh, 50,000. Okay. Value of levered is more than value of unlevered. Value of levered is more than value of unlevered. Therefore, this is a primary arbitrage. So you go to the second step. Step 2. Write down. Arbitrage process. Arbitrage process. Before going into it, listen carefully. Whenever Modigliani Miller question is there. Always understand Modigliani Miller arbitrage process is of two types of procedures. If you don't listen, na, impossible to do the questions coming in exam. So listen please. Let me explain. What process we are doing? Hey, see there, Antelia. Arbitrage process. Arbitrage is a process of getting riskless gain. Process of getting gain can be of two types. Option 1, option 2, option 1. Higher profits with lower investment. Higher profits with a lower investment, or same profit with lower investment. Don't write. I will explain one more time. Please see here. Shall we? See here. There can be different situations also. Let me show you. Higher profit for a same investment. This also can be there. Or same profit with lower investment. Same profit with a lower investment. Let me explain the concept clearly. After that only you can do. Because already you can't even understand what they are saying. See here. Two companies are given. Both the companies are having same EBIT, same business, same assets, everything is same. Essentially both should have a same value. But both are not having same value. This is because of some imperfection in the market. This imperfection will not be permanent. This is only for a temporary period. In the temporary period, you should make a gain. Okay? Which is overvalued? Levered, unlevered. Like that you tell. Don't tell the names of companies to me. Levered, unlevered. So levered value is more than unlevered. This is a case of primary arbitrage. In primary arbitrage, we can make profit. In two different ways you can make. Read. What is option 1? Higher profit with the same investment. Second one, same profit with lower investment. Listening? Sir, how to prove this? That's what we are going to do. Okay, first write down to here. Option 1, higher profit with the same investment. This is also called as higher return for a same risk, or same return for a lower risk. Investment is a risky thing. Therefore, they call investment as a risk. Once you complete, we will go. Arbitrary process will start. Up to here understood. First tell me how to read the option 1. Higher profit for same investment. Also it can be read as higher return for a same risk. Next one. Same profit for lower investment. How to read that again? Same return for a lower risk. Same return for a... That's it. Up to here written. Tell me, which model we started? Modigliani Miller. In that, companies having same business assets and EBIT must have same value. Sometimes the value cannot be same. That particular cannot be same situation will be permanent or temporary. In the temporary period, what you should make? Gain. Risky, riskless gain. Answer. That concept of riskless gain we call as a arbitrage. If the value of levered company is more than value of unlevered company, we call that as primary arbitrage. This is a case of a primary arbitrage. Clear? Steps are very, very important. Arbitrage process step 2. Have you kept the heading? Have you written up to here? Now, write down. Option 1. Option 1. Option 1. What is the first option? Higher return for a same risk or investment, anything you can call. Okay? Use your common sense and tell me, I am a shareholder of which company? B Limited, levered company, B Limited. I will sell the shares, sir. I will buy the shares, sir. Why? They are overvalued. Obviously, what I will do? Sell. You are having 100% shares or 10% shares, sir. Loudly. See there and tell you. When I show the question, you will not read. Investor is holding how many shares, sir? 10% shares. Means what into 10%? 52 lakh 50,000 into 10% you should not make, because that is the value of equity and debt. See the value of equity. How much is the value of equity here? That 22 lakh 50,000. That is the equity value. I am holding 10% of total value or 10% of equity shares. 10% of what? Therefore, tell me, how much is the value of the equity in B Limited? What is the total value of equity in B Limited? I am holding how much? 2,25,000. What you will do with the 2,25,000 worth shares? Buy or sell? Write down. Sell the shares in B Limited. Brackets clearly write down. Tell me, what is my percentage holding into value of equity? Tell and write. Don't just copy the answers. 10% into 50,000. Tell me, how much? 25,000. Write down. Okay, va? Shall we go to the next one? A, B. Borrow. Now question will arise. Sir, borrow amount at KD. Sir, how much to borrow? Why I should borrow? Question will arise or not? Don't ask any question. Finally, I will tell the logic. Okay? First to do. Exam the question comes, you should be doing. That's the first motive. So borrow an amount. Don't write, I will tell you how much to borrow. Listen carefully. How much is the debt in B Limited? See there and tell. Very good. How much is my percentage holding? Percentage holding 10%. Into how much? So how much it will be? Okay? Now listen. Don't write. First tell me what I did. Step number 1, what I did here. A. Sell the share. Why I sold the share? Overvalued. What is overvalued? Shares. Shares of which company? B Limited. B Limited is levered or unlevered? What I did? Sell. Sell how much percent of shareholding? Because I am holding only how much percent? Therefore, sell the 10%. And additionally, what you did is, you made a borrowing. How much borrowing you did? 30 lakhs. Into 10%. Totally how much? 3 lakh. Okay. Now, see here. Don't write it. What is the total amount available? I sold 2,25,000. I borrowed 3 lakh. Totally how much is there in my hand? Write down up to here. Read it up to here. Shall I continue? Tell me. How many points are completed now? 3. Tell me what are the 3 points? Step by step you should remember. Sell the shares in levered company. Okay. Sold. After that, borrow. Why we need to borrow? All those I will tell at the end of the question. Okay. Borrow. Borrow how much? Percentage holding into debt in that company. How much percentage you are holding? 10%. Amount is how much? 30 lakh. You will borrow how much? 3 lakh. Totally how much it became? 5 lakh 25,000. What you will do with this 5 lakh 25,000? Put in dustbin, investor. Invest in which company? Obvious answer, D. Invest in Yes Limited shares. Invest in Yes Limited shares. Okay, na? Invest in Yes Limited shares. Now, you will tell, I will write. Don't write with me now. You invested in Yes Limited, correct? Now, you should think and answer. See the question and tell. You have written the question. What is the equity return given to the shareholders by Yes Limited? What is the equity return given by Yes Limited to its shareholders? Means what you need to check? KE. How much is a KE? 15? Okay. How much I invested? Hey, how much amount I invested? Yeah. 5,25,000. On that 5,25,000 amount I invested in Yes Limited, Yes Limited will give me a return or not? Tell me how much it will give. Tell me now. 5,25,000 into 15%. Tell the value. 78,000. 78,750. Up to here, understood the point clearly? Okay. Write down below. The return on investment. Return on investment. Return on investment 78,750. 78,750. Please answer to one question from my side. How much is the return you are having on your hand? See there and tell everyone. What is the return you are having on your hand? 78,750. Tell me. This entire amount belongs to investor. Correct? Wrong. Debt you have to pay the interest out of it. Because how much amount you borrowed? 3 lakh. On the 3 lakh, at what rate you borrowed? 10%. Correct or not? 10, sir, not 10%. What is the KD? KD of that other company. Debt interest 10%. Okay, now tell me. 78,750 is a return you have got by using 2 lakh 25, 3 lakh, 5 lakh 25. 5 lakh 25 whose and whose amounts are there? My amount is there, debt amount is also there. Correct or not? Totally how much is there? 5 lakh 25. On that 5 lakh 25, 78,750 came. In that 78,750, debt holder will ask some amount as an interest cost or not? Write down. F. Interest on debt. Interest on debt. Tell me, what is the interest on debt? How much? 3 lakh into 10%. Tell me. Minus or plus? Minus. Finally, write down net ROI. How much? That's it. Write down 48,750. 48,750. Completed? How much? 48,750. Now you answer me one question. Tell me. 48,750 is the answer you obtained. Correct? Now next question. Write down. Conclusion. Conclusion. Okay. Now think and answer. Okay. I am asking a question clearly. See. Before, after. Don't write, tell me. Before, I am a shareholder of which company? Before, I am a shareholder of which company? Huh? B Limited. Leave. Answer. How much investment I made? 10% of that company's value. So, okay, tell me how much? 22,000, 22 lakh 50,000 into 10%. How much it is? This is an investment made by me when? Previously. Okay. How much return I used to get? 2,25,000 into KE of that company, 20%. $2,25,000 into 20%, whatever amount you have. How much? What is this 45,000? When you used to get this return, before or after? Before. Now please tell me here, 48,750 is return on equity amount, debt amount, both amounts are. Start again. You are not here in this class. Start again. 48,750 is obtained after deducting interest or not? After paying the interest only this amount 48,750 came. And 48,750 is my return, both of the persons return. My return. How much I invested? How much I invested? How much money borrowed? Totally how much I got? I invested. Totally how much amount I got? Now I will tell you how to do. Take the calculator once. 2,25,000. What is that? Your amount plus borrowed amount how much? Add that. What is this? Total amount. What you have did with the total amount? Invested. What you have did with the total amount? Invested. How much return you got? Amount 78,000 plus 78,750. 6 lakh. On that, you have to pay the loan or not? Minus 3 lakh. Okay. On that interest also you have to pay or not? Minus 30,000. What is left with you? 2 lakh. 73,000. How much amount you started with? 2,25,000. Ended with? Minus 2,25,000. That's how you got this 48,750. They understood or not? So tell me. Here also you invested how much amount? 2,25,000. How much amount you got? 48,750. Hence we proved that we have got a higher return for a same risk taken. Understood the point clearly? At the revision session, I can't tell beyond this. Yeah, hours and hours I used to teach that. Hours, one full session, 4 hours I have to explain. But I tried to explain how to do in examination. Everyone understood the point clearly? What we proved at the end? Higher return for a same risk. Higher return. Here what is the risk? Investment risk. Putting investment in a fluctuating asset itself is called as what? Risk. So same risk you have taken, but you generated more return. That's how the arbitrage process works. Clear or not, everyone? Tell me. He understood, not understood, also irrelevant. Now, exam 1 month it is there. I want you to mug up the procedure. Tell me, what is the procedure? Step 1. First, we need to understand who is overvalued, who is undervalued. In our example, who is overvalued? Levered. Who is undervalued? Levered is more than unlevered. Which case this is? In a primary arbitrage, sell the shares of levered company, put it in the unlevered company. Now tell the steps. Batti kotted mein steps. Sell the shares in levered company. Sell the shares in. How much you need to sell? Your shareholding you sell. Your shareholding extent, also make the borrowing. Also make the, tell me, borrow amount at what rate? KD rate. KD rate. Interest means KD only, na? So KD rate you borrow. Some amount will be there. Both the amounts you put it in the unlevered company. You will get a return. Correct? That return will be definitely more. Understood everyone? Clarity, yeah? Okay. Same thing we can do alternatively also. Option 2 is also there or not? What is option 1? What is option 1? Higher return for a same risk. What is option 2? Same return for a lower risk. Right on. Option 2. What doubt you will get now? In exam, what to write? Which option we have to write in exam? Doubt will come or not? Listen, that also I will tell. Exam la question came for 8 marks. Both options you have to do. What both options? Higher return for a same risk, same return for a lower risk. Both you have to do. Question came for 4 or 5 marks. Okay? Or 6. Then you have to do option 2 only. I think you are listening to what I said. Tell me what I said. Question came for 8 marks. 2 options you have to do. Next, question came for 5, 6 marks like that. Option 2 you have to do, not option 1. Why? Institute is following the same pattern. Clear? Now, everything is essentially same. Small difference. Start doing along with me. A. Procedure 80% same. Tell me the answer. Sell the. Continue. Same. Sell the shares in B Limited. What is my percentage of holding? 10% into 22 lakh, 50,000. How much it is? 2 lakh, 25,000. Next. Borrow. Practice in the class itself. What to do? Borrow how much amount? Borrow percentage of holding into debt. Percentage of holding into debt. How much is a percentage holding? 10%. Debt is how much? 30 lakh. How much? 3 lakh. Total. How much amount is there in me with me in hand? 5 lakh? 25,000. What we need to do? Invest. Invest. How much amount? Wrong. 5 lakh only invest. Listen, how to understand this? Sir, how much to invest? I am saying now option 2, same return for a lower risk. Lower risk means same investment or lower investment. If you invest 5 lakh 25 again, it becomes same investment. Correct or not? Listening? If you invest 5 lakh 25 again, it will become same investment. I should invest lower amount. How to understand this? Listen carefully. Point is, invest. How much amount I have to invest? Your percentage of holding. See here, your percentage of holding. Loudly, your percentage of holding. Okay? How much percent you are holding? How much percent you are holding? 10% you are holding. 10% of the value of this company. Understood the point or not? 10% of value of this company means which company? Unlevered company. Clear? Now you please tell me, 10% into 50 lakh will become 5 lakh 25,000 or 5 lakhs. See here once. Understood the valuation or not? Read the formula. Percentage holding in previous company 10% into the shareholder value in unlevered company 50 lakhs. It comes to 5 lakh. Everyone understood clearly? Write down. Invest. Percentage holding into value of unlevered company. These formulas you need to remember. Working show it clearly. 10% into 50 lakhs. How much I invested? 5 lakh. Please tell me, how much is my amount on hand? Start from the beginning. I sold. How much I got? 2 lakh. How much I borrowed? 3 lakh ki 3 lakh I invested. In my 2 lakh 25, 2 lakh only I invested. That's the meaning. Sir, if you borrow 3 lakh, you will definitely use that 3 lakh. Discretion is only with your own money, not with others' money. Correct or not? Okay, tell me, how much you borrowed? That amount fully invested. And in this 5 lakh, fully 3 lakh is there. But in this 5 lakh, full 2 lakh 25,000 is not there. Only how much is there? 2 lakh is only invested. Listening? Now tell me, how much to invest? Percentage of holding into value of the unlevered company. Okay? How much you invested? Write down. Same concept here. Return on investment. You will tell now. 5 lakhs into what is the KE of that other company? KE 15%. Tell the value 75,000. What you need to do? Interest on debt. Tell me, how much you borrowed? On that, how much is the interest you need to pay? 10%. How much it will come to? Right now, minus 30,000. Net amount 45,000. Clear? Now you tell me. Write down conclusion. Before, after. Before, after. Tell me. Previously, how much is my investment? How much is my return? Previously, how much you invested? 2,25,000. On that, you used to get how much return? 20%. 2,25,000 into 20%. 2,25,000 into 20%. How much? 45,000. Okay, very good. Next. Now also you invested how much? Now you invested 2,25,000. Now only 2 lakh. How much return you got? That's it. You got the same return for a lower risk taken. Understood how to do the answer? Steps you need to remember. Okay? Okay. This is the procedure. But if student can understand the logic of why we are borrowing, then chance of committing mistakes will be almost becoming negligible in exam. Okay? See here. What is our agenda here? What is our motive? 2 options are given. 2 objectives are given. What is the first objective? What is our first objective? Higher return for a same risk. Second one, same return for a lower risk. Same return for a... Okay, first answer. What is the first option? Not answering. What is the first option? Higher return for a same risk. Higher return for a... See the question first. I am a shareholder of which company? Originally, I am a shareholder of which company? B Limited. Levered, unlevered? Means what is also there? Equity, along with equity, what is also there? Means that company is having a finance risk, no finance risk. What do you mean finance risk? Fixed payments are risky to the company. If debt is there, company has to pay a fixed commitment to them or not? Tell me. B Limited has a finance risk. S Limited has finance risk. Okay. Now you are shifting from which company to which company? Levered to unlevered. B to yes. B to ante you are shifting from a debt company to a no debt company. Finance risk company to no finance risk company. Correct or not? Then how can you tell that you are taking same risk? To compensate the same risk, you are making borrowing and making yourself into same risk as a finance risk. Did you understand what he wanted to tell? Start again. You are a shareholder of which company? That B Limited company is having a finance risk or no finance risk? Answer. You are shifting to which company? S Limited. S Limited is which company? Debt or no debt? Finance risk or no finance risk?
Then how can you tell that you are taking same risk? You are taking lower risk. What I said, you should get a higher return for a same risk. Same risk when it will be created, even in S limited if borrowing is there, then it is the same risk. Since S limited cannot borrow, I borrowed myself. Understood the point or not? Now I am anyway subjected to finance risk. That's why for that comparison sake, you made a personal borrowing. Understood the point clearly or not, everyone? Answer. And the greatest advantage of doing like this, do you know what is it? Tell me. See the question and tell. No problem. See there and tell. Shall we continue? I borrowed at what rate? I borrowed at what rate? Invested at 15%. I am getting a 5% advantage. Correct or not? How much I borrowed? How much I borrowed? How much I borrowed into 10% under? How much I borrowed amount? 3 lakh. Correct? 3 lakh I borrowed. I have borrowed 3 lakh at 10%, invested at 15%. How much advantage? 3 lakh into 5%. How much? 15? That's the advantage that I am getting out of borrowing at a higher rate, lower rate, investing at a higher rate. I am getting that particular amount of gain out of it or not? That's the point. So please answer to my question now. Why we are borrowing? Why we are borrowing? In order to maintain same risk and to show that even if I take same risk, I am getting a higher return. Understood? Second one, obviously reverse answer. Though I am borrowing and everything and doing 5 lakh 25, I am investing only how much? 5 lakh. For a lower risk taken, I am getting the same return. These are the steps. Everyone understood the logic clearly. Beyond this, I cannot spend it this moment because see there. This is original class notes. Like this, we have to do in exam. Anyway, notes I will give now, you can see there and you can understand clearly later. But understood the point clearly? See there. Read. What is the first question? That also I have given. Next. And not more. Huh? Why should you borrow only 3 lakh? If you borrow higher risk you will take. Lower risk you should take. What is our motive? Same risk. Understood the point or not? See, this is the second bit. So technically answer is again 45,000. So in both the cases, when 2 lakh 25 invested 45 and 2 lakh invested also 45 you are getting. Now you have achieved an arbitrage or not? Answer. This is the answer for the question. This is primary arbitrage, secondary arbitrage question. Now we will do for secondary arbitrage also. Okay. Note down this question. Have you done this before? Have you done this before? Can you do now then? Do it. Do this answer. Additional information, nothing you need to write. Just write down. Shareholder is holding how much percent? 10%. That's it, over.
Try to do this answer. Done. Shall I do? I give 5 minutes time. This is completely different aspect because this is not levered, unlevered. Levered is not high here. Which is higher? Unlevered is higher. Reverse case it will happen. Okay. So procedure not same. Procedure also will change now. Okay. What is same in both the cases is objectives are same. What are the two objectives? Higher return for a same risk. Next, same return for a lower risk. Objectives are same, but solutions are not same. Objectives are same, but procedure is not same. Listening?
Common sense, let us understand one point. Okay, see the screen. How many companies are there? Two companies are there. One is J, another one is Y. J is which company? Y is which company? Which is higher, which is lower? Reverse case la unlevered is more than levered. Correct or not? Unlevered company means only debt and equity. Only equity, debt and equity. Y Limited being unlevered company, equity and so you are traveling from which company to which company? Only equity company to so you are traveling from only equity company to equity and debt company. Understood? So tell me, you are traveling from only equity to equity and debt company. Okay? Means try to understand. Same risk again problem will come. Previously you are in such a company where there is no finance risk. There is no finance risk. Now you are going into which company? A company where there is a finance risk. So you are traveling from no finance risk to finance risk. Start again. Previous case what happened? You are traveling from finance risk to no finance risk. So we created finance risk. By making a borrowing. Correct or not? Here you are traveling from no finance risk to finance risk. Now I need to create a no finance risk again. Therefore you have to invest now. What you need to do? Invest. You should not borrow. You should deposit. Clear or not, everyone? How to do the deposit I will tell you before that. Again start. Previously what is the situation? Which is higher, which is lower? Levered is more than unlevered. Means what? We are traveling from which company to which company? Levered to unlevered. Finance risk to no finance risk. In the first case, I am having a finance risk. So in the second case also we will create finance risk in comparison by making a borrowing. Now listen. Second case. In this question, we are sitting in which company? No finance risk. Going into which company? Finance risk. Clear? But you should not have finance risk now. For a fair comparison, you should compare no finance risk situation with no finance risk situation only again. But there is a finance risk in that company. Listening? Tell me. Finance risk to whom? Finance risk to whom? Shareholders or debenture holders? Answer. Always payment of interest is a risk to whom? Owner's risk. It is a return to whom? Therefore become debenture holder in that company by making investment. Understood the point or not? So now tell me, in that other company Y Limited, we are selling the shares or buying the shares? Where you are selling? J Limited. Taking the money, investing in Y Limited means you are investing in Y Limited means you are having what risk and what risk? Business risk anyway will be there. Second one, finance risk also will be there. Clear? BR plus FR. What is BR? Business risk anyway will be there. Plus finance risk also will be there. Minus finance risk if you do, FR plus FR minus will cancel each other. It will be like a unlevered company one more time. Therefore, in the other company, you will invest, take finance risk, invest in debentures, you will negate the finance risk. Literally, it will be like only business risk is there. Understood the point or not? That's the motive of that second model. Beyond this, I can't explain a revision session. Understood the concept clearly? Let's do it. Start. The heading. Option 1. Directly I am writing the answer. Okay. Later in my book you can see the answer. Option 1. What is option 1? Higher return for a same risk. presentation, everything in the hand notes you can see. Now, from the exam point of view, how to get the solution, let us see now in the time available. Shall we? See there. First one, higher return for a same risk. Let us start. A. Okay? A. Sell the shares of J Limited. How much is the total holding? Into 6 lakh. Okay. Previous case we created finance risk. In this case, we need to close the finance risk. Therefore, I need to borrow an investor. Right now. Invest. Invest. In which company? Invest in Y Limited. In both debt and equity. Listen now. How much to invest, I will tell you. Please listen. See the question. What is the debt equity ratio of Y Limited? Debt equity ratio. See there, clearly given, na? 10%. How much percent? 10%. So 10% means every 100 rupees, 10 rupees is the debt. 90 rupees is the equity. Clear everyone? So, see here. Debt by equity means if equity is, say for example, if equity is 10 rupees, if equity is 10% of 10 will be 1. 1 rupee will be debt. 1 rupee will be, and in every 11 rupees, tell me, 1 rupee is debt capital, 10 rupees is equity capital. Like that we need to understand. Hello, listening? This is the debt to total capital ratio, na? Debt to equity ratio. Na? Debt to equity ratio. Okay. This is a debt to total capital ratio, na? Debt to equity ratio. Na? This is a debt to equity ratio. Equity, if it is 100, debt will be 10. Equity 20, debt will be 2. Equity is 10 rupees, debt will be 1. Understood? See here. Invest in Y Limited in both debt and equity in its debt equity ratio. In its debt equity ratio. Make 2 branches. 1:10. 10 rupees equity. In that 10% being 1 rupee is the debt. Debt equity. Write down. How much is a debt? What is the total debt? I have invested 6 lakh, na? 6 lakh into 1 by 11. 54,000. 5. Next, equity. 6 lakhs into 10 by 11. 5 lakh 45. 450. 455. 1 rupee, okay. You can adjust here and there. So 5 lakh 45,455. Understood everyone? Now, directly you do the working. We want the final answer. Tell me. 54,545. Where I invested? Not the answer. Where I invested? Equity or debt? Debt will give me KE or KD. See the KD of Y Limited. How much percent? 10%. Into, directly write down here itself, into 10%. 5455. 5455. Next, this into, what is the KE of that other company? 14%. Tell me. 363. What is the total return? 80? 800? 18.
Did you understand all the steps clearly? Now, 81,818. Now tell me, before, after. Tell me, before how much we invested, how much is my return? Before I am a shareholder of which company? Unlevered. How much is my percentage holding there? 10%. What is my total value before? 6. How much investment? 6 lakh. What is my return? 6 lakh into 12.5%. 75,000. Okay. Now also I invested how much? Same 6 lakh, now also I invested. But how much return I got? 81,818. I am getting a higher return for a same risk taken. Understood up to here? Next. So this is a scenario of having a higher return for a same level of risk taken. Shall we continue further? This is a case of higher return for a same risk. What is the option 2 we need to do? Same return for lower risk. Start. Same return for lower risk. Write down. Step 1 same. Sell the shares in which company? J Limited. Sell the shares in J Limited. Tell me, how much I need to sell? 60 lakhs into 10%. Value 6 lakh. Okay, 6 lakh. Now listen carefully. This I will explain. See, B. Invest in Y Limited, both what and what? Debt and equity. Okay. Now listen, how much to invest is a question. Listen. What is your previously debt equity ratio of full amount we invested? But now we are doing same risk, lower risk. Means investment should be same investment or lower investment. Therefore, listen carefully to my point. Point number 1. Previously, you are a shareholder in which company? Previously, you are a shareholder in which company? J Limited. In the J Limited, totally what is the equity capital? See there and tell. How much lakh? Now you are investing in which company? Answer. Y Limited. You should invest in Y Limited. Your percentage holding, listen to my words, sir. Your percentage holding in the old company into the values of debt and equity. See there and tell. How much is the value of equity in Y Limited? Answer. 5 lakh into 10%. 5 lakh. 50 lakh kadaya. Value of equity in Y Limited, how much? 50 lakh. How much you are holding? 10%. Start again. What is your percentage of holding in the old company? That old percentage you take into, what is the equity value of Y Limited? 50 lakh into 10%. 5 lakh. Keep it aside. Second one. How much is the debt value of Y Limited? What is the debt value of Y Limited? In the 10%, how much it will be? 5 lakh 50 totally you have to invest. Understood the point or not? Write down. 2 branches, debt, equity. Percentage holding into value of debt. Percentage holding into value of equity. Percentage holding into value of debt. 10% into, what is the debt value? 5 lakhs. Percentage holding into, what is the equity value? 50 lakhs. 50,000. 5 lakhs. 5 lakh. 50,000. But you should tell, this 5 lakh will give me how much return? This 50,000, sorry. This 50,000 will give me how much return? See the rental. What is the debt rate?
10%. So how much I will get? 5,000 plus this 5 lakh will give me how much return? 14%. How much? How much? Totally how much I am getting? I am getting a same return for a lower investment of 5,50,000. Now you understood? Okay. This is what Modigliani-Miller method wanted to tell. So every question will have how many options, sir? Now tell me, examination the question came. How questions will come? Like this questions will come. See there. Practical problems, sir, they did not give anything. Illustrations, sir, they have given. I am showing you illustrations. There are two companies, N Limited, M Limited, having same earnings before tax, interest and tax, 20,000. M is a levered company having a debt of 1 lakh, 7% rate. Cost of equity of N Limited 10% and M Limited is 11.5. Compute the arbitrage process, how it will be carried on. See the question. Try doing this. Read the question first. This question comes under which category? Primary or secondary arbitrage? See there and tell. See there and tell. That comes under which arbitrage category? Primary or secondary? Why primary arbitrage? Value of the levered company is more than value of unlevered. But listen carefully, you can't tell like that. Because heading they have given. Exam heading they don't give. First you need to value both the companies. Using our old 4 formulas we have seen. The other day when we calculated, tell me what is the formula? V equal to B plus S. B equal to I by KD. S equal to EBIT minus I by KE. V equal to EBIT by KO. First using that you have to calculate values of N Limited and M Limited. Then you have to confirm whether this is primary or secondary. Will you do? Start doing. Keep the heading. Valuation of step 1. Step 1. I will tell the steps fastly, you do and tell the answer. Step 1. Valuation of N Limited and M Limited. Valuation of N Limited and M Limited. Valuation of N Limited and M Limited. Particulars N, M. 3 columns it should come. Particulars N Limited, M Limited. Done? Now tell me and write. First write down EBIT. 20,000, 20,000. 20,000, 20K, 20, I'll write 20,000. Okay, minus interest. Which company is having debt? M is having debt. So dash for N. M Limited, write down the amount. How much is the interest cost? 7,000. Okay, EBIT minus I. 20,000, 13,000. Below, same standard. B, S, V. B, S, V. Okay, va? KE, KD, KO. 6. KD, KE, KO or KE, KD, KO. Any order. First, B means what? B represents what? Value of what? Debt. Write down the value of debt. Dash
1 lakh. Yes. Yes, you know the formula. Yes, now हम చూస్తారండి. EBIT minus I divided by KE. First write down KE amounts. KE given in the question or not? 10 and 11.5. 10%, 11.5%. First company, what is the value? 2 lakh. EBIT minus I divided by KE. How much you got? EBIT minus I divided by KE. Why you got different answer? Yeah? దీని మీద వేసావయ్యా 20,000 మీద వేసావా సరిపోయి డూ ఇట్ డిడ్ యు డూ హ్యావ్ యు గాట్ ద వాల్యూస్ చేయండి ఒకసారి ఆన్సర్ చెప్పండి ఎవ్రీవన్ ఫస్ట్ EBIT N limited 20,000 interest dash value 20,000 EBIT minus I. M limited 20,000 7,000 is the interest cost 13,000 is the EBIT minus I. Okay, next BSV borrowing dash 1 lakh. Yes, EBIT minus I 20,000 divided by 10% 2 lakh. Here 13,000 divided by 11.5% 1 lakh 13,043. Okay, you got 2,13,043 as the total value of which company? Leeward. That's it. Now you got the values. Can we do it now? Now below write down. Which value is more than which value? Leeward more than unlevered, unlevered more than leeward. Write down. Since value of leeward is more than value of unlevered, since value of levered is more than value of unlevered, this is a case of primary arbitrage. Okay, write down. How many objectives we are having? 2 objectives we are having. What is objective 1? Higher return for a lower risk. Same risk. Same return for a lower risk. Write down objective 1. Objective 1. Higher return for a same risk. Write down A. Fast. 2 minutes we should complete. Sell the shares. Which company is overvalued there in the question? Levered or unlevered? Levered. Sell the shares in M limited. Sell the shares in M limited. Now I will ask one question. Tell me. Previous questions, whenever I have written on the screen, self-prepared questions are there. Percentage of holding I gave in the question. Therefore, immediately you apply 10% on that and you calculate. Here percentage given or not given? If nothing is given in the exam, assume 10%. Listening? Write down. Assume shareholder is holding 10%. Assume shareholder is holding 10%. Sell the shares in M limited. How much is the total shareholding of M limited? Share value. Yes, yes value. 1,13,043 into 10%. 11,304. Okay, next B. 1 second. Primary arbitrage law we need to borrow, we need to deposit. Borrow. Write down. Borrow. Bracket la write down. Percentage holding. Percentage H into debt. Tell me. What is the debt value? 1 lakh. My percentage holding is 10%. Debt value in that company 1 lakh. 1 lakh into 10%. How much you need to borrow? 10,000. Total amount 21,304. 21,304. Okay, ma? Now you tell me, with the 21,304, what you will do? Write down. Invest 21,304 in N Limited. Invest 21,304 in N Limited. Okay? Done? 21,304 in N Limited. Okay? Right now, lastly, return on investment. So 21,304 you are investing in levered company or unlevered company? Unlevered company. Unlevered company, what is the KE there? Into 10%. 21,304 into 10%. How much? 2130. 2130. Minus interest cost. Why minus interest cost? Borrowed amount you need to reduce. Interest. Sir, I borrowed how much amount? 10,000. At what rate? 7%. 700. How much? 1430. Everyone, have you got that answer? Understood up to here? 1430. Before after conclusion. Before after conclusion. Before after conclusion. Before I used to have how much capital? Before I used to have how much investment? Before I used to have how much investment? How you got that 11,304? Levered company or levered company? Levered company. Levered company 10% I am holding. 11,304 I used to get how much return? 11,304 into 11.5%. How much? 1,300. Now for the same investment I got 1,430. Higher return for a lower risk. Understood everyone? Will you do the objective 2? Start doing. Keep the heading objective 2. Objective 2. If anyone have any doubt, please ask. After the class, you can't do anything. Over. If you have any doubt, small, big, anything, you can ask. But don't sit in the class without clarity. Objective 2 also you do fast. 2 minutes time. You're done with the answer? So tell me, this is a primary arbitrage or a secondary arbitrage question? Answer. See here once. I think everyone got the same answers. Okay. Have you got the same answer? 1300. Clear everyone? That's it. So whenever in exam question comes, so question comes in examination, they will always do from the second option point of view. I told or not? Now, last question for this chapter for you. Try this illustration number 7. This is a question on, one second. Following data is available with regard to 2 companies. Investor, okay. This is also same. Don't do this. Do this. Illustration 8. This is a question on secondary arbitrage. Tell me the step. Tell me all the steps in secondary arbitrage. First, sell the shares. After that, what you need to do? Objective 1Q, you tell the answer. What you need to do? Invest. Invest in which company? Levered company. Invest in levered. When you invest in levered company, what and what will come? Debt and equity. First option, what you need to do? In the debt equity ratio of that company, you need to invest. Second option, what you need to do? Your percentage holding into their debt, their equity. You remember the steps or not? Do you? 2 minutes for the first step, 2 minutes for the second model. Don't waste time in presentation. That you can do later. I want answers from you. See here. I'll show the answers. Check your answers now. Which question that is illustration? Huh? Illustration number? See here. First of all, up to here, everyone got the answers? Huh? So you should get the answers as 2 lakh and 172, 222. Have you got the answer? Debt equity ratio and enti 72,222 divided by 172, 222 will be debt ratio. Okay. Next. Like this you need to do. 20,000. Sell the shares. Invest the 20,000 in the debt equity ratio. 8387, 11,630. Have you got the answer? Everyone. Next, return on investment. This is the return on investment you can get. Okay. This notes anyway, it is there in my Telegram group. I will share it with you. You can check the answers later, not now. So everyone got the answer? This is objective 1 or 2? 1. Like this we can do objective 2 also. Okay. Same return for a lower risk taken. Same return for a lower risk taken. This is the answer. Everyone got the pakka answer for this? Okay, done. Now we have completed a very big chapter in your syllabus called as a capital structure theories. First of all, everyone tell me, did you really get the clarity on whatever you didn't know before? Capital structure chapter. So this is the end of another chapter called as capital structure theories. Listen. Now we have completed another chapter called as capital structures.